positive as well for the series. And of course, there has been a lot of surge in these Tata Group companies, be it Tata Tech, Tata Elxsi, Tata Investment. Whether that continues as well, as has been the case over the last few trading sessions, we'll keep an eye out for that in today's session as well. And of course, will this spate of block deals continue as well? We saw a lot more yesterday as well, be it in Rolex rings, in Tata Technologies, in Aavas Financiers. So will that continue into today's trading session as well? The handover from Wall Street, as we just mentioned, has been absolutely flat, and the GIFT Nifty is also indicating a very quiet start for our own markets. But moving on to the stocks that you need to keep an eye out for in today's session, Abhishek joins in with that list. Abhishek, good morning.
Good morning, Homas. To begin with, ICICI Prudential, they have received a GST demand notice with respect to interest and penalty also, which worth about 429 crore for the assessment year of fiscal FY 2020. So Jio Financial Services, they have increased their holding in Jio Payments Bank from 78.95% to 82.17%. So they have bought about 6.8 crore shares worth investing about 68 crore into the Payments Bank. NBCC, they will consider the proposal for issue of bonus shares on 31st of August. Asian Energy Services has approved fundraising of 160 crore via convertible warrants. LTI Mindtree, now Karnataka High Court has stayed the GST demand order worth about 378 crores. Just to alert our viewers, LTI Mindtree had written a writ petition against GST demand order in Karnataka High Court on 20th of August. Aditya Birla Capital, they will invest about 300 crore via rights issue in Aditya Birla Housing Finance. Just to alert our viewers, as on Q1 FY 25, the CRAR of the company was close to about 16.5%. Gensol Engineering, they have launched subsidiary Scorpius trackers in the US, which is targeting about 2000 megawatt of annual supply by 2028. Now, PNC Infratech declared the lowest bidders for a project worth about 380 crore from NHAI. Now, Office Space Solutions, they have signed largest managed aggregation deal of about 3 lakh square feet with Nyati Group. Back to you.
Abhishek, thanks a lot for that. We'll keep an eye out on all of these names. And finally, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. We almost made a record high yesterday, but that was not to be. What's the setup looking like on the F&O side?
Morning, Omar. So we are seeing consolidation near record levels. So for 2 days in a row, we saw Nifty trying to hit fresh high, but seeing minor profit booking from that level, and at the end closing near flat line. And for today also, GIFT Nifty is indicating a start near flat line. Talking about the institutional activities, FIs bought shares of more than rupees 1500 crore, while DIs have sold shares after buying for 16 sessions, and yesterday they have sold shares of more than rupees 600 crore. On the future side, total buy figure was more than rupees 2000 crore. Even for Nifty, FIs bought shares of nearly rupees 500 crore, and for Nifty Bank, they have bought shares of almost 1600 crore and have added long contracts of more than 86,000, and with this long percentage exposure has increased to 57%. That is highest in last 3 weeks. On the options front, for the call side, we are seeing major activities now above 25,000 level. So for 25,100 call, we saw addition of nearly 16 lakh shares with premium at 44, and for 25,200 call, we saw addition of more than 6 lakh shares with premium at 18. And on the put front, 25,050 strike saw addition of more than 3 lakh shares with premium at 96, and for 25,000 put, we saw addition of nearly 3 lakh shares with premium at 71. So talking about the important levels for Nifty, now support is seen somewhere around 24,970, which is also 20-day moving average, and resistance is now seen somewhere around close to 25,200. Lastly, stocks in focus, there are 4 stocks in the band. Those are Balrampur Chini, Birla Soft, Hind Copper and India Cements, and apart from these, keep an eye on 2 stocks, REC and PFC, which have been buzzing off late.
Sudarshan, thanks a lot for that update. Time for a short break here on Power Breakfast. Up next, Union Minister Nitin Gadkari chairs a meeting with the auto industry and forms a new vehicle scrappage policy. More details on this on the other side. Stay tuned. We'll be right back.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
जब वो किसानों के हितकारी बिल जो वापस लिए गए।
Welcome back. Shifting focus to the primary markets now as we get developments in the much-awaited IPO of the National Stock Exchange. Sources have told CNBC TV18 that the exchange has sought a no objection certificate from SEBI. The NSE board met yesterday and approved the decision to file for an application seeking the NOC. Now, this NOC is given to take SEBI's go-ahead from the department that is concerned with market infrastructure institutions, or MIIs. Now, it also needs to get SEBI's clearance for NSE to file an IPO DRHP as well. Well, Finance Minister Nirmala Sitharaman defended the unified pension scheme, saying it's fundamentally different from the old one. Now, she also said that there would be no U-turn by the government on the UPS. The Finance Minister also said that the rate rationalization would be discussed at the upcoming GST meet on the 9th of September. Sapna Das filed this report last night.
Well, as the Finance Minister is indicating from the upcoming GST Council meeting to be held on 9 September, it's likely that a discussion on rate rationalization is likely to get kick-started. Of course, a decision is unlikely because a lot of reports are still awaited in terms of what is the position so far, in terms of what the officers panel, the kind of feedback that they have received. Also later on there'll be some GOM meetings in terms of this issue, but it's likely to start coming up for discussion from the 9 September meeting, and probably over the next 2 to 3 odd council meetings, maybe they'll be in a position to come to some kind of a decision. But this is an important indication coming from the Union FM that September 9 is, when the next council meeting happens, rate rationalization is going to be a discussion point on the agenda. That's one. Second, she's also amply clarified that there is no U-turn or rollback that the government is doing by introducing minimum pension or rather assured pension under the UPS. It's a fundamentally different scheme from the OPS, and it's fully funded, and it's totally up to the states to implement it. They are independent decision makers. If they find merit in it, they will go ahead with it.
Sapna, thanks a lot for that update. Now, Union Road Transport Minister Nitin Gadkari chaired a session at the automobile industry body SIAM in Delhi yesterday. Now, in a statement on social media, Gadkari said that several commercial and passenger vehicle makers agreed to offer discounts against scrapping of older vehicles with a valid certificate of deposit. Parikshit Luthra now joins us to take us through the details. Parikshit.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Parikshit, thanks a lot for that. Now, Big Basket is not late to the quick commerce party. That's the word from the company's founder, Hari Menon, as the online supermarket goes full tilt on its quick delivery service. Speaking to CNBC TV18, Menon said that Big Basket is targeting to expand to 700 dark stores from the 400 that it has currently. The company also aims to deepen their product pipeline for 30-minute deliveries from 10,000 to 30,000 stock keeping units.
If you see Big Basket today, we actually have 2 offerings that we have on the app. You have something called Super Saver, which is our slotted delivery option, and then you have BB Now, which is our quick service, quick commerce option. So what we're essentially doing is basically bringing both these together into one interface, and that one interface will essentially carry the entire range of 30,000 products, which was available on both these platforms and both these offerings on one interface. We were seeing over a period of time that customers are getting more and more comfortable with quicker deliveries. And hence, that was one of the reasons that we started moving a lot towards delivering fast. If you recollect, even our slotted delivery, which was typically in the past used to be same day, next day delivery, we had moved it to a 2-hour solution, and that customers really were happy about and lapped it up. So essentially, we were seeing, a very strong movement of customer preference to quick deliveries.
Quick deliveries, the need of the hour. Time for a short break here on Power Breakfast. Up next, we get your cues from the commodities market. Stay tuned. Back on the other side.
यहाँ पे जो फार्मर्स प्रोटेस्ट हुए, वहाँ पे लाशें लटकी थी, वहाँ पे रेप हो रहे थे। किसानों के हितकारी बिल जो वापस लिए गए थे, तो पूरा देश जो है वो चौंक गया था, और वो किसान आज भी वहाँ बैठे। वो बड़ी लंबी प्लानिंग थी, जैसे बांग्लादेश में हुई।
Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, gold to begin with, Hormuz, because that's still holding above $2,500 an ounce, not too far away from its all-time highs. The weak US dollar rate cut expectations have been constantly supporting gold And every pullback or a correction that we have seen has been quite shallow, telling you that the strong hands have continued to hold gold quite firmly. And there are various reports now coming in suggesting that the gold prices can go much higher. You have almost gold telling us that 2650 announced by year end is what you could see. Citi is talking about 3,000 in the next year. Saxo Bank is talking about $2,700 an ounce of gold by the end of this year as well. While the gold prices have continued to trade firm, it is the crude oil prices which finally are looking at some profit taking. We have seen more than 2% of decline in the overnight markets for crude. Prices did gain 7% in last 3 trading sessions. So this is some profit taking coming in as the markets await further development and various events and issues going around in the world. With Libya announcing total closure to its oil fields, it's supportive. But the street is also looking at the demand scenario, which from China now seems to be factored in. Our latest Goldman Sachs report says that they're looking at Brent trading range now revised $5 down to between 70 to 85 for the rest of this year.
Well, all that glitters is gold, I guess, at least for the time being. Manisha, thanks a lot for that update. Well, more news from the world of cricket now. BCCI Secretary Jai Shah was elected unopposed as the next chairman of the International Cricket Council, or the ICC. Shah will take over from current chairman Greg Barclay from the 1st of December. And at 35 years of age, he will be the youngest ever chairman of the ICC. Shah will hold the position for 3 years with an option to extend it for another 3. That's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week, and it's a quiet kind of screen out there in the US in terms of the global picture. It was the same way when we started yesterday. It's the same kind of picture this morning as well. But here there is a bid at lower levels, but there is also some selling which comes in at close to the prior highs. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, hi, good morning.
Hi, good morning. Nigel, must say, well done. You're brightening up our day and our screens as well. So, Wednesday, this is exactly the kind of push we need to get through the second half.
In the pink of health, and I have no role to play in this. So, kudos to our designing team. So, happy to be there.
Maybe this is what we need to get over it. 2 days missing those highs.
Tell me
the
tomorrow,
kind of spunk that we need.
Tomorrow, what's the color? that's the theme.
Anyway, well, it's looking nice. Let's just quickly run you through what you need to know as far as the trading day is concerned. You basically have the market in the US, which had very, very quiet session. I'm talking about the overnight sort of day. And the same time yesterday, I was saying that it was the quietest day in terms of volumes for the US market. YTD, guess what? Last night was quieter. It was both on the cash side and option side as well. It was very, very quiet. The trade setup will start to come up on your screens. The Nifty here in India has been absolutely flat, but it's been up for 9 consecutive sessions. Slow, steady, 20, 30, 10 points, 40 points. It's been that kind of a crawl up for the last 9 sessions now. So, it's quietened down and it's not such a bad thing. US equities, very low volumes once again, as I said, both on the cash and option side. S&P about 0.16% higher. The NASDAQ about 0.17% in the green. You had the 10-year yield, which was up about 2 basis points at about 3.82, again, 2, 3. Very small changes. But the big change, of course, has been coming through in the dollar index. And the dollar index is down to 100.55. It's broken, multi-year supports at the 100.7 kind of levels. What can I say? It's a function of a variety of things. The euro has got the largest weight in terms of when you look at the dollar basket currencies which comprise or make up the dollar basket. The euro has been rising. And of course, it's putting a bit of a bid for the JPY as well. So you look at the USD JPY is back flirting against the psychological support of the 144. We got to 142 recently. We're back at, and we'd rallied from 162 to 142. We sold off to about 146, 147. We're back at 144 now. NVIDIA earnings later tonight. I think that's the big one which global markets will be watching. It could be a material event, one way or the other. The thing is, NVIDIA is really at the heart of the AI theme, which has been powering the US markets higher. And can it really meet lofty expectations? That's the big talking point. And I think we will hear from Jensen Huang, the founder of NVIDIA, the CEO, a little. Of course, post the earnings as well. There's a conference call, etc., which usually happens. But that could set the agenda for global markets as we come back tomorrow. If, of course, it's a miss or it's a beat. Now, oil prices, again, it's a bit of a flip-flop. We had a 3% surge day before yesterday, and we gave up 2% of that last night. And so we are back at about $80 a barrel. Not very much to read there. So just to circle back and talk about the levels, and I said this yesterday as well, ignore the US screen. And I said this when the US was down because it's kind of very, very lackluster. Volumes are very, very low. So you got to do the same thing today as well. So you're in a way trading off of the own steam. Now, above the all-time high, we, by the way, got to about 25,073. So practically there. But essentially, once you take out the 25,078 level, the next target is the Fibonacci retracement, which is 25,500, 530 to be precise. Supports come in at the hourly average, which has moved a little bit, 25,858, and the 20-day, which has moved very little, which is about 24,562 as of yesterday's close. Nifty Bank is rising gradually. It's lacking momentum, but it is rising gradually. By the way, yesterday closed above the falling trend line, and that is a good thing. 51,150 around was that level. and the Nifty Bank can target the daily upper Bollinger Band, which is 51,855, and supports for the Nifty Bank come in at the swing low, which is 50,856. So, I mean, that's essentially the picture. Levels have changed a little bit, but the setup has not really moved that much. We remain kind of ranged. And I think later today, the NVIDIA numbers, tomorrow the Reliance AGM. But I think NVIDIA, of course, is the bigger market-moving global event, which will be important. I mean, it's as flat as they come. Half a point change lower on the GIFT Nifty. Surabhi.
Well, Prashant, yeah, absolutely. Actually, looking at the Asian performance, maybe this flat sort of indication on the GIFT Nifty is not too bad, because some of the Asian markets, they're down quite a bit. Hong Kong, for instance, is down about 0.7%. So there's, in general, consolidation, but with a negative bias across Asia, as markets wait for that major NVIDIA print. Remember, it comes in after US market hours today. So the reaction won't show up, during trade. It's going to be post hours when we get it. And it's NVIDIA, obviously, that we'll discuss at length, tomorrow. And then the next Friday is the big one, because that's the September jobs report. The 6th of September is when the non-farm payrolls data comes out. And remember, it's been all about the Fed being data-driven. So the extent of the cuts and what happens, we'll get to know more. But, talking about sort of some of the other asset classes, there's been a lot of volatility in cryptos, by the way. A lot of selling last night, 6% down on Bitcoin, about 8% down on Ether. So, commentators are saying that maybe it's just some healthy unwinding of leverage positions. But, it was interesting to note the volatility there as well. Oil, of course, is now coming back towards, just below the 80 range. So let's see if it can actually hold there. The market's hope is on oil that this Libya output shut, this is going to be very short-lived. It's just, a lot of political rhetoric that will settle. On that hope, we are seeing a bit of a climb down from the price of almost 81. Back home, the critical question is whether we can get third time lucky here for the Nifty, because in the past two sessions, the index has been getting very close to the all-time high level, and then we get into a wave of selling. That happened yesterday when we were just 6 points shy of the mark, and then the selling came in. What will be critical to note is whether the financials can continue their up move and their march ahead, because yesterday it wasn't really about the banks, it was the non-banks, and big stocks like Shriram Finance, the Bajaj Twins, etc., all of them were up and about. So let's see if that can continue or not. Fund flows, FIIs are buyers. They've bought equity worth about 1,500 crores in the market yesterday. Cash markets, domestic institutions on the sell side again. So flip-flop. The previous day was a buy figure, but not sustaining into a buy. Sell of about 600 crores. Just in terms of individual action, I'll watch out for the PSU space, particularly NBCC, because it's sort of giving some news and some buzz over here. The company's going to be looking at a bonus issue. So perhaps that gets a bit of the trade going back on the PSU side. And guess what? This is not for today, but something to keep in mind, and we'll discuss this as we go forward. Will we finally see the NSE IPO? Is it going to see the light of the day? Well, yesterday was again one step forward. That is the NSE board deciding to submit an application to SEBI to get a NOC, a no objection certificate. Remember, the NSE had asked, SEBI had asked NSE to pull out the IPO in 2019. Then it went into a cold storage. So this time, are we going to see a revival? We'll get you more commentary and more thoughts around this as we go forward. But overall, the setup, bit of a caution, but maybe, getting third time lucky today. That's what the bulls will hope for, Nigel.
Well, let's see whether or not that happens, but it appears that today could be the day.
Yeah. So it's the color.
The Nifty will try yet again to hit those fresh all-time highs. Last couple of days, we've been flirting with those all-time highs, but today could practically be the day. And if that has to happen, then the Nifty Bank that plays out its expiry, that'll be the factor at play in today's trading session, and that's going to be the swing factor for the day. I'll tell you a little bit more about that in just a bit. What about overnight? Well, overnight, as you'll mention, NVIDIA is something that we'll be looking forward to. The FI position should come up for you in the screen, and this is something that I don't really like, actually, because the FI positioning on the long side is moving towards that 1 lakh contracts odd. I prefer when there are more shorts in the system, like we saw a few sessions ago when the markets were net short. But for the time being, that's a data point that will take close to 90,000 contracts on the long side. Net positioning of the FIs. The client positioning has absolutely flattened out. They were net short, they moved into net long, and now it's as flat as can be. FI positioning, well, it's close to around 58% of their positions, in percentage terms, that are on the long side. And that's the highest, actually, we have seen all the way since August 5th. So that's the FI positioning. The client position should come up for you. It's as flat as can be, not long, not short, just flat as we speak as well. Well, let's move to the options data then. Getting into the expiry, tomorrow there will be the monthly expiry that will play out. And two strikes are very active. And sometimes getting into the expiry, you see a short straddle that takes place. That's the same strike. You write the call, you write the put, and you pocket the premium. And the rough premium, the average premium could be around 180 rupees odd. So 180 plus 25,000, 180 minus 25,000. That's a short straddle. So the broad range comes up for you on the screen. On the downside, 24,820. Well, that appears to be the support zone going by the options data. And resistance will come in at around 25,180. So, it appears the traders are playing for a bit of this range. But the Nifty Bank, that plays out its expiry today, and it's going to be interesting. And that's going to be the mover today, because the rolls are much lower that we're seeing in this contract in comparison to the same time on an average for the last 3 contracts. Much lower this time around, indicating there's a fair bit of action still in store in the Nifty Bank. But it's facing resistance at around this 51,300, 51,400 level. Even yesterday, intraday, it went past that 51,300 mark. Towards the end of trade, it ended below that 51,200 odd mark. So if you just pull up the chart that we've been talking about for the last few sessions, the 20-day MA, it's stuck in that very, very tight range. The 20-day MA on the downside, that's the support zone. You don't want that to go. But on the upside, you wanted to go ahead and take out this 51,300, 51,400. That's the mover of the day. If it finds its form, we're at fresh all-time highs today.
Well, it's just a matter of, it's a hop, skip and jump. Not even that. You're there yesterday practically. So it's possible we get to that today. Well, let's just quickly run you through some opinion now. We have Mark Matthews joining in of Bank Julius Baer and Company. Mark, great to have you with us here on the program. Good morning. Let's just start with this NVIDIA business overnight. How important, they say the heart of this AI global theme, how important are the earnings going to be for markets in your opinion?
Exceptionally important, and I can give you a little idea of what they might look at, because I think the two main things to look at are the orders that NVIDIA has been giving to Taiwan Semiconductor, which makes NVIDIA's GPUs, and then how are the suppliers of NVIDIA doing? And so what I can tell you is, as of the end of June, NVIDIA's purchasing commitments to Taiwan Semi were up 175% year on year. So that's a very good number. It's probably gone up since then. And then as far as the suppliers go, one important one is called Fabrinet. They make optical cables for NVIDIA. And their data communications business was up 120% year on year in their second quarter results. And they said the third quarter will be significantly stronger. So I think that NVIDIA will come through with very good actual second quarter numbers and guidance. But I must say that our fair value price target for the stock is $135 per share, which is only $8 higher than where it is now. $7, excuse me.
Okay. Mark, hi. Good to be speaking with you this morning. I was just looking at the NASDAQ. Fantastic run, right? 30% in the last 1 year, last 12 months. And I was wondering, it's tough to beat that kind of performance. But then, hey, I forgot. I checked out our very own Nifty 50 here in India. And guess what? The Nifty is also up 30% in the last 1 year. So it's been a phenomenal ride for equity markets around the world. But on U.S. technology, whatever NVIDIA says or doesn't say or delivers or doesn't deliver today, there's been some sector rotation out, but it's not become very definitive as yet. Do you expect any major portfolio changes, or do you expect this tech rally to last, into the end of the year as well?
We expect the technology sector to continue to outperform, and the key will be that over the next 6 months, the big players, the Magnificent Seven, start to monetize artificial intelligence. Well, clearly NVIDIA has already done that, but we'd like to see it from Microsoft, Google, Facebook, etc. Now, we think that is going to happen. We think they will be showing very material pickup in actual profits from artificial intelligence. And by the way, I think you could say the same for the entire U.S. corporate sector, maybe not over the next 6 months, but over the next 12 months. We're going to see a lot of real stories of AI helping businesses become more efficient. That's our belief. And if that's true, then I think that the technology sector continues to do well. I do acknowledge what you're saying, that there has been some rotation into more cyclical sectors like financials, like real estate. But the structural growth of the technology sector, we believe, is still going to remain very strong, and therefore it's still where we would want to have the bulk of our portfolios invested.
Hi, Mark. Good morning and good to see you. What do you make of the growth market, that's the Indian market, in comparison to the value market, the Chinese market? It's trading at reasonable valuations, but there's a toss-up now, between India as well as China. Which side are you leaning in the near term? In the longer term, I'm sure it's India, but in the near term?
It is India. Near term, I must confess that I thought this was going to be a good year for China, and it's not panning out to be that way. But we're only in August, and I still think it could be a good year. Or perhaps if you extend that a few months into 2025, things will start to turn out very well for China. The Chinese market is incredibly cheap. So big stocks like Alibaba, Tencent, JD.com, those kind of things, Pinduoduo now, because it sold off quite a lot. They're on around 7, 8, 9 times forward price earnings. And the thing is that, they probably won't go back to the kind of multiples that they were on before, or the kind of multiple that India trades at today, because of this political overlay in China called common prosperity. And the big companies are reluctant to show a lot of earnings growth for fear that, that'll show that they're taking away market share from mom and pops or becoming too wealthy. You know what I mean? So the earnings growth is probably going to be only around 10% per year for those kind of companies. But if they're already trading at 7 or 8 times, then in my mind, they're too cheap. And I see one potential big upside for China, which is that if Donald Trump is the next president, I think he wants to make a deal with China, a trade deal with China, which would basically involve the Chinese making electric vehicles in the United States. And the Chinese reacted to the 2016 tariffs with anger and arrogance. This time, I don't think they'll do that. I think they'll make the deal.
Instead of making it in Mexico and then shipping it over, right? I mean, but there's of course also all sorts of talks about tariffs, and maybe it's a starting point in negotiations, right? 60% tariffs, even higher, we've heard, et cetera, et cetera. By the way, has there been any fresh polling, with after Robert Kennedy Jr. threw his support for Trump, or no,
yes.
None yet?
Yes, there has. The most important thing is the Electoral College. That's how the vote's determined. And the person who does the best work there is a gentleman named Nate Silver. And since RFK Jr. dropped out, he actually has Trump in the lead for the Electoral College. Apologies, I don't remember what it was. It just came out yesterday, but he's in a slight lead now, whereas prior to RFK Jr. dropping out, Kamala had been in the lead.
Okay. All right. By the way, Mark, I just want to make it's just a sort of announcement for our viewers as well. We usually wake up in the morning and get fed headlines, right? Some FOMC members speaking overnight. We have Christopher Waller here in Mumbai. There's a big summit happening, and he's going to be in conversation with a senior official from the RBI. It's a fireside chat. So I think we could get a headline in the next 2 hours out of Mumbai here, BKC. So and he's known to move markets, right? I mean, more indicative of policy. He speaks less, but I think makes more of an impact when he does. Mark?
Yes, that's right. He certainly doesn't mind expressing his views, and important person. And so it'll be very interesting to see what he says out of Mumbai. I look forward to listening to that.
All right. No, absolutely. So that's the big sort of name here. There are many big faces, of course, at the FinTech Summit, which is happening here in Mumbai. and we'll, of course, get you a lot of them. Mark, great to speak with you. Thank you very much for joining us. Appreciate it here on CNBC TV18. We'll run you through some calls on other asset classes as well. We've been talking about equities, but here's Pankaj Chitangla of First Spaces, who's weighing in on the currency. He says the USD INR rate is held in a narrow range with strong resistance at 84 to the dollar mark. He says, as he anticipated, the dollar index continues its downward trajectory. Probability of rate cuts in the US is keeping the dollar under pressure. Considering the trend and combining with the strength of the Indian economy, he expects the dollar INR to fall towards 83.75 to 83.5, which means the rupee strengthens in the near term. He says a daily close above 84 would invalidate this outlook.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield remains in a range of 6.85 to 6.89% in the last 1 week. He says 6.85% is currently acting as a key resistance level. He adds that the market is in bull steepening mode, especially after Jerome Powell's comment at Jackson Hole. He says there's also strong receiving interest in overnight index swaps, with the 5-year OIS currently trading in a range of 6.03 to 6.07%. Neeraj expects the 10-year benchmark bond yield to maintain a range of 6.85 to 6.9% for now.
Well, we've got a lot of stocks that we're tracking for you in our special top 10 segment. Let's run you through the list. We're looking at L&T Tech Services, LT Finance, PNC Infra, NBCC, Ava Space Solutions, Lupin, Zydus, Rolex Rings, and Bharti Airtel. All of them will be reacting to positive news flow, while you have Tata Technologies that will be reacting to negative news flow. Well, I'll tell you what, we'll slip into a short break. You come back, we'll get into all these stocks in further detail. Our top 10 segment is waiting for you on the other side.
But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom. We see opportunity in sectors like two-wheelers, tractors. Also, we see opportunity in real estate ancillary kind of industries. With the specter of rates coming down and hopefully liquidity improving, we also see opportunities in banks, large banks which suffered due to liquidity in the past. We also see opportunity in the smaller banks or the non-banks. So we are looking at the segments like the pipes, the cables, the switch gears, the lighting, and all those segments. Because all those segments, we believe the organized sector has a definite edge, and they can do better.
Welcome back. So the cues are, slightly weak, you can say, with Asia looking a little somber. But against that backdrop, this is not bad because the implied open seems to suggest that we'll get a bit of a small pop at start. So what about stocks? What should we watch out for? Well, our team is standing by to bring you the CNBC TV18 list of top stocks to watch. Guys, hi, good morning to all of you. Rima, let's start with, L&T Tech Services. There was an investor call, I believe, yesterday. So what are the highlights?
Indeed. So L&T Technology Services held its analyst meet yesterday, and here are the key takeaways. One, the company reiterated their medium-term aspiration to hit $2 billion in terms of revenues and margins of 17 to 18%. They've also revamped their go-to-market strategy, and they're zeroing in on 3 verticals: mobility, sustainability, and tech. And they spend a lot of time showcasing their capabilities over here and how they plan to win in all these 3 verticals. In fact, they also said that later on, after they achieve their medium-term aspiration of $2 billion, their goal is that in each of these 3 verticals, mobility, sustainability, and tech, they want to achieve $1 billion each in terms of a revenue run rate. As for the near term, the management said the conversations and the pipeline has improved compared to last year, but deals are still taking time to close. Now, Motilal Oswal came back quite impressed with their go-to-market strategy. They say it opens up new avenues for growth, particularly in their automotive software development vehicles, where companies like KPIT March have, KPIT Tech have stolen a march over companies. So, Motilal Oswal believes that this approach opens up new avenues for growth. So they have a buy rating, but Nuvama thinks LTTS is a bit expensive, which is why they have a hold call on the stock.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on the other L&T name, that's L&T Finance. Abhishek's here to run us through those details. Morning, Abhishek.
Morning, Nigel. So, Citi is holding a conference with investors. So, over there, the L&T Finance was present. So, Citi has written a note on the key takeaways from that conference. Citi has a buy rating with a target price of 221 per share on L&T Finance. The key management takeaways are that industry-wide, the MFI stress incidence is expected to dissipate by H2 FY25. Management is confident that there is no over-leveraging risk for its MFI borrowers. Remember that 37% of the MFI borrowers are first time to L&T Finance, 64% have up to 2 association, and 76% have no other non-MFI retail lending overlap with them. So management is cutting down on disbursements to over-leveraged and overdue borrowers. Focus is on reducing the concentration risk in the portfolio. Home loan lead generation impact will be visible in next couple of quarters, and they are confident of a credit cost guidance for FY25 being between 2.25% to 2.5%. Remember that in FY24, their overall credit cost was about 2.67%. So they expect improvement in their credit cost in FY25 versus FY24. Back to you.
All right, Abhishek, thanks very much for that. So that's L&T Finance in focus. Bharti is going to be the next one, which we are talking about. Rima has got more details. Rima, over to you.
Well, we're watching Bharti Airtel today because Indus Stars has now become a subsidiary of Bharti Airtel. Now, earlier, Bharti Airtel had a 49% holding in the company, and now they've managed to cross the 50% mark, 50.005%. Now, this happened because Indus Stars, remember, did a buyback, which just got concluded recently. They bought back 2.1% of the equity. Now, Bharti Airtel did not participate in that buyback. And by not participating, the effective shareholding in the company went up by a little over 1%, helping it cross that 50% mark. So it was a very nice way for Bharti Airtel to up their shareholding in Indus Stars without having to spend any kind of money. So now Indus Stars is a subsidiary of Bharti Airtel. So the numbers from here on will, of course, change for Airtel.
All right, that's pretty interesting to note. Thanks very much for that, Rima. Let's get to Vamakshi, who's watching out for a bunch of stocks. I think PNC, Infra, NBCC, and Office. Vamakshi, off you go then.
Well, good morning. Let me first start off with PNC Infra. The company has been declared as the lowest bidder for a project worth 380 crores from NHAI, and this is for construction of an additional 3-lane bridge over River Ganga for connection between Buxar and Baroli in UP and Bihar. NBCC is the next counter. It is expected to open higher because a board meeting is scheduled on August 31st to consider issuance of bonus shares. Lastly, let's watch out for Office Space going with the green for this counter as well, and that is because the company has signed the largest managed aggregation, that is MA deal of 3 lakh square feet with the Nyati Group, and with this the company now has a total of 500,000 square feet of grade A flexible workspace with the Nyati Group. The company will be introducing premium flexible workspaces in some of its prime commercial properties. So given this development, going with the green for Office Space.
Okay, very, very interesting. In fact, we spoke with the company just yesterday, Office. They were explaining how this whole managed aggregator model is asset light and it helps them expand very quickly. And they've done a deal in that space today. Thanks very much, Vamakshi, for that. Let's head across to Ekta now. She's watching out for Zydus Life and Lupin. Ekta, good morning.
Morning. Well, I'll start with Lupin, which has received a US FDA approval for a drug which is used for ophthalmic purposes. It is the generic Alphagen. It is used to release elevated intraocular pressure or patients with glaucoma and hypertension. Estimated sales $178.5 million. Zydus, they've received final approval from the US FDA for a drug which is basically used for uncontrolled tremors in Parkinson's. It's a final approval for the 68.5 mg drug and a tentative approval for the 137 mg drug. The approval, according to the company, makes them eligible for 180-day exclusivity for the 68.5 mg version of the drug, and hence I expect both the stocks to see some green today.
All right, Ikta, thanks very much for that. So that's pharma stocks in focus, Zydus Life and Lupin. Some block deals. How can we sort of wrap up the top 10 without these blocks? Sudarshan has got details. Good morning.
Morning, Prashant. So I have two stocks with the back of block deals. First one is Tata Technologies. TPG Rise Climate has sold 3% equity at a price of ₹1,014 per share, and that's why I blocked this. As of June, TPG Rise had held 9%, so of 9%, it has reduced its stake by 3%. And amongst key buyers are Coptel Mauritius and Gisalo Master Fund. And before this, on August 23, also we had seen block deals in Tata Technologies. Alpha TC Holdings had reduced its stake by 2.4% from the holding of 4.3% that it held as of June. Second is Rolex Rings. Companies saw block deals of nearly 3% equity, and of this 3%, promoters sold 1.64%, and ICICI Prudential Mutual Fund has cut its holding by 1.2%. And amongst key buyers are SBI MF, Kotak Mahindra Mutual Fund, and Franklin Templeton. So keep an eye on these two stocks on the back of block deals.
Okay, all right, got it, Sudarshan. Thank you very much for that heads up. Well, let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are L&T Tech Services, L&T Finance, Bharti Airtel, PNC Infra, NBCC Office Space Solutions, Lupin, Zydus Life Sciences, and Rolex Ring. Only one stock with negative news flow around it, and that is Tata Technologies.
Okay, well, we'll take a quick commercial break here. We come back. We have... All right, I think before that, we'll talk about another important sort of development. This is coming in from the unlisted space so far, of course. So the development is with regards to the much-awaited IPO, the National Stock Exchange, the NSE. Sources tell CNBC TV18 that the exchange, that is the NSE, has sought a NOC, which is a no objection certificate from SEBI for listing, for filing the IPO documents. The NSE board met yesterday. There was an AGM as well, and they approved the decision to file for an application seeking a NOC certificate. The NOC is given to take SEBI's go-ahead from the department that is concerned with the market infrastructure institutions, or MIIs. It is also needed to get SEBI's clearance for NSE to file an IPO DRHP. I mean, you know, there's a fair bit of anticipation, excitement around this, but I just want to make one thing clear. This is they're seeking a NOC. I mean, this is not, you know, it's still very, very early days, and they're just sort of going to the regulator and saying, well, you know, do you have objections? As we all know, over the last couple of years now, I mean, the regulator, of course, has objections, and they have you know, they sort of there have been lots of stories done. There's a case which is in the Supreme Court as well. So, I mean, there's a fair bit happening which is going to determine the prospects for the NSE IPO. This can be read as positive, but does it really move forward the process of the IPO itself? I mean, I think we should hold our horses, not get too excited about this one. I mean, it's a, you know, it's an important name, just, of course, the sheer size of it, but also, of course, the number of people who own these unlisted shares now. I mean, it's not a company, as someone said, it's an asset class in itself with the amount of activity around this one. Of course, in the unlisted space, the share has become more and more liquid, but nothing close to what it will be once it actually makes it to the market. All right, let's talk about commodities and the roundup from there. Manisha is here with details. Manisha, morning.
Morning, and thank you for that, Prashant. Well, after gaining 7% in last 3 trading sessions, we finally have seen crude oil prices come off those kind of highs. So overnight has been more than 2% of a decline, while the concerns still are there. But with the kind of surge that we had seen, there is some profit taking, exactly what we are looking at. Also, when you look at various reports from Goldman Sachs or Morgan Stanley, they all seem to be revising their expectation of price outlook on the lower side. Goldman Sachs has been the later one, saying that $70 to $85, between this is where they see Brent trading now for the rest of this year. It's a big range, but clearly a very limited one on that. On the other side, you still have the gold and silver prices trading near all-time highs. We have seen the metal prices, though, come under a bit of a profit-taking. The gains in the meanwhile have continued in many of these soft commodities. Rubber, for example, is trading at a 2-month highs right now. Coffee prices trading at a 13-year highs. You have the sugar prices now trading at a 6-week highs. So many of these soft agricultural commodities in the global market seem to be doing quite well.
Okay, all right, Manisha, thanks for that. Well, for the time being, though, we'll slip into a short break. Up next, we'll have Siddharth Khemka, Head Retail Research at Motilal Oswal Financial Services. He's waiting by to help us out with some fundamental talk. Welcome back. Well, let's get straight to some fundamental analysis. Sid Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Well, let's talk about LTTS. They had an analyst meet yesterday. The stock is not very cheap, but they have given this ambitious guidance in a couple of $1 billion, split it up vertical-wise as well. What do you make of the stock?
Yeah, good morning, Nigel. Glad to be on the show. So if you look at the re-engineered go-to-market strategy, we believe that is really positive given that some of their product segments were a bit confusing for the market. So they have given out an aspiration of achieving a revenue run rate of $2 billion, EBITDA margins in the range of 17 to 18%. And what we believe is that the growth drivers for the company remains intact for some of its key verticals across the ERD client universe. And with the new go-to-market strategy, the company is redefining its segments into high growth areas such as mobility, which is your software-defined vehicles and electrification, sustainability, which is your industrial products, plant engineering, and finally the tech business, which is your medical devices, communication, high-tech, smart cities. So we believe that if executed correctly, this could boost the long-term growth for the company. And this new strategy also opens up new avenues for growth especially in some of the weak areas such as mobility, which has been a fast-growing area for some of its peers in the ERD space. Hence, we believe that though the near term or the immediate future could be a little impacted by the demand uncertainty, but this strategy of redefining its business and go-to-market strategy will definitely be a long-term positive. Yes, valuations a bit expensive, but with this kind of growth, we are expecting a 10% USD revenue growth over the next 2 years and EBITDA margin somewhere between that range, so about 17.3% EBITDA margins. Hence, we believe the premium valuation would continue. We are valuing the stock at 40 times and giving it a target of 6,300.
Okay, all right. That's L&T Tech Services. Siddharth, good morning. Good to have you on. I just want to get your sense on this company Office, in case it's under your coverage. Let me first ask you, is it?
No, we really don't cover that stock right now.
Okay. Fair enough. Recent IPO and it's done really well. But let me expand that question to, in general, I mean, realty. What's the sense now? Are you looking for any bargains over here? Because we've been going through some of the industry reports when Knight Frank came out with the report, and I saw another one by Colliers basically saying the same thing, that the price appreciation pan-India is very significant. NCR is even better, and unsold inventory continues to fall. So it seems the fundamentals are still in place. The question is getting the right stock at the right price. So any thoughts here?
Yeah, so if you look at the overall real estate space, the pre-sales booking remains quite strong, and we believe that the double-digit growth aspiration for the overall real estate space that remains intact. However, what we have seen is after a spate of large luxury segment launches, now there is a controlled launch that is happening, and that will lead to some kind of a slower growth compared to the last few years. Also, the premium and the luxury segment, which continues to do well. Now we expect with the upcoming rate cut cycle, the mid segment also coming in and doing well with the interest rate sensitive bracket. That should also start doing well. So in our view, what we believe is that the overall there could be a phase-wise launches of some of the key projects which could keep the growth visibility strong. And what we like is now some of these mid-segment residential space companies, for example, your Prestige Estate, Shobha Developers, and Godrej Properties. So these are some of our preferred picks from the real estate space.
To stay with us, I want you to listen to this conversation of MediAssist. That's the first management on the show. Remember, the company announced the acquisition of Paramount TPA for an enterprise value of around 312 crores. Brokerage Investec, well, they are bullish on the prospects on those valuations that this deal has been done. To help us out with an understanding of the deal and the way ahead, we're joined by Mr. Satish Gidugu, the Chief Executive Officer and the whole-time Director at MediAssist Health. Hi, Satish. Good morning. And first of all, congratulations. The street clearly likes what you all have done. So let's understand the deal in further detail. First up, you are talking about some synergy benefits. Could you quantify what are the synergy benefits? And second point on the margins. The acquired asset, Paramount, what kind of margins does it function at? And when does it come up to speed with MediAssist?
Morning, Nigel. That's a lot of questions. I'll do my best to get to you. First, the acquisition is of Paramount TPA. They're the second largest in the group business today after MediAssist, and takes us from a group market share from 30% to a nearly 36.6% combined at the overall industry group premiums level, and also allows us to move from 20% to a 24% of the group and retail premium market share. So, and that's the TPA that we are acquiring. Vintage, very well established TPA. Historically, Nigel, if you've seen many of the TPAs that we've acquired are in single-digit margins. So Paramount is about a 9.5% margin business. Of course, it's an Indian GAAP accounting basis. Takes us typically about 4 quarters to completely flip the operations to our model, mostly because our contracts are annual in nature. The policies renew over 365 days. So over 4 quarters is where you see most of the synergies kicking in. And we also expect Paramount also to take about 4 quarters from closing, of course, to start kicking in from a margin profile perspective.
And you want to quantify the synergy benefits that you were briefly alluding to?
So we were historically 23-24% margin business before we acquired the businesses in calendar year 23. We are currently reporting our 21% console. The endeavor is to get back to our stable margins. We probably stay at the current margin profiles for next year, given about 150 bips of impact is what we're estimating on the margins for FY26.
Sorry, Satish, hi, good morning. You're saying for the consolidated, so you'll take about 4 quarters to get margins at Paramount up to Medi-Assist levels. That's what you're telling us?
Yes.
So 4 quarters out, in about a year's time, margins will be, I mean, you want to sort of give us a number? What should we work with? You said 20...
I think we are currently at 21% and we expect to hold. But of course, whatever synergies would have come next year, up to about 150 bips impact would come because of this acquisition. So FY27 should be a fully normalized number.
Okay. Got that. Now, what do you plan to do with the retail business at Paramount? The group business is doing well. On the retail side, will you wind it down? Would you try to sort of grow it? What are the plans?
So Prashant, retail is a very important part of our growth because of our disproportionate growth in group. Sometimes, it may not be obvious that we do a significant amount of work in retail for 14 insurers out of the 28 that we work with. We have a 5% market share, in retail, and Paramount will add another 20% to it. So retail continues to be a focus area, Prashant, and we'll continue to grow all 3 segments: group, retail, and the government.
Satish, on that point, can you just tell us, for you right now at Medi-Assist, what's the margin differential between the group business and the retail business? And once you assimilate Paramount into the operations, what will be the mix?
So today, we are roughly about 70% in group revenues, about 10 to 11% coming in from retail, about 10% from government, and the rest coming from the international TPA that we had acquired some time back. Paramount's group, retail, and government are very similar from mix perspective, so it's fairly instantly accretive. And Surabhi, we don't today differentiate group and retail margins because the efficiency comes because we're able to treat the whole servicing and back office as one. So we don't really differentiate the margins between group and retail.
Okay, fair enough. So let me ask you a broader question. I mean, steady state, post-acquisition and post all the synergy benefits kicking in, for the combined entity, say a year down the line, by the end of the year or next year, what is a steady state margin profile that you'll target?
We would like to go back to our previous steady state margins, which is 23 to 24%. So that's the effort that's on. Barring a minor timing differences, that's what we believe is our stable margins, and that's what we should get to at the earliest.
All right, Satish, this acquisition strengthens your presence in the group part of the business. Are you all still on the prowl? Are you looking at a retail individual asset as well, a TPA with that sort of presence? So maybe it balances the two then.
I think retail needs a very different approach, Nigel. The retail business, the way it works for insurers is very different. So I think we have the right kind of now technology network. We made significant investments in fraud-based abuse prevention, a fair bit of investments over the last 1 year. We think that what we're doing is on the right track from a retail perspective. So necessarily acquisition is not the route to grow the retail business.
Satish, your fortunes and are tied at the hip to what insurers do, right? I mean, how well insurers do. There's a great deal of sort of excitement coming back for a variety of reasons for insurers themselves, growth rates and this period of sort of changes in rules, and there was a bit of upheaval. All of that is settling down. What are your own expectations? Which segments do you think are you most positive about from here on?
So I think 2 or 3 tailwinds there, Prashant. One is the government wants insurance for all by 2047 with a significant focus on health insurance. The second thing that's working in our favor is the significant focus from the regulator on the policyholder experience, improving the service levels and the technology deployments. And hence, we think that we will continue to match or better the health insurance growth rates, which we still predict will be at least a 20-21% year-on-year growth rates. Group has been marginally faster in terms of growth rate, simply because of the employment growth and the benefits expansion that happens in group. But on the whole, if you see, the industry has been 20-21% growth rates. I think we'll match the industry growth rates or improve on it.
Just one last quick one, Satish. You know, we've been hearing reports of issues with regards to Star Health. You know, sort of there was this thing with Max which was going on. There were this issues with the Gujarat hospitals earlier. Of course, that got sorted out. I mean, can you tell us if, I mean, your relationship with Star is all well and no issues?
It won't be appropriate for me to comment on any specific insurer, but we work with all 28 insurers that are offering the group product today, Prashant. We work with all of them. And of course, one of the reasons for us, if you recollect some of our past conversations, network is a very clear focus area. So we continue to build and strengthen our relationships in network. Most of the insurers that we work with today use our network.
Yeah. Okay. All right. We'll leave it there, Satish. Thank you very much for joining us. Good speaking with you, and good luck with that acquisition. And we hope to speak after earnings for the second quarter come through. I think we'll take a quick commercial break here. There's, of course, 10 minutes to go for the pre-open session to kick off. Sid is with us from Motilal Oswal. We'll get you some technical trades as well with both Mitesh and Sudarshan. Stay with us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time.
Welcome back. Well, we're still in conversation with Siddharth Khemka, and the cues are telling us that maybe, best case, we'll have a bit of a mild positive start. Let's pull up the implied open once again. So it's steady, still showing that we could maybe get 10-15 points at the pop. Siddharth, your sense on insurance overall, I don't know if you could hear our conversation with MediAssist on the health side. They're sounding very optimistic, talking 21%, steady state growth, 23-24% margin. So between health insurance, overall life insurance, which has had a fantastic run, or maybe a way to play it could be a TPA like MediAssist. I mean, how do you play the space and what do you like here?
Yeah, Surabhi. So I think the entire insurance space is finally coming out of the woods post the pandemic, where we saw a lot of pressure on the numbers. Now both life insurance players have reported healthy premium growth, while in the general insurance space also, firms have posted a decent growth underpinned by the strong auto sales, high demand for health insurance. So what we believe is that both would continue to do well. in the general space, health insurance and its penetration in the retail, which is still low, that would drive growth. So what we like within the health insurance or the general insurance is the ICICI Lombard and Star Health. So Star Health is our preferred pick there. We believe that the company would report strong growth on back of the penetration in the retail health industry, so some of its specialized products, as well as deepening presence in the product space. What we are expecting is an 18% NEP growth for Star Health and almost 30% PAT growth over the next 2 years, leading to a target price of 730 for Star Health. ICICI Lombard has been doing well. We have a target price of 2,200, which is almost closer to the target price. The stock has done well. Life insurance, SBI Life is our preferred pick given its efficiency ratios as well as the strong VNB margins and growth. There we have a buy rating with a target price of 1,900, but in general, we like the entire insurance industry from here.
Okay, all right. Thanks a lot for that, Sid. By the way, at the bottom of your screen, there was a flash with regard to GMM Pfaudler. And the total equity that's changed hands is around 8%. I'm looking at the non-promoter entities, and just one of them, that's Geranium Investments, that has 8.25% stake in the company. And their entry into the company was around a year or so ago when Pfaudler sold close to around 13% or thereabouts. So as of now, just trying to get some data points, but in the non-promoter entity, that's Geranium Investments, that has 8.25. Nimesh will try to join us and give us further details on that front.
Geranium in August 2023, I'm just looking at reports to jog our memory. Geranium was the entity that had bought when Pfaudler was selling out. It was the same chunk, just over 8% equity that was bought by Geranium in August of 2023, so just about a year ago. And it seems that now they're perhaps cashing in on it.
We'll have to confirm that, Surbhi, whether or not it was them.
It is Geranium or
but,
not.
Just going by what you're saying as well, if they held it for a year, then they didn't make any money.
That's what I was wondering.
You pull up a one-year chart, the stock is down 10%. So we'll try to get you further clarity on this front. But this is the large trade that just took place. And in fact, we'll try to get you details in just a bit.
I think this was, I'd rather sort of get the management on, but I think this was awaited. A large block was awaited here in GMM for the last couple of months. But, is this that? We'll sort of have to sort of refresh and speak with the management to get some more insights. And as you said, Nimesh will also be with us. Let's get in Mitesh and Sudarshan with us to run us through what they're making of the screen and whether we get to new highs and beyond, and whether Bank Nifty will start to show some momentum. It moved up, but no real momentum. Gentlemen, good morning. Good to have both of you here. Mitesh, let's start with you. How are things looking, and how would you trade the indices first?
Yeah. So, morning, Prashant. I think on the indices, now the key event would be getting beyond the earlier high, which is 25,078 or 80 levels. And once that happens, I think expect 25,400, 500 as the target area. The Nifty, IT, Nifty Bank both look decently good enough, and I think should support the upside movement. So either buy on a breakout or wait for some kind of pullback to play out. Day before yesterday, we had a gap up opening. So that could be very interesting, and any declines closer to 24,900 also would be buying opportunities. So the stance is on the long side. It's just tactically when you want to initiate the position.
Okay, got that, Mitesh. Thanks for that. Just coming back to you, Sudarshan is also with us. Sudarshan, morning. So what's the approach you will take today?
Yeah, good morning. See, yesterday's approach was do nothing, and today I think I'll follow. This market is now wanting a serious bout of consolidation. When, these TV news channels were not there and only the newspapers were our source of information, there would sometimes be a headline in the paper, tired bull liquidation. So that's exactly what's happening. Nothing is bearish, nothing has changed, but the buyers are getting tired and they want probably some rest. So that leads to a choppy market. If you find a significant dip, and I can't define it, then maybe buying is possible. But since it is undefined, it's much better to stay away from the Bank Nifty and the Nifty both for today also.
All right. What we'll do is, Sudarshan and Mitesh, take a quick break here. We'll come back for your specific stock trades. Stay with us.
on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand.
Welcome back. Well, we are still in conversation with our technical experts. So let's quickly look at some more trading strategies that you could perhaps consider today. Mitesh, morning. So let's go back. Stocks, what would you look at? I don't know if any of the financials yesterday, they were flying high, if they make the cut for you, or any other names?
They do, in fact. Good morning. The Fin Nifty did better than the Bank Nifty, and I have Bajaj Finance. We had Bajaj Finserv yesterday. Today is Bajaj Finance, which is showing signs of upward breakout. So 69.30.50 should be the target area here, and keep a stop below 68.24. HDFC Life is a buy with a stop at 724 for targets of 770. Indigo is a buy with a stop below 46.90 for targets of 4900. And one sell call, that's Adani Ports. If it breaks 1470, take a tight stop loss at 1490 half on the short position and look for targets of 1425.
Got it, Mitesh. Sudarshan, what about you? What stock picks do you have for us today?
Well, it's mainly on the buy side, or rather all on the buy side. Jindal Steel is a buy with a stop under 960. The two power finance companies had a big run up yesterday. It is possible we can see follow through. Both should be bought on a dip, but then they are buying ideas. Power finance with a stop under 510 and REC with a stop under 585. But don't run and buy them at the open. Buy them on intraday dips. And finally, Tata Communications is a positional trade as well as an intraday trade with a stop under for buying with a stop under 1925.
Just want to look at what Z did finally yesterday. And let's just have the stock up. It was, I think, up 15% at one point.
It's up 2% now in pre-open.
Pre-open. Did it end sharply higher?
Yeah, 11-12% higher, because I guess the takeaway really was that while this is nothing new, but it does remove a major overhang. The $90 million claim that Sony had put, that is settled and no further litigation. And basically, you learn to move on in life, basically. I think that was the interpretation the market took.
When it came, I was thinking, that all those claims, the 90 million, 100 million, that was just, those were just sort of,
posturing in the courts.
Yeah, posturing and threat tactics.
In fact, Karan Turani said that we are not factoring in that they have to pay anything in the first place.
I was kind of surprised when but yeah, it's a bit of a relief. It's been bombed out, etc. But let's get a technical view here. Mitesh, any thoughts on this one? Z?
I think, the stock has been very big underperformer. But if you look at the last about 3 weeks of data, on 4 occasions, the stock has made a closing low around 133, 134 and held it. And, yesterday was some kind of a reversal. So I think despite being an underperformer in the short term, the stock could, make up for that underperformance. There's signs of a bounce back. The first target should be around 161 and then possibly the highs of 167, which the stock made in June, should be revisited. I'm not sure of stock going beyond that, but these are trading targets.
All right, fair enough. We'll leave it there. Mitesh and Sudarshan, appreciate you joining in, and more later. Rajesh Palvia is VP Technical and Derivative Research at Axis Securities with some thoughts on the trading setup. Rajesh, good morning. Good to have you here. So what would your trades be, Rajesh? How would you approach things?
So looking at the setup, we are holding bullish view, and we believe that, we are almost now ready for, new all-time high trajectory for Nifty. The way put writers have added their position at 24,900, 25,000 strike, that clearly shows that, we may see a 25,100 to 25,200 kind of level in the continuation of this up move or towards the expiry for this month. Bank Nifty is also now trading above 51,000 levels. So both indices are looking bullish at this juncture. And I think one should remain on the buying side of the trade. For Nifty, we are initiating here to buy 25,000 call option, which was closed at around 82 rupees. And we are projecting a target of 140 to 160 for this call option with stop loss of 50 rupees. And even for Bank Nifty, till Bank Nifty is holding above 50,750, I think one should try to buy any kind of minor dip in the volatile market. And we are projecting target towards 51,600 to 51,700 for Bank Nifty. So both indices are looking promising. Broader market is also looking good. Mid cap, small cap space is also doing good. So we believe that, this bullish momentum may continue further. On the stocks front, pharma space is looking very attractive. Lupin is our buy at this juncture. The way stock is making series of high top, higher bottom formation towards the end of this expiry, stock is now trading near to the highest point of this expiry. So we believe that, Lupin may exhibit good amount of rally further. 2250, 2260 would be the next target. One can buy Lupin with stop loss of 2135. Another stock is from insurance space, that is ICICI Prudential. Again, stock is now penetrating to its previous multiple swing high. And the way stock has shown buying interest in last couple of days, we believe that, ICICI Pru can extend its gain, and possible target towards 770 to 780 we can see in the next couple of days. So ICICI Pru can be a buy with stop loss of 715. And the third stock is from metal space, that is Vedanta. Vedanta is almost trading near to its this month expiry high. And the way stock has shown buying interest in last couple of days, we believe that, we may see furthermore rally towards 485 to 490 for Vedanta. So one can buy Vedanta also with stop loss of 448.
Okay. Got that. By the way, in the pre-open, like we flagged off in the morning itself, NBCC is very excited because the company is going to be considering a bonus issue on the 31st. So just pointing that out. Pre-open Nifty is up about 25, 26 points, which is not too bad considering the cues. And this is a stock, keep your eye on this one. PSU company saying they're considering a bonus, and the market seems to like the sound of that. Sudarshan, back to you. Any thoughts on Z and any other stock that you want to flag off for us?
So two stocks that I have today. First one is AMI Organics. HDFC Securities has upgraded the stock to buy and target is rupees 1600 per share. And the reasons of upgrade are first, ramp up in Fermion contracts. Second, expansion of specialty chemicals portfolio. And third, balance sheet turning net cash in Q1 of FY25. Increase in better margin CDMO contribution and ramp up in capacity utilization of specialty chemicals plant. HDFC Securities expects margin to improve by more than 500 bips by FY26 and expects profit to grow at a 38% CAGR over FY24-26, led by 29% CAGR in EBITDA. And then second stock is Z Entertainment. The stock has been in focus. Yesterday we saw stock gaining up to 15% after company announced that it has settled all the disputes with Sony India. And after that, brokerages have written on the stock. Citi maintains sell call target is rupees 137 per share. It says all eyes will now be on business fundamentals. Settlement would help allay investor concerns around potential liabilities. Now it will monitor any material improvement in ad revenue market. And UBS maintains neutral and target is 180 per share. It says Sony settlement is seen as a positive as it removes a key overhang that company has for the last 2 to 3 years.
Okay, got it. Sudarshan, thanks very much. We will keep an eye out on all of those stocks. By the way, while we keep an eye out on all the listed stocks, there's a lot of buzz in the unlisted equity space as well. And one big company that everyone is focused on, of course, is NSE. Now, the development last evening was that the NSE board of the National Stock Exchange, has decided to go forward and request SEBI for an NOC so that they can move ahead with the NSE IPO. Now, that's what we have been picking up. Let's quickly go across to Deven Choksi and get some sense on what this could potentially mean and where we are in the whole journey of having a listed National Stock Exchange. Deven, good morning. Thanks so much for joining in. While we, of course, we need to ask you about what you think about the timelines, I think the valuation part is really important as well, because Nigel just tells me that in the unlisted market, the shares were quoting at 5,500 as of yesterday. So there's been a massive move already. What do you think of, NSE valuations in the unlisted space now, and what will potentially be on the table if we do move towards an IPO?
Hi, Surbi. Good morning. Well, I think going by the data which they have given in the last earning presentation, the company is basically growing at the revenue book in the vicinity of around 40% plus. And I think the profits likewise, I think, are growing at the same pace. So this year, FY25 could be possibly the year in which I think they should be somewhere around 19 to 20,000 crore to a top line. And somewhere around 11,000 crore or so should be the operating profit for the company. So from a perspective of looking at this company and the growth at around 40% plus level, I believe that the fundamentals of the company are very much in shape. Of course, I think they do not say much about, I think, the market share that this particular exchange is assuming, both in cash market as well as in the derivative markets. So I think that's where the strength is. Given the possibility that this time around the earning per share could be in excess of 200, I think you are likely to see at a 40 price earning multiple, which is a very conservative price multiple that I think you can possibly ask for, a price of around 8,000. And probably if this particular premium has to come to them with around 550 times price earning ratio on a 200 rupee earning per share in this year, it could be somewhere around 10,000 rupee price, I think, for the stock. So certainly, I think the company remains absolutely convincing from the investment perspective, with a lot of other positives, including, I think, the possibilities of cross-border trades getting started some point of time within the same exchanges, I think, where probably you are likely to see the larger participation of the volumes.
So Deven, hi, morning. Actually, for viewers who are watching, and they're wondering, well, this stock or that stock, I mean, it's not yet listed, but NSE is a real option. Many large investors have done that, right? I mean, there is valuation comfort, there is listing timeline uncertainty, but the business continues to do well. I mean, there is going to be better price discovery once it makes it to the market. But as you said, I think, and that IIFL earnings, I mean, there's only, I think, IIFL and a few others who cover it. Their earnings estimates on FY27 basis, NSE is at about 15 times earnings. This is IIFL. And it's a dominant exchange, etc., etc., etc. So do you think viewers who are watching should consider sort of buying some NSE, maybe even selling some of the outrageous winners they have in their portfolio and moving to some NSE? What's your sense?
Yes, Prashant, good morning. Well, bound to happen that way. The moment I think the company gets listed, I think you're likely to see larger amount of participation from the public in general. Currently, even in the unlisted market, the stock is trading. I think there is a certain amount of limitation in this particular stock. I think a minimum investment size is one of them. And that's where probably I think not many people could participate into this particular counter. But moment this stock is available through IPO, certainly I think there has to be a strong re-rating happening to the valuation. What I put across as a 40 times or 50 times price earning ratio could be, I think, very conservative for a company which is growing at a 40% plus rate of growth. And the visibility of growth in coming years remains on the certain side, on a higher side. A comparative exchanges, I think, in the market, be it in cash market, be it in commodity market, I think you're finding the valuation ratios, I think, quite high compared to even the valuation ratio that I'm talking about. So from that perspective too, I guess I think the investors should find it fancy. And most importantly, most of the funds who are basically having the weight on the market intermediaries, they would probably, I think, like to create additional amount of investment exposure into their funds once the company is listed. Right now, I think today, majority of the mutual fund and others who would like to basically be part of the investment in NSE, they are not. I think they will soon probably like to, because I think the stock is listed.
All right, Deven, as you said, the minimum quantity, I believe the minimum quantity today is around 200. I've not yet verified that totally, but that would amount to more than 10 lakhs of a ticket, for someone who wants to buy 200 shares. But Deven, final question before we let you go. There's a regulatory overhang as well. Now it's deemed a public company. So there'll have to be some amendments to get it listed. Your comment on this?
Well, I wouldn't know much about, I think, what kind of amendments I think they will have to know. Maybe I think the NSE management would be the better place, authorities, I think, to talk about those amendments that they wish to talk about when they apply for IPO at NSE.
But Deven, just going back to the valuation number, you said possible to see a 40 times forward multiple, which would take the price to around 8,000, right? That's 1 year forward earnings if we ascribe it a 40 times multiple.
This is FY25. I think I'm talking about FY25, 200 rupee earning per share. And I'm assigning, I think, 40 times price earning ratio for FY25. I'm not even going beyond that. Exchange is growing at around 40% rate of growth. I think one can extrapolate those numbers subsequently.
I mean, so we've hit list today, nothing less than 10,000. You can take it in writing. Devin, thank you very much. But that's the uncertainty, right? When will it list? Appreciate you joining in, and thank you very much for being here with us on CNBC TV18. There is, I think, just a few seconds to go for market open, and we'll have the first rates which will start to tick in. And the Nifty about 13 points higher, the Sensex about 68 points in the green. Can we sort of make another run for the all-time high, and cross it, sort of close above it, and then I think the next level is 25,530, as we've been saying. That's a simple retracement level. So what do we have? The first rates on your screen: 15 points, 12 points, 25,023 now in the red. So it's like pretty similar to the kind of open we had yesterday, the kind of market we had yesterday. Although through the course of the day, you had, I think, 3-4 these 40-point bumps which got sold into. So we'll see if we have some similar kind of session. Nothing, 3 or 3.5 odd point change. We've got the Sensex, which is up about 25 points, 81,733. The Bank Nifty is down about 100 points, 51,174. The IT index is up about 155 points, which is about 1/3%. So that's essentially what you have right at the word go. And, 4:1 in terms of advances to decline ratio at this point. But all about stocks, so let's take it to what's happening.
I checked out BSE at the start just to see if the excitement is even rubbing off, and it is. BSE started about 3% on the higher side, and actually some of the headline makers, NBCC, we flagged off this stock because of the bonus that the company is looking at, 6% higher, and Office is the other one. Keep your eye out on this one, on the big deal that they've signed for their expansion, 6% here. But anyway, back to the large cap screen. That's about 14 up on the Nifty right now. LTI, Mindtree, Wipro, Infosys. So it's technology to begin with. That's where the big buying seems to be. M&M seems to be putting on about 0.7% as well. There's Cipla in the mix. Bajaj Finance is trying to build on yesterday's gains and momentum, but actually then it's fizzling out. Reliance is just at the borderline with a gain of about 9 to 10 rupees at this point in time, and then it completely fizzles out. On the downside, Shriram Finance, after yesterday's big rallies, losing about 0.5%. Divi's, Axis Bank, these are some of the other stocks on the way down. Ultratech Cement, ONGC, and the two-wheeler guys, Hero Moto and Eicher, are starting lower. Bajaj is absolutely flat. So safe to say that it's almost impossible to highlight any trend, barring the fact that there's some buying in large cap IT that's evident. Everything else is either flat or listless. LTI Mindtree is really piling on the gain now, 2.5% on the upside. Wipro, Infosys I mentioned. Let's just see if TCS is. No, TCS is actually not part of the upside, at least as of now. HCL Tech is, but overall, IT leading from the front, 22 points up on the Nifty.
Well, that's right, Shilpi. I know the one that's moving like a bazooka is Datamatics. Yesterday, the stock was up 20%. They had announced they're partnering with Microsoft to develop its own AI-focused Copilot solutions. So that one is again up closer on 9%. Big up move is what we're seeing on that counter. You have Tata Elxsi. That's pulling back a little bit. I'm looking at a Kotak note. They said that the company is excellent, but valuations are inflated. Valuations at around 61 times its forward earnings. They believe that, it's stretched, and that's why they have retained their sell rating out there. So Tata Elxsi is pulling back a little bit. GMM Pfaudler, large trade, 8% equity changing hands in pre-open. The street likes that the deal is out of the way. We'll have to find out who exactly is part of that deal. But for the time being, just take a look at that. A big up move is what we're seeing out there. A rank underperformer, down 10% in the last 1 year or so. But for the time being, it's pulling back some of those losses. A couple of other big movers. Trent has moved up by close to around 2%. It's bracing to get into the Nifty. The official announcement has already come in there. So bulk of those flows have taken place. But now, in the next couple of weeks, we'll have Trent that moves in as well. On the flip side, RBL Bank down close to 1.5%. Aarti Industries is down close to 1%. I think we're an hour or couple of hours or so away from those fresh all-time highs. Today is the day.
And NIIT, did you mention? NIIT is finally cooling off. It's had a massive run, almost 45-50% in just a couple of days. Little bit of a cool off today, 4% lower.
All right, we've got about 20 points on the Nifty. 25,040 is where we are at. And we'll have the rates coming up. We should look back at the indices as well. Market breadth is positive, about 2.5:1 in favor of advances right now. I think, apart from what we've already mentioned, IFCI is up about 4%, so about 74. It's got very large volumes. BLS is up about 3.5%, 450 on BLS. We got Infi Beam, which is coming up with a 2.5%, I think can be safely ignored. EMS Limited, 4%, 4.5% higher, 885 on EMS Limited. It's got volumes. Insecticides, India is up 9%. Stocks are about 1,010 on Insecticides, India. Kiri Industries has been having a fantastic run recently. From the lows of about 300, it's basically added 100 rupees in the last 2 weeks or so. That is Kiri. What else? Aptus value is up about 3%. But again, volumes are nothing to talk about. So we'll just sort of wait for volumes to pick up if they do. And then we'll look at some more names here. Tata Elxsi is the big loser. It's down about 3%. Stocks at about 8,700. But you have Hindustan Zinc, which is down about 3.5%. RBL Bank is down about 2.25%. Ola Electric will come up on your screen. That is down about 1% as well. There is K Fintech, which is down about 3%. K Fintech, 1,115. K Fintech, I think, was sort of a mover yesterday on the upside. It's giving up some of those gains. And NIIT, as Surabhi mentioned, is down 4%. But, it's basically gone from $100 to about 107. Yesterday's high, I think, was closer to 180. So that's a sharp 75-80% move very quickly. And today it's giving back about 4% of it. There is Nykaa, Policy Bazaar, Titagarh, Kalyan Jewelers. These are all large liquid names, and they're all down between 1.5% to 2% at this point in time. It's a quiet kind of a start. You got about 20 points for the Nifty at about 25,040 or so. So that is some price action which is coming through. I think let's just look at the L&T tech stock as well. And let's go back and sort of revisit it in terms of what's going on there. Stocks up about 2.25%. Rima, tell us more.
So the key takeaway in their analyst meet yesterday is that in the medium term, the company wants to achieve a revenue, annualized revenue run rate of $2 billion and expand margins to 17 to 18%. After that, after they achieve this ambition, the company has said that in the three verticals which they're focusing on, mobility, tech and sustainability, the company wants to achieve $1 billion each in terms of revenues with a focus on expansion in margins. So the company has laid out this strategy to achieve this growth target, and L&T Tech has been a bit of an underperformer. Particularly what the street like is that, say you always compare L&T Tech to a KPIT Tech. Now, KPIT Tech has been outperforming because it's present in the automotive software development vehicles where there is a lot of offshoring work taking place, and KPIT Tech has been a beneficiary. industry. Now, analysts' contention was that LTTS is a diversified play, but it's not present in this high-growth automotive, software development space. So yesterday, the management did spend time on it. They're calling it out as a focus area, and they've, revamped their go-to-market strategy to try and target some of these high-growth areas. So Motilal Oswal came back quite bullish. They have said that this revamped go-to-market strategy opens up new avenues for growth in the hitherto weak areas such as mobility, which is growing fast across peers. Their target price stands at 6,300, a close to 12-13% upside from where the stock currently is. Nuvama says that growth is fine, but the stock is a bit expensive valuations-wise, so therefore the risk-reward is unfavorable. They have a hold rating on the stock, but the key takeaway from the analysts made is that the company is focusing on getting growth back and focus is also on margin expansion. Back to you.
Okay, all right. Rima, thank you very much for that. Well, Pankaj Tibrewal is with us, founder and CIO at Ikigai Asset Managers. Pankaj, good morning. Great to have you with us here. Thanks very much. And it's a sort of incredible sort of market back at new highs. Lots to talk about. Pankaj, and that note that you sent out, right? I mean, learnings from 2 decades of investing. A fantastic write-up, and I think everybody should read it. You should make it sort of public on your website because it's quite rich in what new investors can take away from it. And one particular bit struck me: self-control in investing, the opposite of FOMO. Our market's a bit out of control right now. How would you read things, Pankaj? Especially in mid caps, smaller caps, especially SMEs, etc. What's going on?
Good morning, Prashant, and thank you for the kind words. On the markets, I think it's an incredible last 3 weeks, from panic to euphoria. We saw Nikkei being sold off almost 20%, and now they are up 23% from their recent lows. S&P is almost 1% away from all-time high, and so are Indian markets now. So it's been complete panic to euphoria in last 3 weeks. But when I look at some of the data points, firstly on the earnings side, I think this quarter was not a great one as far as earnings are concerned. And I look at the data very closely. The NSE 500 companies reported 7% earnings growth on a headline basis. But when you bifurcate it into 2 parts, which is BFSI and the non-BFSI segment, there are about 89 companies on the BFSI segment which delivered 19% earnings growth. But the non-BFSI segment, which is the rest 411 companies, delivered just 1% earnings growth. So clearly there has been deceleration in terms of earnings growth. And our belief is that the first half would be weak as far as corporate India is concerned on the earnings growth because margin base is quite high. The second important part to note is that most of the companies mentioned elections and heat wave as the constraint in the first quarter, to the extent that elections were mentioned 1,700 times in the NSE 500 con calls, and heat wave was mentioned as more than 100 times in the con call. So clearly we have to see that how the second and the third quarter spans out. Third important point to note is that the government capex is down by 35% in the first quarter. That means for the remainder of the 9 months, government needs to spend 1 lakh crores a month to cover their budgeted numbers, which looks to be a tall task, not an impossible task, but a tall task. And hence you have seen some sell-off in the exuberant names or pockets of excessive valuation, like defense, like railways, like infrastructure. Some of the capital goods have given away 20 to 25% returns. So my sense is that over a period of time, we need to avoid the pockets of exuberance. There are certain segments which probably are looking reasonably okay, but we need to navigate next 6 to 12 months carefully. I think this is a period where you should minimize risk rather than maximize return. I think that should be the trend. Also, one interesting point which we are noticing is that the breadth of the market has started to narrow down. Over the last 20 days, we have seen large caps doing slightly better than the mid and small caps, and sector rotation is happening at a faster pace. So I think a diversified portfolio will be the order of the day, and risk should be managed in a fairly decent manner. Second, on flows, I think some interesting data points there to notice out. Though domestic flows have been extremely strong over the last 4 years, we have seen about $100 billion of domestic flows. But something to note interesting out there, in the first 8 months in calendar year 24, 80,000 crores have come into sectoral and thematic funds out of the 2 lakh crores on mutual funds. This is a slightly worrisome sign because people are chasing returns. And don't forget, Prashant, that 50% of the mutual fund investor base now is 3 years old. That means they have seen one-way market. How they will behave when they see a 12 to 18 month sideways or a consolidating markets is yet to be tested. So don't take domestic flows for granted, on which the entire thesis and narrative is getting based on.
Pankaj, hi, good morning, and great to have you on the show. Good to be listening to your viewpoints. Just a word on thematics, right? Let me argue for the other side as well. Very true that people are chasing returns, but it's also the asset managers, right? Because that's where you can create new products. That's where you can bring new stuff to the market, add a little bit of marketing razzmatazz. So that's what's getting sold, and that's where the money flow is really coming in. But yeah, absolutely take your larger point. There is something to be a little concerned about, depending on how people are bifurcating their portfolios. But on to the point that you just made about this is the time to minimize risk and not chase returns. So let's talk about maybe profit taking. Nobody talks about profit taking. The time to sell, the time to lighten positions a bit. I know that across the mutual fund industry, I think cash levels have been rising 6, 7, 8%, some even higher. But at an individual level, where should one start trimming positions?
Surabhi, I think one regime change which we are seeing in the market over the last few months is that momentum and value, which was the classic trade for the last 2 years, 2.5 years, is slightly taking a backseat. And quality and some of the names on FMCG consumer are coming back. So that's a rotational trade or a regime change we are seeing in the marketplace right now. On the cash calls, I think from a risk minimization, I've always believed that cash is a double-edged sword. You can get one trade right one way, but to get both the trades right, it's a very, very difficult task. Maybe you may be very lucky. I don't possess that skill set at all, and I'm very realistic about my abilities in life. And I believe that portfolio construction is the key to survival in the markets. Over a period of time, nobody can predict future. I think Fed doesn't know what the interest rates will be or inflation. I think only thing which is in our control is our own temperament and emotion. And the second thing, how we construct a portfolio. At this stage, I believe that a concentrated portfolio could be at risk. I think a diversified portfolio across sectors and stocks and across good quality companies should be the order of the day. We should be taking out money from companies where there has been excessive valuation, where there is narrative at play. Many places we have seen that, markets are pricing in irrational exuberance out there in terms of expectation. And clearly, if you do a reverse DCF in many names, you will find that the valuations you can't justify. So I think rather than getting carried away by the momentum at the near place, we should take a fundamental call and trim positions where the valuations are in exuberance there.
But I know, Pankaj, I know you can't get into stocks, but at least name the pockets, for the benefit of viewers. When you say excessive valuations, pricing in the moon and back, what are you referring to? Is it capital goods? Is it defense? Is it PSUs? So some idea and some hints that, viewers can perhaps hold on to.
So Surabhi, look at this data point. This railways and defense combined market cap is 18 lakh crores today. 5 years back, this market cap was 1.2 lakh crores. So from 1.2 lakh crores, you have gone up to 18 lakh crores, which is 15x, which means 67% CAGR over the last 5 years. When you look at the profit growth, it's about 21% CAGR. So you have clearly seen expansion on multiples, led by various narratives and delivery by the companies. But is it very high? Because finally, most of these businesses depend on one customer, one policymaker. Should it demand such kind of valuation is the question we need to ask. So I believe that there are certain pockets like this. I'm giving you one example where from 1.2 lakh crores, the combined market cap has moved to 18 lakh crores. Profits have not kept pace. They are at 20% CAGR. Market cap CAGR is 67%. So similarly, in many other pockets, probably when fundamentals, stock prices are running ahead of fundamentals, we need to take a reflection. and try and trim position and manage risk out there. These are the pockets where I mean by excessive valuation.
Okay, very, very helpful. Thank you so much for spelling that out, Pankaj. I think it's it's important to listen to prudent voices at this point in time and not get completely carried away. Great having you on the show. Thank you for making time for us this morning. Well, that's a view from Pankaj Tibrewal. The market, meanwhile, has turned negative. Just keep an eye out on the screen as well, about 35 points lower on the Nifty. And the banks are not really stepping up. That's the issue. The Bank Nifty is falling. Some of the financials that had rallied yesterday, they're correcting. So right now, it's a bit of a sell down that we are looking at. Well, let's continue with the corporate conversations then. The next company on our radar is Garden Reach Shipbuilders. The stock has surged more than 100% this year so far. The company has reported a strong set of numbers for the first quarter. Revenue growth has been quite robust. Margins, of course, dipped a little bit in Q1 because of the high cost of materials. So to talk about the business outlook going forward, we have with us PR Hari, Chairman and MD at Garden Reach Shipbuilders. Mr. Hari, thank you so much for joining in. Great to have you on, sir. So I'll start with the guidance that you've spelled out, and it's sort of 25% growth. I think that's what you're expecting this year. Let me just quickly rewind back and check the order book. I think as of June, you told us that your order book was just above 25,000 crores, 25,200. So tell us now, we're in the second quarter. How aggressive is the bid pipeline? How much will you grow this order book by? And are you still confident of delivering 25% revenue growth?
Morning, Surabhi. Thank you. Yes, our order book currently stands at 25,231 crores. And 90% of this order book comprises of shipbuilding orders. That is our main business vertical. And balance 10%, around 10% come from our other verticals like marine diesel engines, ship repairs, and so on. Now, when we started the financial year, our order book was 22,600, approximately 22,600 crores. And the order book is actually increased. Now, this order book, I'm just coming to the shipbuilding segment. This order book of shipbuilding comprises of 29 platforms for 10 projects. 4 of these projects are being executed for the Navy. And the balance 6 projects include 3 export orders, including for a commercial order that we got from a German client. Now, this is the current order book. In the next 3 to 6 months, we are in the negotiation stage for concluding another 4 contracts for 20 platforms. This is the short-term future that I'm indicating. Now, we also bid for the next generation corvette project for the Indian Navy. This is a very, very high-value order. The total order value is a 8-ship project, and the AO in itself is around 36,000 crores. And we expect the bid results to be declared in another 4 months. In addition to that, the Navy is also expected to come out in the next 1 year RFPs for 2 multi-purpose vessels, and the Coast Guard is likely to come up with an RFP for 6 next-generation ocean-going patrol vessels. So I've just given you an overview of our current order book and also what is likely to be in the immediate future.
Right. Got that. Mr. Hari, hi, good morning. Prashant here. There's a lot of things to get our head around. So let's just take it one by one. When you say platforms for our viewers, you essentially mean ships, vessels?
Yes, absolutely correct. Ships. When I said we are building 4 platforms for our German clients, that means 4 multi-purpose vessels for a German client. And similarly, we are, to answer your question, yes, platforms means ships.
Okay, because you do frigates and ships, all kinds of things, right? Yes. So just a quick thing. So you're saying in the next 3 to 6 months, you are close to concluding orders worth how much? What is the size?
The size is approximately between 1,500 to 2,000 crores. The contract negotiations are currently in progress. We have been declared L1, and we expect a conservative time of 3 to 6 months for conclusion of these contracts. These include an export order also.
Got it. 1,000 to 1,500 crores in the next 3 to 6 months.
Between 1,500 to 2,000 crores. The negotiations are currently in progress.
Okay. The bigger one is going to be that corvette negotiations with Navy, right? Which you said in totality is about 36,000 crores.
It's a 8-ship project. In totality, it's around 36,000 crores. It will be 36,000 plus crores. And this order will be split between 2 shipyards, with the L1 shipyard getting 5 ships, and the second shipyard getting 3 ships. So we stand a good chance of getting this order, considering our experience and expertise in building corvettes.
So 6 and 2. 6 and 2.
5 and 3.
5 and 3. Okay. But so you will get something, right?
That's what we are expecting.
I mean, you could get 5 or you could get 3, but you are assured of.
We'll definitely be targeting 5.
Okay, and this will conclude this year in FY25?
See, in a normal order processing stage, from the time the L1 is declared, then the contract negotiations happen. So I don't expect the contract to be signed during the current financial year, maybe in the first quarter of the next financial year.
But sir, just to complete this order book picture, how much of the order book is naval right now as a percentage? And now that this big contract is coming up, I mean, realistically speaking, how will that number move? Just trying to understand. And then you're doing ocean-going vessels and platforms, for instance, for this German entity. So just want to get the order book mix between naval, non-naval, and some of the export orders to understand where you get better margins. I'm guessing some of the export orders fetch you better margins?
See, I'll just give the approximate breakup now. As I mentioned, our total order book, around 90% of the total order book comes from shipbuilding. Of this 90%, if you just take the shipbuilding orders, around 85 to 90% still come from Indian domestic warship building orders. That is our primary focus. I'll just give you from a different perspective. Now, you see a commercial ship of 10,000 ton, let us say, displacement, and a warship of 1,500 ton displacement. The order value for the 1,500 ton displacement warship is going to be at least 4 to 5 times more than a commercial vessel. But commercial vessels, definitely the margins are more, and the number of commercial vessels, the platforms are likely to be more. So it's a balance between both. So to answer your question, around 85 to 90% of our shipbuilding order book is comprising of domestic warship building orders. That is both from the Navy and the Coast Guard. Currently,
and is that likely to sustain, sir? Is that likely to sustain at that high level?
Absolutely.
In the next, let's say, next 1 to 2 years, we shouldn't expect a change in the mix, right?
No, we don't expect a change in the mix. Maybe I would even take it further. By next 1 or 2 years, I will take it to the next 5 to 10 years. The same ratio is likely to maintain.
Okay, all right. Hi, Mr. Hari. Good morning. Let's get a couple of numbers out of the way. Last year, you did around 3,600 crores. So this year, you end at around 4,500 crores. Would that be a fair estimate? And also, I wanted to reconfirm that because you've had such a strong start to the year. And what is the margin we should work with?
Thank you, Nigel. Pleasure interacting with you again. Yes, I had mentioned that we'll be maintaining a CAGR of around 25%. We're very confident of maintaining a similar growth. In effect, what you're telling is correct, plus whatever figure you mentioned, plus that figure we'll be able to achieve. As far as the margins are concerned, as what Surabhi brought out, there has been a slight dip in our margins, but we are very confident of maintaining margins that we had, PAT margins, what we had indicated earlier, plus 8% in the coming quarters and years.
All right. So PAT margins would be at 8%. Got it. Mr. Hari, also, if you could tell us what is the current utilization levels? I recall you telling us that the shipbuilding capacity was around 20 warships and you were looking to increase it to around 24. Has that happened? And what about the capex that you'll be incurring for this year?
Thank you. Very interesting question. Yes, I wanted to make a statement that our shipbuilding capacity was 20 ships, but considering the current order book and the expanding number of platforms that we are going to execute, we have invested, we have done capital infusion and enhanced this capacity to concurrent construction of 24 ships. As of now, our current construction capacity is for 24 ships. What we also done is segregated the ship repair operations out of our physical premises. We have taken a facility outside our premises and we are doing a complete ship repair operations from that facility. In addition, if we get more orders, we also adopted and successfully adopted a strategy of public-private partnership where we utilize the spare capacity of capable shipyards to undertake construction of ships. As far as capital infusion, yes, we have been steadily pumping in the capital. We had undertaken a massive infrastructure augmentation during the mid-2015, 2020 period. After that, every year we infuse capital in a strategic manner, which means basically to revitalize the facilities, procure new equipment, new technology equipment. So steady capital infusion is happening, and current capacity stands at 24 ships, 8 large and 16 small and medium ships.
Right, and this will stay at 24 after the expansion, Mr. Hari, right? I mean, this is
No.
Yeah.
No. Again, an interesting question. What we felt was we will go in a phased manner. We have also taken a facility on a strategic partnership on the West Coast, which currently is not utilized yet. So what I mean to say is that 24 ships within our premises, ship repair facility completely segregated, public-private partnership both on the West and East Coast. And we intend increasing this capacity in the next 3 years to concurrent construction of 26 ships. That is captive facility.
In the next 3 years to 26 ships.
That is within our premise, affirmative.
Got that. Just two other brief questions on the revenue thing, just to stretch that time horizon a little further. I think you had indicated you intend to get to 10,000 crores in revenues by FY28. I mean, it's a slightly away target, but you will have visibility for that. Are you sticking with that as well?
I would like to make a very slight correction. What we had mentioned was to touch 10,000 by 2030. That is our stated vision, to touch a revenue crossing 2030. And if you just see our current order book, the current order book, including the small orders that are on the anvil, I mentioned about 1,500 to 2,000, they all will get exhausted by 2029. And if we get the next generation Corvette order and a couple of big orders that are coming from the Navy, we will definitely be able to cross 10,000 threshold by 2030.
Okay. All right. Fair enough. Got that. And, you've also started, you got into weapons manufacturing. Is that how do you see prospects for that? Or do you think it'll largely be shipbuilding and ship repair? Or is it a fast-growing segment?
See, yes, it's true that we have got into manufacturing of weapons. This is a segment that we see opportunities, adequate opportunities in the future. But our primary focus, I repeat, will remain on domestic warship building with ship repair as a subsidiary segment. Considering that weapon manufacturing is an attractive area where the returns are likely to be high, we will provide adequate impetus on this area also. We expect more orders on this segment in the coming years.
All right, okay. We'll leave it there. Thank you very much, Mr. Hari, for joining us. And, it's always great speaking with you. Thank you very much for being here on CNBC TV18. Markets down about 35 points now. And we're at about 24,980 at this point in time. I mean, Garden Reach is up about 0.5%, but it's come off from its highs of about 2,800 to the 1,700 levels where it is trading, 1,800 nearly, where it is trading at this point in time. We'll take a quick commercial break here and we'll come back with the management of Gravita India. That's the next management. Interesting conversation with Naveen Prakash Sharma, ED of the company. Stay with us.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
See that Chetak is now close to about 18% market share. or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March,
Welcome back. Well, keep an eye out on a few stocks. There is this buzz or this hope that NSE will list in the future. And that's why you have IFCI. I think you normally have a sentimental rub-off out there. So that stock as well is spiking up. It's moving on large volumes. I'm presuming it has something to do with this. And also you have New India Insurance. And I'm just looking at the shareholding pattern. And they have shares worth close to around 4,000 crores at current reckoning. So that's another stock that you should be keeping on your radar. It explains why that stock is spiking up as we speak. Up close to around 2% or thereabouts. They have roughly around 70 lakh shares. And at current market price, well, it could be worth close to around 5,000 crores. So a couple of these names are moving. I think GIC as well has some stake in the company. So IFCI, you have New India Insurance, GIC, all of them buzzing a little bit as we speak at the high point of the day. Well, Gravita, that's the stock in focus. The street is bullish on recycling industry. The stock has surged more than 90% in this year. In fact, Motilal Oswal, they have initiated coverage on the stock with a buy rating. To discuss this and more, we're joined by Mr. Naveen Sharma, the ED of the company. Hi, Mr. Sharma. Good morning and good to see you. And as always, well, give us a couple of basic numbers first. There are a lot of triggers, a lot of industry tailwinds as well. What's the volume growth you're looking at for this year? And break it up for us, how much you're expecting in your core business, which is your lead business and the non-lead business.
Morning, Nigel. We are growing with a volume growth of almost 25% CAGR, and that will be a rolling average for next 4 to 5 years as well. While on the PAT side, we are going at the rate of 35% CAGR. Currently, our lead business is almost 88% of the total, which we plan to reduce in time to come to 70%. And we are also entering in rubber recycling, lithium battery recycling, and also increase volume in non-lead like aluminum recycling business. So altogether, we will keep continuing this rolling average of 25% CAGR volume growth in time to come.
Mr. Sharma, from 88%, lead will come down to around 70%. By when? Because I recall you telling us steel and the iron business, that will gradually come in, I think, in the next year itself. That's for FY 26-27. So by when does it come down to 70%?
Right. So it will be coming in next 3 years, the steel and paper business, but the other business, rubber recycling and volume growth, which is coming in aluminum business and lithium business, that will certainly reduce these number initially to 80% and later, maybe third and fourth year, it will come down to 70%.
Got it. All right. How big can the aluminum business scale up to, Mr. Sharma? I ask you this because one of the triggers is aluminum alloy derivative is to be launched on the MCX. Explain to us, how does this benefit you? Maybe, the raw material you procure and then you can hedge it at the current price itself once this is launched. Explain to us what is the benefit and how big can the aluminum part of your business become?
Right. So this aluminum business has an equal potential to grow like lead business. And when it comes to aluminum alloy derivative on MCX, this will certainly help in price discovery for auto sector. As of now, because auto sector uses secondary aluminum alloy only, 90% demand from auto sector is of the secondary alloy. And most of the raw material is from import. So as of now, a recycler cannot hedge their material. Auto ancillaries or OEM cannot hedge their raw material supplies. So it will help three ways. Auto industry can hedge material. Recycler can hedge their raw material scrap, which they are mostly importing. And there will be price discovery as well. Because as of now, being a secondary material, there is no such price discovery and there is a various variations in the price. And one more interesting thing, Nigel, which is coming in this sector is EPR on non-ferrous metal. Government of India has announced that there will be a draft rule from April 25, wherein aluminum, copper, and zinc, three metals will also come under EPR. So there will be a mandatory 5% non-recycling material content in the finished goods. So it will increase a demand of around 200,000 tons of aluminium from the secondary segment. So it will also give value addition for the secondary material as compared to primary materials. So altogether, I foresee that this segment will grow with the help of EPR on non-ferrous metal, by hedging through MCX, by launching this derivative of aluminium alloy.
What is the capacity currently in the aluminium part of the business? 70,000 approximately, and you're expecting to increase it by multiple times. So where is it headed?
So as of now, our capacity is around 40,000 tons, and we can certainly increase in no time because we have an in-house facility for adding capacity. We have our project division, so we can add it to 70 or 80,000 in 2 to 3 years based on the outcome which is coming by way of EPR and MCX derivative launch.
Okay.
Right. Mr. Sharma, hi, morning. The markets, of course, have loved the story of Gravita because stock is up. Stock has doubled from May of this year, basically in the last 3 months. It's a doubler, so one of the best performers. Could you tell us, just two basic questions for the uninitiated who've not really followed the stock that much. Have there been specific regulatory changes which have kind of driven a marked shift for you and acted as a tailwind? And second, what are some of the risks, since you are in the recycling business, which is, of course, what needs to be done, recycle and reuse. So these are big buzzwords around the globe. But are there any risks as well on the regulatory side as you see it? Go on, sir.
Hi, Prashant. So basically, of late, there are various regulations which has come. Government has come with EPR, battery waste management rules have come. So lead business has grown multifold because of that. Parallelly, government has come on tire recycling policy, tire waste management rule, plastic waste management rule, oil waste management rule, and e-waste management rule. So all these rules have shifted a lot of, we were telling always that this sector is informal sector to the extent of 65 to 70%. So there is a great shift from informal sector to formal sectors. So, and Ministry of Environment has brought various regulations, and they are also bringing, as I mentioned earlier, that they will bring the same regulations of EPR on non-ferrous metals. So it is altogether a sunrise sector, and with these regulations get implemented, EPR penalties or ECs are being implemented, it will grow multifold. So I do not foresee any such other threat to this industry, though this is being a hazardous waste. So we, being a technology provider, also have edge over other competitors because we have in-house technology and we are exporting our technology of recycling to various countries. So we do not foresee any threat to this sector, and it will keep growing because of ESG requirements, sustainability, and zero carbon regime which is coming in time to come.
Okay, all right. Final question, sir. We're running a little short on time, but help us out with a few details. What is the current consolidated EBITDA per ton, if you can help us out with that number? And what should be the margin we should work with from here on?
So in rupee terms, it is 15 to 17 rupees a kg, and in percentage terms, it is around 9 to 10%.
15 to 17 rupees per kg, where is it headed?
It will be headed with a growth of around 8 to 10% as we add to value-added products further, because as of now our VAP product is 42%, which we plan to go to 50% in time to come.
All right. We'll leave it there. Thank you very much for joining us. Appreciate you being here, and interesting business. And you've got all the tailwinds going for you. I mean, as they say, the stars align, and they have aligned for your business, and it looks pretty good. I mean, at least the overall argument that you can make for the business and the continued growth, I think, remains pretty solid. But stock's done very well. As I said, 3 months, stock's doubled. Shriram Finance is the next management of the program. The stock has surged more than 60% this year. Again, for Shriram Finance, the last year and a half, 2 years have been a story of complete re-rating. Citi, the brokerage, is a buy rating of the stock. They believe Shriram Finance is defying seasonality and peer trends. Let's talk more about this. Mr. Umesh Revankar is Executive Chairman of the company. He's with us to take some questions. Mr. Revankar, good morning. Thank you very much for your time, sir. Prashant this side. So, as we always do, talk to us a little bit about how the quarter so far is panning out across segments for you, sir. Better than what you thought, what we spoke about at the end of the last quarter, or in line? And if you can sort of help with some numbers, that'll be helpful.
Good morning. This quarter, if you look at the business growth, or rather the credit demand, July was little, we had certain headwinds because of excessive rains in certain location. But August, it is improved. So the monsoon is spread across, and that's really helping. The credit demand has improved, plus sentiments have been very positive. So I believe the September would become much better. And also the festive season starts with Ganesh Chaturthi. And normally it's the indicator. Ganesh Chaturthi is time where people do buy new vehicles or new machineries in certain part of the country, not everywhere. Some people postpone it till Dasara. But I think Ganesh Chaturthi being the first week of September, we should be able to do quite well. So to some extent, that manage the July numbers. So overall, I think the numbers are much better, and it is. I think it is continuation of the first quarter.
Okay. Morning, Mr. Revankar. I'm coming back to the growth numbers in just a bit. Because the La Nina seems to be really working in our favor, at least the August rains seem to indicate. But what about the cost of money? That seems to be the real rub, isn't it? Has it increased for you, or has it not increased because the CP market doesn't seem to be affected?
No, cost has not really increased. If you look at our first quarter number, we did had Q on Q, there was an improvement in cost of borrowing, in the sense it was around 15 basis point improvement. So the same trend is continuing this quarter also. We are not seeing any challenges in raising resources, and it is quite...
No, if you could just explain, the Reserve Bank had increased risk weights on bank loans to NBFCs. Are you saying that that was not a problem because you didn't go to the banks at all? You picked it up from the market. Is that why? How is it that you were not affected by the rise in risk weights?
See, basically what happens is, depends upon the individual NBFCs. Many of the NBFCs became over-dependent on bank. So maybe 60-70% of their borrowing or liabilities were coming from bank. But in our case, we were not. So we have equal spread between a capital market and we are a deposit-taking NBFC. Plus, we are able to raise from the bank, and private sector is one area which we are able to create portfolio and do the securitization. So we are very comfortable as far as the raising resources are concerned. So it is not really going to have any impact on us because we have wide sources of raising resources.
Sure. Sir, just to go back to the point on growth, and you're sounding very optimistic with the onset of the festive season. I think you're looking, correct me if I'm wrong, but I think you're looking at 15% AUM growth this year. Just break it up into segments as well, because the MSME segment was really fired up for you, but gold loans are also doing well, two-wheelers, passenger vehicles. I mean, a lot of sectors are really fired up. So how do you expect the trends to be? And this growth is coming, at least as of Q1, at very steady asset quality. So just expand on this. I mean, the growth number, and whether at the margin you're seeing any concerns in terms of delays or delinquencies at all, because we're hearing that from some segments like MFI, etc.
See, basically what's happening is, as far as MSME and gold is concerned, we are reaching to new geographies, because earlier these facilities were mostly in the south and were not much in the rest of the country. We are creating the facilities, or we are reaching out to more bigger geography for MSME and gold. So naturally, the growth will be higher year on year for us, because we are adding more number of outlets for this activity, and it will keep growing. And the two-wheeler part of it, two-wheeler is growing at a double digit, 12 to 15% year on year. And that is also helping us. Both units and price both have increased in the two-wheeler. So that's definitely help us to grow more than 15%. And as far as the passenger vehicle is concerned, there is a lot of activity happening in the private participation in the public transportation, because the investment by the PSU, that's not PSU, public sector, that is the government investment in the transportation is coming down over the period, and therefore there's more demand for private people participating in
private
the
cars.
transportation. So that is helping us to grow. So these are all natural growth that's coming into the business.
Got it. So it explains the numbers, and you're still confident. But just the latter part of my question was: are you confident of continuing these growth rates at pristine asset quality? Because I think your NPAs did not budge at all. About 5.4%, 5.39 gross NPA. Will it remain here, or can you be even more confident of maybe even lowering NPAs by the end of the year?
The gross stage 3 would definitely improve from 5.39 to further. What happens is the entire environment has been very positive. Over the last 5-6 years, if you look at the more adherence to the credit bureau numbers, and everyone is getting tracked, everyone has some credit score, and also there is a discipline built. And when we move from 180 days to 90 days, we have been able to communicate to the customer. And every stage improvement has been communicated to the customer. So customers have been a little more financially more disciplined than what they were earlier. But even then, the credit cost for us were around 2% earlier. It will improve by around 10 basis points now. That's all. So there is not big improvement in credit cost per se. But if you look at the gross stage 3, where the awareness was more important to the customer, that has been provided. And therefore, it is improving Q on Q. I think it will continue to improve for at least another 2-3 quarters, because environment has been very positive.
Got it. Mr. Revankar, would you want to up your growth forecast then? Even in the first quarter, you did 21%, although you guided for 15%. And now you let it slip that you will do more than 15%. So is it closer to 20%? What can we work with?
It will definitely more than 15, but I don't want to put a number on the growth right now. But definitely it should be around 20, because we have been growing. In first quarter being good, it should definitely help us to grow at that level.
Okay, I wanted to ask you, the governor made a reference to this unified lending interface. I mean, he's basically speaking about account aggregators now, coming online. Has that made your asset quality superior, your due diligence superior? Do you all use account aggregators?
No, it is a work in progress. We are yet to start using the same. But I think it is going to take time, and it is because this kind of information being available, typically if you look at the fintech companies, they were providing this additional services and along the account aggregators. Now, the usage of account aggregator and sourcing the information from them is something which we have been doing, but not the fullest extent. So that will make, see, one thing is using this, information and building your credit rule engine accordingly. That's one part of it. And the second is the personal interface, what we have with the customer. That is also very important. We believe we need to have both. We can't be just depending on one platform to focus on, because it's after all, you are not just distributing, you are underwriting alone. So that's very important.
No, God. Yeah, I get your point, sir. Personal interface, which you all have built over the years, will be most important. Very quickly, we are being told to wind up. So just 2 numbers. What kind of a margin guidance can you give us? And what kind of credit cost guidance?
The margins in the first quarter, it was 8.79. We should be anywhere between 8.8 to 8.9. That should be the margin. And credit cost, we should be just below 2%. So maybe 10 basis point lower than the 2%.
All right. This is going to elate your investors. Thank you very much, Mr. Revankar, for joining us, and a very happy festive season for you. It's kicking off in the first week of September.
Thank you.
All right. Interesting chat there as always. Mr. Revankar, thank you for joining us. We'll take a quick break here. We are back. Commodities in focus with Manisha when we return. Stay tuned.
there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market off the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform. As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Investing. All right, welcome back. The market's down about 20 points, so it's very, very quiet. Mitesh Thakkar is with us with what he'd want you to do in terms of individual trades. Mitesh, morning again. What's popping up on your screen? What trades? Tell us.
So, Prashant, I have IOC as one of the recommendations. I think that's doing well after about 4 or 5 days of sideways activity. Buy here with a stop at about 172.5. Look for a target of around 183. And the other one is Biocon, and I would want to see this stock get past 360. While the chart is good, there's some good call option of concentration at 360, and today's high is about 360.5. So I would recommend a buy here about 360.5, and then keep a stop at about 353 and look for targets of 380.
Okay, all right, Mitesh got that. Thanks very much. Well, with that, let's head across to Manisha for a roundup of all the commodity market action. Manisha, what's catching your attention today?
Well, it is sugar, because after a very long time, we have seen the prices rebound very strongly. So when you look at the global markets, there we're trading at a 6-week highs, and the raw sugar prices have gained up by nearly 11.5% in matter of last 1 week itself. Well, if you look at the prices itself, we did see 17.5 of a low in the previous week. Prices are trading at a 19.7 right now. So that's the kind of jump up that you've seen in case of raw sugar prices. Of course, from the high of this year, which has been 24.5, we still are much on the lower side there. But the fundamentals really seem to be turning around now. One, there is massive fires in Brazil, which is also the largest producer or exporter of sugar. Almost 25% of world sugar comes in from Brazil. And the crop damage in Sao Paulo really seems to be impacting the prices there. The expectations are that nearly 2,000 fire breaks have led to 60,000 hectares of planted cane impact there. The yields can continue to decline there. As of now, the initial estimate suggests that 5 million tons of cane perhaps could have been impacted because of this. And it's not just about Brazil. You have severe weather also in Thailand, which is also the 3rd largest producer and 2nd biggest exporter in the world. So the Thailand yields could be the lowest in last 13 years, also have had their premium come back in case of prices. Come to India then, and the sugar crop is estimated quite on the stronger side this time around. Monsoon is 3% above normal as of yesterday, and that has been supportive for the Indian markets as well. When you look at the crop estimates for 2023-24, the reserves have been higher side at 9 million tons. There's an excess crop of around 3.6 million tons, which the industry has. And remember, India is not exporting. So while we did export a record quantity in 2022 at 11.1 million tons, it has been 6.11 in the season of 2022-23, and India has restricted exports since October 2023. So the markets will continue to look at those numbers as well. Going forward, when you look at the global markets as well, the expectation from USDA is that we are looking at record numbers across. 2024-25 crop is estimated at 186 million tons, which is a record. Consumption is anticipated at 179 million tons, which also is a record. And the closing stock is expected at the 13-year lows. So these are some facts and figures which also seem to be supporting sugar prices in the trade today.
Right, Manisha, thank you very much for that. We'll take a quick commercial break here. On the other side, it's our segment. It's the economy. My colleague Lata will be speaking with Rajesh Kumar, MD and CEO at TransUnion Civil, to discuss retail loan trends in banks and NBFCs. Stay tuned for that conversation.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebration.
Welcome to It's the Economy. The street has been getting a little worried about asset quality of financial companies. RBI was the first to flag it, actually, when it raised risk weights on unsecured loans last November. Since then, microfinance companies and private banks have been showing some signs of stress. My colleague Abhishek Kothari actually calculated the slippages at private banks. And he says after Q1, it rose by 10.9% quarter on quarter. In fact, they have done worse than PSU banks. Some MFIs have done much worse, and that data will run for you. To get an idea of how retail loan growth, that is a quantity and quality, is progressing, I have with me the ultimate guru of retail asset quality, Rajesh Kumar, Managing Director and CEO of TransUnion Civil. Rajesh, good morning, and thank you very much indeed for sparing time for us.
Good morning, Lata. Thank you very much for having me on the show.
Well, you all gave us one report in January, Sibyl, where you clearly showed that both quantity and quality of retail assets was fraying a bit. And quantity obviously was going down because of the Reserve Bank's risk weights. What has been the performance in the first 6 months? Has quantity gone down further, retail loans, and more importantly, quality?
Yeah, Lata, absolutely. I think First of all, there were very definitive interventions from the Reserve Bank for all the well-known reasons in November last year. So that's obviously led to some remix in terms of product composition on the lending side. And I'm going to use the word moderation in some segments and overall a little more conservative or cautious approach overall. But I think there are a couple of factors at play here. A, obviously, the Reserve Bank policy changes, which are very timely and proactive. And secondly, as we all know, the existing credit deposit ratio, where the ratio is still pretty high. So when the ratio is high and your incremental cost of deposits is higher, obviously it means that you're relooking at your product mix in terms of the desired goals on the net interest margin versus credit cost. So almost every lender is rewriting their product mix and the capital allocation for products. So all of that leads to some of the changes that we are talking about in terms of some change in growth rates at a product level. The change, more importantly, I think some people often ask, is there a decline in the retail loans books, etc.? So the answer to that is the growth rates are pretty much intact. Intact in the sense we are still growing. I mean, India has so much headroom for growth. So we are pretty much growing. It's just that the growth rates have moderated. For example, if a product was growing at, let's say, runaway 30%, that would have moderated to a 20% or 10%. And obviously, the biggest drop is in unsecured loans below 50,000 and credit cards as well. So that's the overall trend in the. Oh yeah, one other important point, Lata. So when we talk about growth origination, I think it's also important to look at the trend in terms of quarter on quarter, or for the same quarter a year ago, how is the growth rate, right? I think this is super critical because this sets the direction. I say that also from a risk perspective, because invariably delinquency ratios are a function of how the numerator, that is new delinquency, comes in versus incremental book size. So as the latest quarter growth rates are sharper or lower, more low than the previous quarters, then the growth rate of the overall industry retail book will come down. Again, it is still growing, but the growth rate will come down.
Yeah, I've in fact got your table on newly originated loans, and across the board, one can see the reduction. Credit card in particular, April-June 23, 7.8%, and April-June 24 is minus 29.6. So clearly, there are some people who are pulling back. But what about quality? I guess that is the bigger fear. Retail is still the trade, the go-to trade. I have not heard any banker trying to sing praise of corporate credit just yet. It's a very crowded space. NBFCs, banks, P2P lenders, fintechs, everyone is in the retail trade. So are you seeing in the last 6 months more worsening of asset quality?
Actually, no. I think we have some good news through all of this. I know last year we spoke about some stress in the very small ticket personal loans, etc. But like I said, the timely interventions, there is good control there. In fact, some of the delinquencies are even improving. So first of all, overall on the industry retail book, Lata, I think there is good stability. In fact, if you take auto loans, home loans, two-wheeler loans, all these products, in fact, there's even an improvement in the overall delinquency to start with, the latest quarter numbers. A. B, in unsecured consumer durable loans and credit cards, it's almost the same, or there is a marginal increase in delinquency. But when I say marginal increase in delinquency in some of these consumption products, one has to keep in mind, on balance, two factors. One is we had the severe heat waves in April, May, which definitely affect collection efficiencies. And B, also remember the point earlier that in these products, the new product growth is slowing down, the growth rate. So to that extent, delinquency percentages also will be a little higher, because now you have a situation where for 2 or 3 quarters, the rate of growth of the delinquency or the numerator will be more than the rate of growth relatively of the book size. So 1 or 2, 3 quarters, we will see that normalization process.
Okay, so total number of loans given is less in that category, and therefore the delinquencies as a percentage will show up higher, is what you're saying.
Absolutely, yeah.
Right. Okay, you know, last time in the January 2024 press release that you all gave us upgrade, downgrade numbers.
Yeah.
And, you know, even in prime quality loans, there was the amount of prime was declining. You had a slight increase in the downgrade numbers in September 23 compared to the previous quarter.
Yeah.
Would you be able to help us, you know, whether upgrade, downgrade ratio is in favor of upgrades?
It's absolutely consistent and stable, Lata, between the overall upgrades across the industry. And then when I look at delinquency rates, particularly, you know, within each band, say above prime, prime, subprime, etc., these categories, within those categories, again, it's pretty much stable. And normally, I wouldn't want to kind of worry too much when there is a 10, 20, 30 bips difference. Those are seasonal and they kind of normalize pretty soon. I would only if sustained over 2-3 quarters, the dimension of the change and the direction of the change is negative. The good news is that as of now, we don't see any such trends. Latest quarter, credit cards saw a 20-odd bips increase in delinquency, again expected. And credit cards specifically, I think, is a slightly different issue. There is this growing hypothesis that a lot of the good spends of credit cards have moved to the UPI world. So to that extent, some increase in delinquency in cards is kind of expected. But again, I think there's a lot of normalization process there. And lastly, since we're talking about portfolio quality, Lata, like I said, the latest quarter origination plays an important role in the growth of the book size. Likewise, when we talk about delinquency, I think it's very important to look at two factors. First of all, the early delinquency, right? All the recently acquired books, how are the delinquency trends? Because when the book is new, if it shows early signs of higher delinquency, then we know what we are heading for. Again, good news there. The early delinquency percentages are pretty much stable and consistent across products. Like I said, again, just some 20-odd bips increase in credit cards. And likewise, when I compare different vintages, when over the past few years, when the loan books were 3 months old, 6 months old across products, what was the delinquency, let's say 30 days past due at 6 months vintage, 2-3 years back versus now? I don't see anything alarming at all. Like I said earlier, the theme remains all secured products, good improvement, marginal increase in a couple of these small ticket products, which I think will normalize soon.
Okay. There is one last fear that I want to check with you, that younger cohorts of borrowers are actually borrowing money on their personal loans account or credit card account and playing the stock market. You know, there is enough data that investors in the stock market are of much younger age, and those in FDs and mutual funds are older. Do you notice more delinquency in the younger age groups?
Actually, I haven't seen any marked change on an age cohort, Lata. And as to your earlier point about more investments into the market, etc., unfortunately, while we hear about these from the industry folks, CIBIL doesn't have visibility to the end use. And of course, unsecured loans, it is difficult indeed to monitor the end use. But coming back to your question on the younger cohort, we haven't seen any specific increase in delinquency because of a younger age group. But that does bring me to another point in turn, which is kind of linked. That new to credit, so the overall share of new to credit customers in new originations has come down significantly. I think perhaps because of some of these apprehensions, these are all early trends and I think everybody's watching closely. And so share of new to credit has come down. That for me is worrying in a different way, because given our country's demographics with 70 crores population below the age of 28, very low credit to GDP ratio, very low house, home, two-wheeler, car ownership in India relative to the developed countries, etc. Given all of that, if new to credit comes down, so to give you a number, the share of new to credit customers in new originations used to be 12, 13, 14% about 12 to 18 months back. That has dropped to 6% now. So we're doing half the number of loans that we used to do to new to credit. So clearly conservative. And that's what, when I began our conversation, I was saying there's a little bit bit of resetting of risk appetite and product mix. And typically when you reset your risk appetite, you want to go easy on the small ticket, perceived higher risk, higher return products. A. B, you want to be a little more careful on approval rates. C, you want to be careful on new to credit because there's lesser information to confirm the probability of default, etc. So new to credit has reduced significantly. And that will in turn pass on to the younger population, inevitably.
We are running that data. Auto loans, for newly originated loans, it was 9.8 year ago. Now it's 1.5. I mean, down the line, the new to credit has clearly decreased. So the big worry for the industry should be that growth may be affected because of higher caution and not worsening of quality. Just a very quick, short answer from you. You've looked at credit quality over the years. Are we at worry zone at all, or are we at the best of times?
Oh, not at all. Definitely not in the worry zone, Lata, because in fact, when I talk to all my industry friends, we say over 20 years, the kind of ratios we have seen. So that's why I keep telling everybody, including in my teams now, that whenever we talk these numbers, let's put a column next to it to say, what's the long-term average, right? Yeah. Are we well within the range, or in the long-term average, we are in fact more near the bottom end of the long-term range. So which is good news.
And where are we?
We are more close to the bottom end of the long-term range. Okay. So that's why I am not excessively alarmed. And things like a little bit of an increase in a few products like unsecured, this is the nature of the business. It's a lending business. We are going to see some opportunities. All of us will want to go do business there. It will lead to a little bit of over leveraging. The regulators and the risk management will kind of slow that down. And again, we moderate that. That's a cycle, but absolutely not in the worrisome range at all. Nowhere close to
Okay. Thank you. Thank you very much, Rajesh, for putting investors and financial market experts and regulators at ease. We are at the bottom end of the asset quality problem. So not to worry about asset quality, maybe a little bit of worry that loan growth may suffer because of excessive caution. On that positive note, we wrap up on Bazaar. Thank you very much for joining us. Chartbusters coming up after a break.
Influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
LTI Mindtree rallies as Kotak upgrades the stock to an ad with a price target of 6,200 rupees a share. The Karnataka High Court has also stayed a 378 crore rupee GST demand order on the company.
Tata Elxsi slips after the massive rally that we saw yesterday. Brokerage house Kotak issues a sell call with the target price of 5,500 rupees a share. They are concerned on the valuation parameter.
Hospital chain KIMS slips after a big block deal that sees 2% equity change hands at nearly 2,500 rupees a share. GMM Pfaudler also rallies over 10% after 9.2% equity change hands at 1,350 rupees a share.
NBCC rallies over 6% after it announces its board will mull a bonus issue on the 31st of August.
And it's a strong debut on Dalal Street for Orient Technologies. The stock lists at a 39% premium to its issue price of 206 rupees a share and builds on to those gains thereafter.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me today is Hormuz Fatakia. Well, it's that time of the markets where, in fact, we hope that we reach those all-time highs, but for the time being, a bit of wait and watch, just a few points away. My gut is, though, by the end of today, maybe we get to that level of around 25,078 odd. But Hormuz, interesting times. Tech is holding one end up. Nvidia's numbers data today. So let's see how it goes.
It's a big, big day. This is Nvidia being the street darling, the move that the stock has seen. All eyes on Nvidia after the bell tonight, so early hours of Thursday morning. And yes, IT is the one that is holding on to the gains in today's session. What is not doing so well, though, is realty, metals, all of these rate sensitives that had seen moves earlier in the week. They are the ones that are being a bit of an underperformer in today's trading session. But of course, it's the Nifty Bank expiry in today's session, so we'll keep an eye out for that as well. And as Nigel just mentioned, towards the close of trade, maybe we might see that move towards 25.78. But the one pocket that is not quiet, though, is the primary markets. And we have another IPO that's opening today.
Well, that's right. Ecos India Mobility and Hospitality. Well, they are coming out with an IPO of around 600 crores. The issue opens today. It ends on Friday. To talk more about the IPO plans, the future plans, we have with us Mr. Rajesh Lomba, who's the chairman and MD, and Aditya Lomba, the joint MD of the company. Good morning, gentlemen, and welcome to the show and welcome to the stock markets. The issue opens today. In a couple of weeks, we'll have you all listed. But let's understand a couple of aspects and about business. Tell us about the total TAM, the total TAM that you all are focusing on for the industry that you all are functioning in. And as of now, I believe there is a part that is organized and unorganized. Break it up for us. And how do you see this evolving? Industry dynamics first.
Thanks for having us here. If you look at the total target audience that is there for this this kind of business,
yes.
If you look at the industry report that's been published, it places it around 80 to 90,000 crores is the total addressable market which can be there for this business.
Okay.
If we were to look at, and this typically it's been a very fragmented business. It's only lately that it started to organize over the last 8-10 years. And so currently, if you look at between chauffeured car rental services and employee transportation services, we would look at around 20% of the market would be organized. The rest would be unorganized.
And a couple of years ago, how much was it? Was it less than 10%, 10, 15% that's moved to 20%?
Yes, I guess pre-COVID, it was lesser. It may have been around 10%.
Okay.
Yeah, but right now, as per the industry report, it should be around 20%.
Interesting. I was just reading about your business, and there's this increased focus on premium vehicles due to the customer preference that has increased for this. Would you share a number as to how much of your total fleet is premium vehicles, and would you plan to scale that up as the year goes by as well?
So over the last 2 years, if you would see between FY22 and FY24, our share of the premium and luxury as a percentage of total bookings of our chauffeured car rental services would have gone up from approximately 30% to approximately 40% over the last 2 years. So what we're seeing is a market trend wherein where people are not hesitating to spend a few hundred rupees more to get a better quality of service, better ambience, clean car, a trained chauffeur, safety aspect, very important. So this is what we are seeing in the chauffeured car rental business.
What's the current fleet that you guys have currently?
Currently, we have over 12,000 cars on our platform.
And how much of that is premium?
If you were to look at premium cars, so premium, I would want to break it up. So if you look at premium, premium is more in the chauffeured car rental business, right? Employee transportation business is mostly economy, So if you look at in the premium part of the business as such, if you would look at, I would say around 25 to 30% would be the premium fleet.
Okay, 25% of CCR?
Yeah.
All right. You also said 12,000 is total fleet size. How much of it is owned? How much of it is taken from vendors?
So maybe you could just explain about the the business as such. That in our in eco-mobility we have two flavors of the business.
Yeah.
One is the chauffeured car rental business, and one is the employee transport services business,
Which has been going up as a percentage of the contribution.
Yes. And employee transport businesses typically, we are doing that in about 10 cities where, maximum call centers, global capability centers, KPOs, BPOs, they are the ones who are having their presence with large campuses. Their sites are operating over there. And they basically provide home office, home commute to their employees over there.
Got it.
And the chauffeured car rental business, we are right now offering in 109 cities across India. And this is typically corporate users who are, going for meetings, or they're going to attend a conference, or they're going for office visits, etc. And they are basically using it for airport transfers or intra-city travel, or maybe going intercity road transport. So basically, that business is mostly catered to the chauffeured market, corporate market, as well as we also have event transportation for conferences, delegations, etc. And then we also have travel agents and leisure customers who use chauffeured car rental business.
Okay, so ETS was around 30%, mid-30s, which has gone to 50%, right?
ETS as of last year would have been around 60%.
60%. And how do you see this mix evolving now between ETS and CCR?
If you look at last more than 25 years, it's been cyclical. Some years ETS tends to go up, some years CCR. Our focus as an organization has been equally on both.
Okay.
That's there.
Got it. Just one more point I want to ask you. You have the fleet size is 12,000, right? Yeah. Is what you said. Yeah. How many of them are owned?
750 cars are owned. More than 12,000 are
asset
there.
Light.
Yeah. So it's an asset light model, and it was earlier. It was more out of the need because we've had more demand than we had capital to put in. Mm-hmm. So this is a solution we came up some 15 years back, but the model has very well settled down now, and we think this is owning between 5 to 10% cars is the sweet spot that we should be continuing.
So you would like to stick to that 5 to 10% number when it comes to
That's what we have had last so many years. It's always ranged between 5 to 10%.
Your revenue mix, most of it comes from your core markets being Bengaluru and the Delhi NCR. Yes. Is there a plan to scale up in other cities as well, say the tier 2, tier 3 towns? And what kind of growth are you anticipating from there, if at all you do plan on scaling up there?
See, that the tier 1 and the other larger cities are actually the core demand, where the core demand gets generated. That's where all the business, the economy is there. So we would see that, we feel that these tier 1 cities would continue to generate the majority of the demand.
Okay, all right. Final question before we let you go. On listing, we'll try to push you a little bit more for numbers. But I'm looking at your profitability. It's been improving by a couple of basis points. Currently, it's in the mid-teens vicinity. Is there a tailwind that still exists that you can push the margins up? A few years ago, you were doing 12%, which has moved to 16% odd. Is there enough headroom to move up even from here? Not asking for a number, so regulators are okay, as well as your bankers. But what do you think?
No, so we have, there are various aspects of the business, and we feel we have a lot of headroom to grow in terms of how we've been growing as part of our growth strategies, to go deeper and mine our present customers who are majorly, over 42 Fortune 500 companies, over 60 BSE 500 companies. So we feel there's plenty of headroom within them to grow, and the growth within the same companies happens at a zero cost of sales and marketing and customer acquisition. You understand?
Indeed. So there is basically a tailwind, and there is a possibility that margins could improve as well from here on, despite the improvement that we've seen.
So
directionally, it's northward.
What we are seeing in the last 2 or 3 years, yes, we have been seeing a growth in the margins also, but we want to make sure we leave enough on the plate for our vendor partners also, and not push too too much towards that extent, while at the same time the way we run our business in a very optimized, efficient and keeping control on our costs, we expect to keep doing the same.
As you're keeping your vendors in mind, I'm just keeping the shareholders in mind as well, because sometimes, when a company comes to list, suddenly there's a bit of a spurt in margins. We just want to understand that sustainability is there, which you've answered that point as well.
All right, gentlemen, we'll leave that. Thanks a lot for joining in, sharing with us your business. Good luck for the IPO as well. We hope to speak to you again on listing day as well.
Thank you so much. Thanks for having us.
Thanks a lot.
Just want to alert our viewers that most of this is the OFS, so no money comes back into the company. Most of it will be taken by the selling entities as well. Those are the broad details that are up for you on the screen. Well, time to slip in a short break. Come back, continue to focus on markets as well as on stock-specific action. Don't go anywhere.
जब वो किसानों के हितकारी बिल जो वापस लिए गए यहाँ पे जो फार्मर्स प्रोटेस्ट हुए, वहाँ पे लाशें लटकी थी, वहाँ पे रेप हो रहे थे। किसानों के हितकारी बिल जो वापस लिए गए थे, तो पूरा देश जो है वो चौंक गया था। और वो किसान आज भी वहाँ पे थे। वो बड़ी लंबी प्लानिंग थी, जैसे बांग्लादेश में हुई।
Investing.
Welcome back. As we speak, the markets have crept up a little bit from the lows of the day. In the initial 30 minutes or so, the markets were down close to around 40 points. Everyone's wondering whether or not it's going to be a bit of a sketchy situation. But for the time being, there is a recovery. The Nifty Bank hasn't got past that 51,300 mark, but it still hasn't broken the 51,000 mark as odd. So I will view things positively. I'm a little bit optimistic about today's session. Let's get in Soni Patnaik from JM Financial, who joins us on the show. Hi, Soni. Good morning. Hope you had a good first hour of trade. Tell us, how are you approaching the Nifty Bank from here on? And then we'll get to your picks.
And good morning, Nigel, Hormaz. Thank you for having me on the show. I think, Nigel, I would agree with you. Even I'm a bit optimistic. Nifty has been holding quite strongly around that 25,000 levels. It's forming a good base, we can see. So there's a possibility that Nifty can test 25,100 to 25,150. Anyway, between today and tomorrow, these levels can get tested. It is holding a very strong support of 24,950. So anybody would have gotten at lower levels can trail these stop loss at 24,950. And continue to hold Nifty for higher targets of 25,100, 150. There's a decent rollovers in Nifty. It is mostly on the longer side. The only thing that is dragging today is the overall sentiment in Bank Nifty. As we can see, it is not able to cross the 51,500 pass. That's very crucial for Bank Nifty. It is underperforming. So maybe that is a reason why a bit of a consolidation can be seen. Not much to expect from Bank Nifty at this level. I think it's wiser to place your bets for Nifty and just hold longs for Nifty and avoid Bank Nifty for the day.
So you see no strength in the Nifty Bank to take it past that 51,500 mark, as has been the case over the last few trading sessions, Soni. But what are your stock-specific recommendations as well this morning?
So, Hamas, the first pick would be in IEX, which has seen a very strong breakout today on chart. It's a fresh breakout and also an option chain breakout above 200 level. So, I think IEX is looking quite positive to buy at current levels, anywhere in the range of 204 to 203, and these keeping a stop loss of 198. The stock can see higher targets of 210 to 112. So, those can be the targets. The second pick is from the auto space, Maruti, which has seen a good, decent close above its 20 and 50 EMA yesterday. Even as of today, it is holding above those levels. Also, it has seen a 62% long rollovers from August to September series. So Maruti in September futures, one can buy at current levels around 12,450 to 12,500 in futures. Keep a stop loss of 12,300 and a target of 12,900 to 13,000 for the September expiry can be seen.
September futures is what Sony is recommending on Maruti. But Sony, I wanted to ask you about all of these Tata Group companies that have been on a tear over the last few sessions. Not so today when it comes to Tata Elxsi, but be it Tata Tech, Tata Investment, Tata Elxsi that have seen this surge. What are the charts suggesting there? Which among the three looks most attractive to you, or is there any other from the Tata Group that looks attractive to you?
I think Tata Tech and Tata Motors are the two stocks which can be looked at from the entire space. One would be from the IT space, which is clearly seen a good momentum now. Also, Tata Tech on charts, on daily charts, it is holding above 200 EMA. So I think that's a positionally well support. One can continue to hold. We've seen yesterday good breakout, good volumes. And, it can test higher levels of 1140 to 1160 as on chart. So I think continue to hold Tata Tech, keeping a stop loss of 1080 from current levels. Tata Motors would be a good buy on dips from current levels. Around 1060 would be the level one can initiate a buy in Tata Motors. It is just approaching a 20 EMA, keeping a stop loss of 1040. Buy on dips around 1060. The stock can test 1100 again.
Okay, all right. Sony, appreciate you joining in and giving us your call on the index, as well as a whole host of stocks as well that we just discussed. By the way, keep an eye out on a few stocks on the broader markets. Intellect Design, just pull up the intraday chart out there. That one is bursting at its seams. So big up move is what we're seeing out there. I think mid-cap tech, it's got something going for it. Coforge should come up for you on the screen. Birlasoft should come up for you on the screen. Big up move is what we're seeing on both those two. And even Persistent Systems now is spiking up. At some point of time, some of those stocks will come up for you on the screen. And Interglobe Aviation, everyone was talking about valuations being a little bit more expensive. Monopoly, almost a near monopoly in the market, more than 60% of its market share, which is just growing. Now it's nearly a 5,000 rupees stock. For the time being, we'll slip into a short break, come back, continue to focus on markets and stock-specific action. Don't go anywhere.
Back with us here on Chartbusters. Plenty of action going around in the broader markets. I'd like to pull up CDSL. That stock is down for the third day running now, and ICICI Securities at yesterday had downgraded the stock, and now it's down to the lowest point of the day, 1500 now on CDSL, down for the third straight session. But midcap IT is the one that Nigel was just highlighting a few minutes ago, and those companies continue to be on a tear. LTI Mindtree and Tata Elxsi are the two that we'd like to talk about right now, and those are moving on the back of reports from brokerage house Kotak. Now, LTI Mindtree has been upgraded by Kotak, while Tata Elxsi is under pressure following its sell recommendation on the stock. Rima is here with more details. Rima, tell us what the reports say.
So let me start with LTI Mindtree. Well, there is the news of GST, but you know what's fueling the up move in the stock today is the Kotak upgrade on LTI Mindtree to an add versus an earlier reduce. Their target price stands at 6,200, and the key expectation is that growth rate will recover. Now, in FY24, growth rate for the company will trough at 4.4%. It will expand to 6.5% this year and further accelerate to 11% by FY26. Now, this pickup in growth will be led by BFSI and high-tech. These two verticals were impacted the most in the last 18 months, and BFSI is already showing signs of recovery, particularly in the United States. The second overhang on the stock was also the many exits that took place post the merger of LTI and Mindtree. And here Kotak says that leadership departures have cooled off in the last 3 to 4 months versus the flurry of exits that we had in March and April. That said, don't expect any margin expansion. So the scope for margin expansion is fairly limited. But according to Kotak, LTI Mindtree is going to be a good compounding play with strong and consistent EPS growth, and they've raised the target multiple. But on Tata Elxsi, the stock which rallied close to 26% over the last 2 days, Kotak is very bearish. They say the stock was expensive even before the rally began. They've got a sell rating on this stock, and their target price is all the way down to 5,500. Valuations are stretched at 61 times forward multiple. Valuations price in a 20% annual return in the growth rate for the next 10 years. And they're saying that while the company's automotive growth, led by, say, JLR, etc., is going to be strong, the company is facing growth challenges, whether it's in media and communication or even in healthcare. So bullish on LTI Mindtree, Kotak, but Kotak Institutional Equities continues to remain very bearish on Tata Elxsi. Back to you.
Got it, Rima. That's clearly weighing on the stock, down 5% as we speak. But let's get you some market opinion there. And in a very interesting chat we had with Nilesh Shah of Kotak AMC yesterday, we discussed the SME IPO and the unrealistic valuations, besides other things. Let's listen in to some excerpts of that conversation.
So there will be enough reasons available for correction, but we believe based on our fundamentals, liquidity and sentiment, corrections are unlikely to be deeper like we saw during COVID time. They are more likely to be what we saw during October 21 to June 22 period, a minor correction, combination of time and price correction. Undoubtedly, we have seen power of money in the early 90s, mid 2000s. But we have also seen that once money power goes, fundamentals prevail. My recommendation to investors, traders, SME exchange is the best performing indices of the world. But I don't think so they have the best performing fundamentals to justify current prices or valuation. There's momentum going on. There will be few companies who will be good, but majority at this valuation are unlikely to meet investors' expectation. Consumer stock valuations are high, undoubtedly, but they are relatively lower compared to their historical average, and their ROEs are likely to be better. So we are exactly doing what I've said, moving from momentum to quality, moving from low floating stock counters to high floating stock counters, and moving from expensive valuation to reasonable valuation.
Nilesh Shah there on the markets and the frenzy that we are seeing in the SME market, of course. I pull up a couple of other names as well. NBCC is the one. The board is going to consider a bonus issue on the 31st. The stock is at the high point of the day, 6% higher for NBCC. And Tata Investment, that among the Tata Group stocks continues to surge higher even in today's session, is the second best performer on the Nifty Small Cap Index, 5.5% higher there for Tata Investment. But with that, it's a wrap on this edition of Chartbusters. From Nigel, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.
But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom.
Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me is Sonia. Before we get chatting about the markets, there is an important event taking place, the global, the GFF, and Christopher Waller, who is the member of the Federal Reserve, is currently speaking. So let's listen in to his remarks.
Federal Reserve System, Mr. Christopher Waller. Governor Waller has been very gracious in accepting our invite and to be part of this. He is having multiple responsibilities on the board of the Fed Reserve System. He is the economist there. In addition to that, he also is the is in charge of the oversight function for the payments, clearing, and then the financial market infrastructures. It's a great honor, Governor Waller, to have you here. And we will have a couple of questions after the Governor gives his address. So what I will do is, in the interest of time, I will request Governor to come and give his opening address and remarks, and thereafter we'll have a few questions to discuss. If that's fine, kindly come over to the podium, Governor. A big round of applause, please.
Well, good morning. That's what I like to hear, an interactive audience. So I want to thank the conference organizers for the opportunity to speak this year at the Global FinTech Fest, a place where there is so much payments innovation. The technology-driven payments revolution in India has been enabled by a public-private partnership to build the technology stack of digital platforms that has broadened financial inclusion and done so at low cost. Building on the foundation established by the public sector, innovators in the private sector seize the opportunity to enhance payments through the introduction of new capabilities that alleviate frictions while remaining within regulatory guardrails. In today's remarks, I'm going to touch on how the interplay between public and the private sector may be the key to advancing cross-border payments. Now that fast payment systems have been established around much of the globe in over 70 countries and counting, attention is turning to how these newer systems could potentially enhance global payments as opposed to just local. Specifically, interlinking fast payment systems has been identified as a possible means to deliver enhanced cross-border payments for consumers and businesses. Interlinking arrangements would allow banks in different countries who are users of domestic fast payment systems to send payments to each other through technical connections through their respective domestic payment systems. As you all know, interlinking is one of the areas outlined in the G20 roadmap for further exploration as part of a holistic effort to enhance cross-border payments. The overarching G20 goal is to mitigate challenges with cross-border payments in a coordinated way at a global level, with input from key stakeholders, including the private sector. The G20 roadmap addresses a new topic that payments industry stakeholders have been circling around for years: more cost-effective and timely cross-border payments for consumers and businesses. This policy goal has been advanced by the Federal Reserve over time in various payment system improvement initiatives dating back to the late 1990s, when the Federal Reserve began adapting an automated clearinghouse, or ACH, service to support international payments. And more recently, in 2015,
well, that's the prepared remark by Fed Governor Christopher Waller. But I think everyone's going to watch, Sonia, on what he has to say about the US Fed rate cut, right? I think September is a given. But there are still so many questions on, are we going, maybe, is there a hope of a 50 basis points? What about rate cuts thereafter? So I think when, the question and answer session begins with Christopher Waller and the questions begin on the state of the US economy and the future rate cut trajectory, we'll cut back to that.
Absolutely. I think for the moment, our markets are absolutely quiet. Not too much is happening. Quiet. But there are so many stocks which are hitting fresh 52-week highs. So I think we should, continue to look at those. So if you look at it today, there's Sun Pharma, there's Bajaj Auto, there's Trend, there's Interglobe Aviation. So despite the market being very quiet, there's no dearth of stocks hitting fresh 52-week highs. Cipla, Shriram Finance, Torrent Pharma. In fact, a lot of pharmaceutical stocks are hitting fresh highs right now. Manish Jain from Centrum joins us now to discuss the market fundamentals, his top sectoral picks. Manish, the sector that I wanted to start with is the auto space, because one of the stocks, Bajaj Auto, has hit a fresh record high today. And the management in their conversation with us yesterday was telling us how they plan to go big into the electric vehicle or clean energy vehicle space, right? Their market share also has been gaining quite a bit. I mean, they used to be at about 5% market share a year ago, now sitting at almost 18% market share in this space. But my question to you is, this EV theme, is it something that you would continue to bet on?
Yes and no both. But I think given the way the markets are shaping up now, there are enough and more avenues to play the EV themes. If you look at the markets today, a number of companies, especially in the renewable space, for example, the EV batteries or maybe the solar module makers, the panel makers, are all going to be, they're all sitting on the sidelines looking to hit the IPO space in the next 1 year or so. I'd much rather wait out and play them for the EV and the renewable story rather than look to play through the auto route. Because the fact of the matter is, even in a best case scenario, 5 years out, EV is still going to be a very small and a negligible portion of the entire auto basket in India, unless and until we really see some path-breaking, investment which is going to happen as far as the infrastructure is concerned, especially the highway charging infrastructure is concerned. I'm not going to be very, very overtly optimistic on the EV story. It's good to play it for the sentiment of it, but I'd much rather play it more through a pure play model rather than look at it from an auto space perspective.
So Ola Electric is a pure play model. Is that a stock that you would consider? You spoke about some others, right? Like solar modules, batteries, etc. But what about Ola Electric?
So if the shoe fits, why not? I mean, the fact of the matter is...
But does the shoe fit?
See, the point is there are a number of ideas that we are evaluating in this space. A number of companies that are already listed, a number of companies that are in the pre-IPO stages, and we are evaluating them all very closely. The fact of the matter is that Indian markets in the last 5 years have changed very dramatically, right? The whole composition of any portfolio that you look at it, whether it's defense, whether it's renewable, whether it's all these new age technology companies, some of these tech-based food delivery platforms, for example, the way people used to perceive them 5 years back versus the way they are perceived today, there's a very dramatic shift in that. So yes, why not?
What's the overall view on the markets, Manish? I recall our last conversation where you were cautious. In no uncertain words, I think you were anticipating a bit of a pullback and you were in your fund, accumulating some cash to deploy at lower levels. Well, we've had time correction, but we haven't had a pullback.
There was that one day when the market corrected 3%. I think that day we deployed about 4-5% of the funds that day. And now today, beginning of last month, we were at around 7% cash position. Today, we are sitting at around less than 2% cash position. And my view on the market is very, very simple, which is that going into the next 6 to 7 months, the market is not going to see any major correction from here onwards, but it's not going to see a very massive, exciting sort of a rally either. I think we are looking at close to 26,000 levels for the markets, which is roughly out another 3 to 5% sort of a rally from here onwards. But it's going to be intermittent corrections, and every time the market sees a marginal pullback, I would be deploying the money, because from a 2-3 year perspective, the story is still very, very interesting. India can still be a 15% compounding sort of a market from equities perspective.
Okay, India can be a 15% compounding market, got that. Today is a day when a lot of pharmaceutical stocks are hitting fresh highs, right? Whether it's Cipla, Torrent Pharma, Sun Pharma, even some of these broader market pharmaceutical names like a Piramal Health, etc. But your thoughts on this entire space? If someone has missed out on the rally, is there more to go?
Yeah, I mean, we've missed out on it. We don't have a massive position in pharma in our fund, and that is kind of a shame. But pharma is a sector that is coming out of a very long lull, almost like a 7-year kind of a lull. And it's now starting to come on its own. And a number of concerns that people had, whether it's the pricing or the ANDAs or, the US regulations, all of that, I think they are now starting to go away. And I do think that it's going to be a slightly longish sort of a run, especially given the pullback that we've seen in the banks this year, and especially the kind of rally that we are witnessing to see some of these alternate sectors which have not participated yet so far. For example, IT, for example, FMCG. I think pharma, again, fits the bill perfectly. So yes, pharma does have a little more room to go as far as the rally is concerned.
Okay. You said you've deployed cash, right? As the month has progressed from 7% cash holding, you're down to 2%. Where all have you invested?
So we've picked up a number of sectors. There are a few sectors where we've kind of incrementally further booked profits. For example, some of these retail names, we've had like a 20 bagger over there over the course of last 4 or 5 years. So we've kind of booked a little bit of a profit over there. Real estate is something that we had a massively overweight position on. So we've kind of booked a little bit of profit over there. But otherwise, what we have done is we've picked up ideas. We've picked up ideas in the affordable housing space. We've kind of picked up ideas in the NBFC space. Hospitals is again another area where we've kind of deployed a little bit of a money. And it's been our debut month as far as metals and short cycles are concerned. So we've kind of picked up one idea over there as well.
Okay, so you're saying real estate, you booked a bit of profits there. So are you planning to churn out completely in real estate? Because there were some reports indicating that now there's a bit of saturation, a bit of a slowdown as far as, property registrations are concerned, especially in some of the top metro cities like Mumbai. How do you read into that, and what does this mean for some of the listed players?
So the fact of the matter is, the reason why we look to book profit in real estate is because we have done fantastically well, right? I mean, this is a position that we had built up about 18, 19 months back. And 3 ideas that we picked up, 2 out of them have been multi-baggers for us, about 3 to 4x returns. So it was very prudent on our part then to kind of get out of those names. But I do think that real estate as a sector still has a little bit more time to go. We are still in the mid-cycle. We are still not at the peak of the cycle. The fact of the matter is urban consumption has seen affluence, discretionary consumption has seen affluence. A large part of the real estate cycle that you've seen in the last 18 odd months has not been from an investment perspective, but it has been more from a consumption perspective. Inventories are still at about 12 to 14 months. The number of new launches that the builders are doing are they are very, very, very conscious in that space. So I think overall, and the rate cut, right? I mean, the cycle of the rate cut is still due on our head. So I think there's still some leeway to go. So we are not going to be churning out of it completely. It's more of a profit booking than anything else.
Manish, thank you very much for joining in today on Trading Hour. Look forward to our next conversation. Get into a short break on that note. We'll come back and discuss commodities with Manisha Gupta. Stay tuned.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or Rs 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers, including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai, have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers, including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors, have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Welcome back to Trading Hour on CNBC TV18. It's going well for the market. It's flat for the headline indices, but there's plenty that's happening beneath the surface. Let's focus on the commodity space now. Manisha Gupta joins in, and today we are focusing on some of the softer commodities. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, yes, and there are some very strong gains coming in for some of these softer commodities. I'll start with Arabica coffee, where we have seen prices gain up by almost 3% in the overnight markets, and it is up 13% now in the month of August so far. And we have seen the prices gain up by 70% in 2024 as well. Well, the reason for this is that Brazil, which produces nearly 70% of coffee, is looking at severe heat waves, and that has led to the yield going down, and coffee prices in demand have been on the stronger side, supporting prices there. The other one clearly is rubber, because here as well we've seen prices keeping support for the last few months now. It's trading at a 2-month highs right now. There have been reports of heavy rains in Thailand that has impacted production, and there has been production concerns in most of producing countries, whether it has been about Malaysia, Philippines, and many parts of India, which is in Kerala as well. So we have seen rubber prices gain up by almost 13% in this year until now. And on the meanwhile, demand has continued to pick up from Europe, US. There is some improvement in demand from China, which is supportive for rubber prices. And the third commodity on my radar is sugar, where the global markets have continued to surge, so much so that we are trading at a 6-week highs onto this one. In last 1 week, we have seen the sugar prices gain up by almost 11%. There have been reports of massive wildfires in Brazil, which has led to yield declining. And there is a concern that almost 5 million tons of cane crop perhaps has been lost to these wildfires. Another reason that you are looking at sugar prices trading quite firm in the international markets.
Manisha, everything is up. What is down?
Not much really, except the crude oil prices. But then again, crude gained 7% in 3 days. It's down 2% yesterday. So that's the only thing in the negative. But on a day-to-day basis, on a week-on-week, month-on-month basis, most of the commodity is really positive. So August clearly is going to be a bullish month.
Thank you very much for that. We will get into a break on that note. Not much happening on the equity front. We'll invite Mitesh Thakkar on the show and find out a few trading ideas.
किसानों के हितकारी बिल जो वापस लिए गए, यहाँ पे जो फार्मर्स प्रोटेस्ट हुए, वहाँ पे लाशें लटकी थी, वहाँ पे रेप हो रहे थे। किसानों के हितकारी बिल जो वापस लिए गए थे, तो पूरा देश जो है वो चौंक गया था। वो किसान आज भी वहाँ बैठे, वो बड़ी लंबी प्लानिंग थी, जैसे बांग्लादेश में हुई।
Welcome back. The day belongs to IT. So the Nifty IT index itself is up 1.5% on a day when the benchmark indices are practically unchanged and are flat. The mid-cap index, IT index, is now up 1.9%. So it's only moving from strength to strength. One of the big movers is L&T Technology Services. Yesterday, they held their analyst day, and the company has reiterated their medium-term guidance of achieving $2 billion of revenues and increasing margins to 17 to 18%. They've also called out 3 verticals: mobility, sustainability, and tech. They're going to be focusing on these 3 verticals, and their aspiration is that eventually all these 3 verticals can achieve $1 billion of revenue each, with a focus on expanding margins. So when the analysts ask them about the near term, they're saying that the conversations have improved, the pipeline has improved, but still deals are taking time to convert. Now, Motilal Oswal is bullish on L&T Technology Services, and they're saying the company's revamped go-to-market strategy. The company said that tech cycles are now becoming shorter. So the go-to-market, in order to get these large deals, win these large deals, has to change. And the go-to-market strategy opens up new avenues for growth, particularly in the automotive software development vehicle space, SDV as it's called, and that could be positive for a company like L&T Technology Services. But on the other hand, Nuvama says the risk reward is not favorable because valuations are expensive, and Nuvama has a hold rating on the stock. But the street is clearly excited about the growth prospects and the fact that the company is going to grow while expanding their margins.
Okay, well, let's get back to looking at the Nifty. Look at that. Just 9 points away from that all-time high distance to 25,079, right? I mean, we're virtually there. It's just a matter of time that we get to that level. But we are counting down to this milestone, a big one. Given the kind of hurdles that this market has had in the past many weeks and months, it has climbed every wall of worry and now almost back at that all-time high. So we'll get to that, I guess, in a day or two. It's just a matter of time. But for now, virtually at those all-time highs. But Zee Entertainment and Abhi Organics are also in focus on the back of fresh brokerage notes. Sudarshan is here with the details. Sudarshan, over to you.
So first talk about AMI Organics. HDFC Securities has upgraded the stock to buy with a target of ₹1,600 per share. It has listed out few reasons for the upgrade. First is ramp up in Fermion contract. Second is expansion on specialty chemicals portfolio. Third, balance sheet turning net cash in Q1 FY25. Increase in better margin CDMO contribution and ramp up in capacity utilization of specialty chemicals plant. It expects margin to improve by more than 500 basis by FY26. And expects profit to grow at a 38% CAGR over FY24-26, led by a 29% CAGR in EBITDA. Coming to Zee Entertainment, company yesterday had announced that it has settled all the disputes with Sony Entertainment regarding the transaction that they had signed a few years ago. After that, brokerages have written on the stock. Citi maintains the sell call with a target of ₹137 per share. It says all eyes will now be on business fundamentals, as settlement would help allay investor concerns around potential liabilities, and now it will monitor any material improvement if company sees with respect to ad revenue. UBS has a neutral call with a target of ₹180 per share. It says Sony settlement is seen as positive as it removes a key overhang that company has been facing for the last few years.
Thank you very much for that. Zee was a big mover yesterday. Let's move on now to Zydus Life. That's gaining after the company received a final approval for a drug which is used to treat dyskinesia, patients with Parkinson's. Ekta joins in with the details. Ekta.
Thanks for that. Well, yes, Zydus is in focus because they've received final approval from the US drug regulator to market a drug which is basically used in Parkinson's when a person has involuntary movements. Now, it is final approval for the 68.5 mg drug as well as the tentative approval for the 137 mg drug. Now, the company has said that the approval makes them eligible for 180-day exclusivity under the 68.5 mg drug of amantadine extended release capsules. So that is basically the drug which is used for Parkinson's. Separately, Zydus is in focus on account of a Jefferies note where they've upgraded the stock to buy. The target price is raised to $14.50. They say that the recent stock correction presents a buying opportunity. They see at least one big launch worth $80 to $100 million every year. There's a strong pipeline in the US and improved growth prospects in India, which will aid sales and margins according to them. And a high reliance on the US markets makes it a high-risk, high-reward call.
Okay, thanks a lot for that, Ekta. Well, Mitesh Thakkar joins in now for a quick technical check of the market. Mitesh, hi, welcome to the show. We've got so many stocks that are hitting fresh highs, but I do want your, views on the pharmaceutical space, especially Sun Pharma, Cipla, Biocon, all sitting at fresh highs or rallying quite a bit. Your thoughts here, and do you see more on the charts?
I do see more on the charts, Sonia. Good afternoon. Biocon was a recommendation day before yesterday and today morning as well. I think after a good sideways action, the stock has again picked up. That apart, I think, other stocks are also doing well. Out of the pharma, I think, has hit a fresh high. Glenmark is near the fresh highs. In fact, what is breaking out today is Torrent Pharma. I think, it's just made a fresh high today and it's above the earlier highs of 3370 odd levels. So I think that could still see some momentum. I think overall the space is very good, but if I was to choose one stock, I think that would be Biocon purely because of the fact it's corrected and now it's getting into an uptrend again.
Any other stocks that you'd like to highlight?
Yeah. So I have a buy on PFC. PFC has had a good breakout yesterday. Today is quiet, but I think the trajectory is on the upside. So buy here with the stop at about 529. Look for 555 as the near-term target area. And that apart, I think, CanBank is something which is on the radar as well, where I have slightly negative view. So CanBank is a sell with a stop at about 112.5 for targets of around 105.
Thank you very much for that. By the way, Asia is largely a color of red today. Some of the markets like Hang Seng are down more than 1%. Shanghai is down about 0.5%, but the Korean market Straits Times in the red, not by a whole lot, down about 0.25%, but the color is red for Asia this morning. Get into a break. We'll put the spotlight on some other stocks that are buzzing in trade today. We'll discuss mid-cap IT in greater detail.
Welcome back to Trading Hour on CNBC TV18. Well, mid-cap IT companies LTI, Mindtree and Tata Elxsi are in focus. On the back of reports from brokerage house Kotak, LTI Mindtree has been upgraded while Tata Elxsi is under pressure following Kotak's sell rating. Rima's here with the details. Rima.
So let's start with LTI Mindtree. That's the large cap with a gain of nearly about 6%. Now, Kotak has upgraded LTI Mindtree to an add from a reduced rating, and their target price stands at 6,200 rupees. The key reason is the growth rate will recover. Now, in FY24, that's last year, growth for the company was just 4.4% dollar revenue. This will pick up to 6.5% and further accelerate to 11% by FY26. Now, what will drive this pickup in growth will be an improvement in two key verticals, BFSI and high-tech, which contribute a lot to LTIMindtree's revenues. These were the impacted verticals. It dragged growth down, but now you're already seeing signs of a recovery in BFSI, that's banking and financial services, particularly in United States. So as these two verticals recover, growth rate for the company will pick up. Secondly, the other overhang on the company were the spate of senior-level exits after the merger between LTI and Mindtree. So on that, Kotak says the leadership departures have cooled off in the last 3 to 4 months compared to the flurry of exits in March and April. That said, they do say, Kotak says that margin expansion is difficult, so don't expect that. And whatever little happens is already priced in. So they expect LTIMindtree to be a good compounding play with strong, consistent EPS growth. They've raised the fair value multiple to 28 times. But on Tata Elxsi, a stock which gained, had a blockbuster last 2-day move, 26%, Kotak Institutional Equities says, well, the stock was expensive to begin with even before the rally. So they have a sell call. Their target price is 5,500 and the current market price is 8,500. So the Kotak's fair value is much, much lower than the current market price. Valuations are stretched at 61 times forward multiple. Valuations bake in a 20% revenue growth for the next 10 years. And they're saying that even as the automotive piece vertical will grow because of JLR, the spending that's taking place, the other two verticals for the company are facing some challenges, whether it's media and communication or even healthcare. So expecting a 20% kind of revenue growth for the next 10 years, which the valuations bake in, look a little unfeasible according to Kotak Institutional Equities. So very expensive and they've got a sell call.
Okay, well, moving on, MCX has been also gaining on the back of positive brokerage commentary. Vamakshi is here to tell us more. Vamakshi, over to you.
Absolutely. HDFC Institutional Equities met up with the management of the company. They've gone ahead and maintained a buy rating and in fact raised their target price on this counter from 5,000 earlier to 6,000 rupees per share. In the meeting, they say that the company has provided good strategic direction. They have an exciting product pipeline lined up. They're launching new products such as monthly series as well as index options. In fact, they are technically testing the weekly option product and that is currently under progress. They are also continuously enhancing the technology stack and are also focusing on increasing institutional participation and hedging activity on the platform. Additionally, the appointment of the new MD and CEO, Mrs. Praveena Rai, will also significantly help in boosting these strategic initiatives. In addition to that, MCX is well positioned to withstand ongoing regulatory challenges, one of them being the curb on index option volume, the other one being the reversal of interest earned on clearing funds to clearing members. The company said that they have not quantified the impact, but the impact is expected to be minimal. The third one being the true to label charges, which will discontinue the practice of levying slab-wise fee structures. And over here, they say that it is neutral for exchanges as they will likely switch to the blended fees. Overall, the brokerage believes that MCX will be able to sustain its growth in the future. New products will fill the gaps and provide additional support to the growth story. They're expecting notional and premium volume to grow at 61 and 43% CAGR respectively from FY24 to 27. They've maintained their revenue and EPS estimates, but they've gone ahead and given a higher multiple of 40 times as compared to 35 times earlier based on better revenue visibility. And given those factors, they've gone ahead and upgraded their target price on this particular counter. So given the positive commentary coming in from the management, the stock is surging in trade today.
Thank you very much for that. And by the way, the Nifty has crossed its earlier record high of 25,078 and it's not stopping there. It's picking up now and approaching 25,100. 25,090 on the Nifty. It's a 72-point up move in the face of muted global cues. So the markets have scaled all-time high levels today. The mid-cap index is moving in step. And the last 10 minutes, that up move that we've seen, the spike, you've got names like a Bajaj Auto with a 1.5% up move contributing on the way up. IT has been strong and now HCL Tech too has joined the up move. Again, gaining 1.5% on HCL Tech. Infosys, Coal India it's now back in the green. It was in the red in the morning, but Coal India is now in the green. Tata Motors too has been a big mover. Banks is still in the red, not by a whole lot, but just down about 76 points. But let's see whether banks can change their color from red to green.
Oh, absolutely. I mean, what a phenomenal move for the market, right? Today, it's looking like it's just a 0.3% move. But just pull up the last, 6-month chart. Every bad news, global bad news, local hiccups, election, verdict, budget, anything that the market has digested, even the capital gains tax, right? Everything was digested by the market well. I think it is also the retail flows that has come into the market in a big way, especially domestic institutional investors, and the kind of money that has come in from the retail end, right? This whole equity cult has been growing by leaps and bounds. We've seen in the month of August, 10 crore, demat accounts is what we've seen overall, right? So that just goes to show that whatever is the global news, the local news is so strong and the conviction in our markets is so strong that we've been able to climb every wall of worry. Now, having said that, see, there is a correction that is expected to come. I mean, it hasn't come for 1.5 years. So I guess at some point a correction will set in. But as Nilesh Shah was also telling us yesterday, right, even when the correction sets in, it may not be as steep. It may not be a very big fall because the conviction in this market is so strong that as soon as a correction sets in, perhaps money will start flowing back in. So that's been the kind of conviction that this market has had. So phenomenal move, really. It's crossed that earlier level of 25,078, hit a new milestone, and a large chunk of it has been, we've got leadership both from banks as well as from IT. So there's been a lot of support coming in, even from some of the newer, some of the new tech companies, etc. So I think it's an across the board, it's a secular up move that we've been seeing. Gautam Shah is joining us, by the way. He's someone who has been advocating for new highs in the market for a while now. Gautam, welcome to the show. Big day for the market yet again, right? New milestones is what we've seen. Gautam, is my voice reaching you?
Yes, it is, Sonia.
Okay, great to hear you. And at a time like this, the market has hit record highs. There are still so many naysayers in this market, right, Gautam? Many people believe that there is a big correction coming, which it should at some point in time. How do you deal with that, and how do you navigate the terrain from here?
Well, Sonia, naysayers are a catalyst to any bull market. And I think over the last couple of months, we've had more concerns than talks of greed. And I think that's a great place to be in. And this market has seen an incredible climb of wall of worry because we've had so many developments globally and locally. And despite the fact that the Nifty is at 25,000, I think it's just phenomenal. I think this is going to continue. One should not time the top. No one knows where the top is. It's just that the domestic liquidity just is helping this market go up on a consistent basis. 5% correction is the new 15% because, people who look at the previous bull market and say that we haven't seen a 10-15% correction, please note for the last couple of years, we've had multiple 5% corrections, and that has really cooled off the market. So even at current levels, I don't see overbought signs. I think banks are yet to make a comeback. Newer sectors are starting to do well. Look at the comeback of IT and pharma in the recent past. Metals are likely to break out. Chemicals have started to do well. And I think some of the previous winners of the past have taken a backseat. Real estate, auto, PSU, capital goods have gone nowhere for the last 4 to 5 months. But broadly, I think the trajectory is still up. And I think the way we handled the global developments in the first half of August was quite commendable. So I think you're going to see better days. And in terms of levels, 25,500 is pretty much the next important number to work with. And I think the next big opportunity could be financial services led by NBFC.
So, Gautam, you don't see any toppish signs, any signs of frothiness at the index macro level in our markets, which suggests a correction is coming?
No, I don't see that, Reema. In fact, at the starting of the month, we were a little concerned that the market was a little top-heavy on the breadth front. And then the global correction happened. Mind you, the NASDAQ index, the Dow, they all corrected 10%. The Japanese market corrected about 17%. And our market fell about 4%, 25,000 to 24,000. So with that sweet correction, the market basically digested all the negativity that was there. And it's now, healthy once again. And top quality mid-caps and small caps, look at the way the broader markets have behaved in the last few weeks. It just tells you that there is so much money on the sidelines that quality stocks are being lapped up on every correction.
Okay. You were briefly mentioning, auto stocks, right? Bajaj Auto is definitely the one in focus today, as is some of the other auto names, whether it's TVS Motor. This whole renewable energy, green energy space, electric vehicles is picking up in a big way. But on the charts, do you think there's more of an upside in some of these names?
No, I think for the time being, we've let go of auto. I think the risk reward is just not there to make serious commitments at these prices. Maybe they are at hold for an investor who's looking at things for the next 3 years. But if you're looking at an opportunity for the next 3 to 6 months, I don't think auto is an opportunity. I do believe that if the rate cut cycle were to start, which I guess the Fed has already indicated, and it will follow suit in India as well, I think financial services led by NBFCs could be big beneficiaries. So I see some amazing opportunities coming up in NBFCs led by Bajaj Finance, Bajaj Finserv. And I think metals could also do something special over the next 3 to 6 months.
Mihir Vora is also with us on the show. Mihir, thank you very much for joining us on this momentous milestone that the markets continue to hit, so many times this entire year. We left off the last conversation saying it's time to be, choosy in the markets, not cautious. How do you expect, we've literally not had a correction. You've been in the market for decades and you know that this is not sustainable. At some point, a correction does set in, but it's just not come. We've not seen one for the last maybe close to about 2 years now. So what would your advice be now to share, to retail participants?
Hi, first of all, congratulations to all of us. Nobody will look at this horse in the mouth. So I think it's a good time and a good reflection on the strength of the economy that the markets are touching new highs. But yes, as you rightly mentioned, there has been probably no sharp correction at the market level. But the markets have corrected at the sectoral level, if you notice, So you had large underperformances by the IT sector at one point in time. You had continuing large underperformance by the banking sector as we speak. For almost for 1.5 years, the banking sector has underperformed. But the weight of the weight of the market has been pulled has been lifted by the other sectors. So there has been, I would say, a healthy time correction and a price correction, sector by sector, stock by stock. And the market seems to be rewarding growth and punishing lack of growth. And I think that should continue. So it's not like every sector is in a bubble territory or every stock is expensive. There is enough scope and enough rationality in the market to pick and choose and build a portfolio.
Okay, quickly, Mihir, before we let you go, congratulations to you as well. I mean, you've been advocating for all-time highs for a while now, and you've been recommending, sectors as well. But at any point, would you start to get cautious? Would you start to raise your cash levels? Is that a good way to approach the market now?
So I would always be cautious, but more on the quality side. It's very tempting to go down the quality curve in a raging bull market, especially when the run is so broad-based in mid-cap, small caps, etc. So there is always this temptation to go down the quality curve. So that is one point that I would be cautious about. Liquidity, illiquid stocks, frothy stocks, that is one. And in general, I think there is still scope for stock picking. And cash calls is not something that we are actively looking at this point in time.
So Mihir, where do you think, which are the sectors where you think a correction might set in? Because that's been the nature of the market, as you pointed out. At the index level, we haven't seen a correction, but individual pockets of the market have gone through their own time correction, own price correction. So where do you think that next correction sectorally could come in, where things are looking still a bit overheated?
Some of the thematics that we've been quite bullish on, for example, the railway theme, the defense theme, they have already started correcting. We are seeing time correction and price correction happening because the long-term fundamentals, nothing has changed. Absolutely robust view for the next 5 to 10 years in these segments. But markets do tend to go a little ahead of themselves, and that's what we are seeing in certain segments. So I think ultimately, if you look at the long-term growth versus valuations prospects, market is tending to overshoot and then correct, and that we have seen sector after sector. So these fancy stocks probably are already seeing some kind of time correction. In the recent past, we've seen a lot of action in the renewable space. Again, very exciting sector, very bright long-term prospects. But stocks probably are all getting a bit ahead of themselves. So I think that time and price correction will happen from time to time in these kind of pockets. The illiquid and the low free float counters are really the ones to be, to be wary about.
Hey, Mihi, thanks a lot for joining in. Appreciate your time here. Gautam, thanks to you as well. Big day for the market. The Nifty has hit a fresh record high. Of course, it's up, I think, 80 points right now, the last time I checked. So not just hitting a record high, but building on to its gains. Look at that, almost 90 points higher now, moving to the highest point of trade. This is the first time ever the Nifty has hit 25,100 on an intraday basis. Let's see if it holds on to these gains. Remember, it is a matter of time before which some sort of a correction or pullback sets in. But for now, the market is just enjoying this momentum-driven rally. Let's dip into a short break. On the other side, we put focus on the boardroom battle underway at Godfrey Phillips. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. A big boardroom battle is underway at Godfrey Phillips with a dispute between Beena Modi and her son, Sameer Modi. Now, there have been lots of twists and turns in this. The company's Nomination and Remuneration Committee, NRC, had recommended against Sameer Modi's reappointment to the board. Now, the latest is that the AGM is all set to be held on the 6th of September, where Beena Modi's appointment to the board is awaiting a shareholder nod. Not just that, there was a tweet by Lalit Kumar Modi regarding the upcoming AGM where he's calling individual shareholders to vote. And, there have been certain promises about a dividend payout if Beena Modi is voted out, if she is voted in. So there have been lots of twists and turns in this particular, battle, this feud which is taking place within the Modi family. To talk more about it and what should we expect at the AGM, what should retail shareholders do, Hetal Dalal of Institutional Advisory Services joining in, and GN Gupta of Stakeholders Empowerment Services, SES. Thank you, for joining in. Mr. Gupta, if I may start with you, if you could tell us on 6th of September, which is the AGM, What is under consideration and what is the advice that you are giving shareholders?
Under consideration on 6th of September are a couple of resolutions. Leave aside all the resolution regarding the accounts, auditor, etc. The 3 resolutions are for 3 individuals, Beena Modi, her daughter, and Sameer Modi. There are 2 resolutions related to her daughter, relating to remuneration and appointment as a whole-time director. And regarding Sameer Modi, since he is coming for retirement by rotation, so the NRC has recommended that don't appoint him. We don't recommend his appointment, although he is offering for appointments, which we find is a rare occasion where somebody is wanting to be appointed and NRC is refusing. And NRC also says that not to fill the vacancy of this. Now, what is going to happen, we do not know. But we have opposed all 3 resolutions. Or we have said all 3 family members should be ousted from the board for the simple reason that in boardroom, if you have a divided house, the company will suffer and shareholders will suffer. So I am asking basic question to them, or rather to independent directors, that what for shareholders have put them on the board? Obviously, to ensure that the company is run in fair manner. Are they competent to adjudicate between Lalit Modi, Sameer Modi and Beena Modi and her daughter? Obvious answer is not. Neither it is their role nor they are competent. Having said that, can they take sides? If they are not competent to adjudicate, they cannot take sides. So if they are saying that don't appoint Sameer Modi, then they should obviously also say that Beena Modi and her daughter should also not be appointed, because board route should be clean of all individual things. And the most important thing which we notice is that NRC has written a lot about Sameer Modi's conduct, his abusive behavior for harming the company, all that he has written. But at the end, they have paid 40 crore rupees bonus to him. So I can't understand that on one hand, you are saying the person is causing harm to the company, and on the other, you are paying 40 crore bonus. So these are the things which do not reconcile. So we have said, remove Beena Modi, Sameer Modi, her daughter, and everybody of the family. Let them settle. And this will have 2 positive things. One, the board rule will be unified without any squabbles between the 2 or 3 directors. Secondly, it will put pressure point on them to settle their dispute. If they are out of the company, they will settle their dispute faster. As long as somebody is in the company, dispute will not be settled.
Fair point. Hetal, morning. Thank you for joining in. Comment on this particular point. And there is also the issue which will be raised in the AGM about Ms. Beena Modi's remuneration. So comment on that. And what is it that shareholders should know about it?
So thank you for inviting me. Quick disclosures, I don't own any shares in Godfrey Phillips. I own 1 share in Godfrey Phillips. Look, our view is that family matters should be separated from the company. They need to be sorted at the dinner table, not at the board table. And therefore, our recommendation equally is to remove all family members from the board. We understand there is a CEO, Sharad Agarwal, who is competent to run the business. So in the interim, there is professional management should actually be brought in. And independent directors should actually protect the company from the family dispute rather than taking sides. On the compensation levels, Beena Modi's compensation in FY24 was significantly higher than that of Sanjeev Puri's at ITC. So she was paid about 34-35 crores. Expected compensation is significantly higher. And she's also the chairperson and managing director at Indofil. So she's now got 2 executive roles. Indofil is a reasonably sized company. So she's now got, she has 2 executive roles. She's going to draw remuneration from both. And for listed company, our view, of course, is that you need to have more focused leadership rather than a distracted one. The other compensation resolution which is coming up is also for Charu Modi, because not only is she joining the board, she's going to hold an executive capacity. And there is no clarity on her role when she becomes an executive director. Compensation levels are significantly high. They're just open-ended. It's basically up to 5% of profits. For Beena Modi, also compensation is up to 5% of profits. And aggregate executive compensation can go all the way up to 14% of profits. So essentially, for Charu Modi, we estimate a compensation to be anywhere between 50 to 60 crores, which is not only high for the size of business, it compares to some of the Sensex company CEOs. So I think the NRC to that extent has failed to benchmark compensation. And ideally, they should also have a cap on the absolute level of compensation rather than leaving it open-ended to say 5% of profits. Look, the performance is good. As the performance increases, that number is just going to go up. And 50 to 60 crores for both Beena Modi and Charu Modi together, I think, individually, is a significantly large number for the size of the company.
Out of time, but your points are well noted. Thank you very much for joining in. Once again, the tweet by Lalit Modi will also come out, where he posted on Twitter saying the current management is calling individual shareholders to vote them in, promising a 50% payout of dividend. But he says that if the individual shareholders voted Beena Modi and her cronies out, the payout would be close to 90%. He goes on to say, vote her out on the 6th of September at the annual general meeting. Lots of twists and turns in this bitter feud that is ongoing, but things will come to a pass perhaps on 6th of September. We will slip into a very short break. We'll thank Hetal and Mr. Gupta for joining in. We'll come back with more on the markets.
Effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due.
Investing.
Welcome back to Trading Hour on CNBC TV18. What a great day for the market. It may not look like much in terms of, an up move, a 0.3% up move, but we have hit a record high today, and it's a big milestone given the kind of challenges that we've had in the last couple of months. A lot of big contributors as well, largely from the IT pack, right? Who would have thought? I mean, 2 months ago, IT was just a laggard, and now Infosys is coming back as a top contributor. So, yes, lots of things changing in the market, but one thing is constant, the retail money that has come back in a big way.
Okay, and with that, we're completely out of time on Trading Hour. From the entire team, thank you for watching.
This year, within this financial year, we talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market off the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform. As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom. We see opportunity in sectors like two-wheelers, tractors. Also, we see opportunity in real estate ancillary kind of industries. With the specter of rates coming down and hopefully liquidity improving, we also see opportunities in banks, large banks which suffered due to liquidity in the past. We also see opportunity in the smaller banks or the non-banks. So we are looking at the segments like the pipes, the cables, the switch gears, the lighting and all those segments, because all those segments we believe the organized sector has a definite edge and they can do better.
Well, stocks push up with the Nifty at fresh all-time highs. IT and telecom and healthcare notch gains, while FMCG, metals and financials drag in trade.
L&T Technology Services says conversations and pipelines have vastly improved even as it sets a $2 billion medium-term revenue goal. A recovery in BFSI tech spending in the US also prompts a bullish view on LTI Mindtree.
The National Stock Exchange is set to seek SEBI's no objection certificate for its proposed IPO after its board cleared the move. The country's largest exchange has over 90% share in equity and derivative segments.
The Bitcoin plunges below $60,000 on a likely leverage-driven liquidation. Ethereum too takes a beating. Meanwhile, Nasdaq sees SEC approval to launch Bitcoin index options.
Christopher Waller, member U.S. Federal Reserve Board of Governors, bats for same regulation for all players operating in a segment, including fintechs, on integration with the UPI. He says a universal payment system in the U.S. is still a while away.
Hello and welcome to Halftime Report on CNBC TV18. I'm Meekta Batra. With me is Nigel D'Souza. Well, it is celebrations for the market, considering that we are at fresh record highs for the Nifty. with the Nifty, in fact, crossing 25,100 on an intraday basis. For today, what stands out is that the Nifty IT, the Nifty Pharma Index and the Nifty Mid Cap Index, all of them are trading at record highs. We have around 300 plus stocks which are at fresh 52-week highs. Only around 13 stocks which are at fresh 52-week lows on the Bombay Stock Exchange. And 55% of all of the stocks which are trading as of now are in the green. So that's what the statistics look like at this point in time. No complaints, Nigel.
Well, that's right, Ekta. What a beautiful move, right? 25,000 and counting on the Nifty. We had to wait for a couple of sessions, but today, all through the morning session, I said, I think today is going to be the day. The markets initially in the first half hour, I was fooled because the markets were down 50 points, but a good recovery is what we're seeing from the day's low. Can we build on from here? That's going to be important. If that has to happen, the Nifty Bank will have to play a role because that plays out the expiry today. The monthly contract and the options data as well will expire today, all the contracts. Well, let's focus on a couple of stocks. GMM Pfaudler, well, that stock is firing up. There's a large trade that was seen earlier today. Vamakshi joins us to fill us in with more details. Vamakshi?
Well, absolutely. Firing and how we have nearly 9.2% equity worth 557 crores changed hands in pre-market block deal window. 41.2 lakh shares changed hands at 1,352 per share. Now keep in mind that over the past 1 year and in fact on a year-to-date basis, the stock has not done much. The stock had been trading around the same level as seen a year ago, and in fact GMM Pfaudler declined by almost 6.73% on a Y-to-date basis, and at the same time Nifty has seen a surge of almost 15%. Would also like to bring to your notice the shareholding pattern of the company as on June 30th. The promoter owns 25% stake in the company, and there are some notable public shareholders. Geranium Investments Limited holds 8.25% stake as per this disclosure. Now keep in mind that this stake was bought earlier from Pfaudler in August 2023 at 1,350 per share. HDFC Mutual Fund owns 4.73%, while First Sentier Investor holds nearly 3.2% stake in the company. Now this block deal has happened, but the buyers and the sellers are not immediately known. We will of course have to wait for disclosures to come post market hours to get more details, but the stock has risen after this block deal, and let me just outline a few possible reasons for the same. If it is indeed the PE investors who own such a large chunk in the company, if they have sold the stake, then the overhang of a large chunk in the future goes away, and that is that only holds if the investors who have bought this stake are diversified. The company also in the first quarter reported a decent set of numbers. Yes, there was pressure on the margins, but the margins were much better as compared to its peers, and they were not showing any signs of further degrowth. Diversification strategy has also been adopted by the company, and this in turn helped mitigate the slowdown seen in the chemical space, and they also focused on newer markets as well as industry segments. So given the block deal that has taken place, the stock is still surging higher on the back of these potential reasons.
Okay, all right, Vamakshi, thanks very much for that. So that's on GMM Pfaudler. Well, as of now, we have a very lively market when it comes to the Nifty IT stocks. LTI Mindtree is your top gain on the Nifty. It's up around 8% this week itself, almost 9%. Wipro also doing very well today, up around 3.5%. Infosys up around 2.3%. In fact, let's talk a little more about this. We have Rima who's joining in. She's giving us an update with regards to LTI Mindtree and Tata Elxsi, which are in the focus on the back of brokerage reports.
Thanks so much for that. So let me start with the LTI Mindtree, since that's leading from the front in the large cap space. Kotak today has upgraded LTI Mindtree to an add. Their target price stands at 6,200, and their key thesis is that growth rates will accelerate. FY24 was a trough. It picks up to 6.5% dollar revenue growth year on year in the current year, and then improve to 11% next year. And the two key impacted verticals, BFSI and high tech, which dragged them down last year, are now showing signs of recovery. BFSI is already recovering in the United States. Secondly, the other overhang on LTI Mindtree with a spate of senior level exits, and on that Kotak says that leadership departures have cooled off in the last 3 to 4 months. Though they do caution that margin expansion could be limited from here on, and whatever little happens is factored in. So according to them, LTI Mindtree is a good compounding play, expect strong, consistent EPS growth, and they've raised the target multiple on LTI Mindtree to 28 times. On Tata Elxsi, Kotak is very bearish. They've always been bearish, and they're saying that the stock was expensive to begin with, and now even more so after the 26% rally that we had in the stock price in the last 2 days. Valuations at 61 times a stretch. Valuations bake in a 20% revenue growth for the company for the next 10 years, FY24 to FY35. And they're saying that while the automotive OEM segment may grow, JLR is doing well, so are the other clients, they're ramping up. But the other portfolio is facing some challenges, whether it's healthcare or media and communication. So Kotak is a sell call, and their target price is at 5,500 on Tata Elxsi. Back to you.
Okay, all right, Rima, thanks very much for that. So that's on the entire mid-cap IT space and the frontline IT space. We'll take a short break. But up next, we're going to talk about an important trend which is emerging in the US, or questions with regards to the US Biosecure Act, its impact that it could possibly have on Indian pharma CDMOs as well as contract research organizations. Stay tuned.
Well, the US is currently considering the Biosecure Act, a bill set to prohibit drug manufacturers from purchasing equipment or contracting service from biotechnology companies of concern. This is by 2032. This legislation primarily aims to reduce reliance on Chinese contract drug manufacturers and research organizations, potentially creating an opportunity for Indian contract drug manufacturers and contract research organizations, namely Loris, Syngene, Piramal Pharma, as well as Newland Labs. Ekta is with us to fill us in with all of those details. Ekta, take it away.
Thanks for that. Well, at present, due to the Biosecure Act, larger multinational corporations are cautiously exploring ways to diversify their supplier base, which has led to an increase in interest from big pharma in Indian companies. Loris Labs, for example, has observed the beginning of vendor diversification and an uptick in late-phase project requests. However, the shift is expected to unfold gradually over a period of time, rather than within a few months or quarters, according to Dr. Chava of Loris Labs, who anticipates that companies will start by handing over small projects, with collaborations expanding progressively. Similarly, Piramal Pharma is experiencing more exploratory discussions although many of their customers are evaluating options, resulting in inquiries, visits, audits, and requests for proposals. No significant decision has been made yet as customers continue to assess their choices. Newland Labs is also engaged in more conversations, customer visits and meetings with US firms, but has yet to see a substantial impact in terms of active requests for proposals. While the company is optimistic about the favorable environment in the medium to long term, it's important to note that Newland is primarily an API company which differs from clinical or biological focused CDMOs. Syngene appears to be gaining more traction, likely due to its existing long-term contracts with multinational corporations, point out analysts. Jonathan Hunt of Syngene has observed a material shift in big pharma sourcing strategies to mitigate risks. Syngene, in fact, has indicated that it is participating in pilot projects related to the China switch opportunity and has seen a 50% year-on-year increase in RFPs in terms of value in the first quarter, its best performance, in fact, in 4 years. Now, while Indian companies are preparing to seize this opportunity by investing in technology and expanding capacity, there are challenges to overcome. Experts highlight that Indian companies lag behind their global peers in terms of experience, trust, technology, and large molecule capacity. While Indian companies need to enhance their capabilities while competing with US and European firms for the same business. Lastly, a few important points to note. Big Pharma is expected to move more quickly than emerging biotech companies in exploring India as an alternative due to their deeper financial resources. And although the timeline for implementing the Biosecure Act has reduced the urgency for immediate alternatives, the overall trend remains unchanged, signaling a long-term opportunity for Indian contract research and drug manufacturing organizations.
Okay, all right, take that. Thanks a lot for that. Well, I'll tell you what, we'll slip into a short break, but later on we'll continue this discussion about Biosecure Act. We'll be joined by the management of Syngene International as well as Vishal Manchanda, the pharma analyst at Systematics, who will be joining in. Stay with us.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
the last 25 years. CNBC TV. Welcome back. You're still tuned into Halftime Report, but let's continue our conversation on the US Biosecure Act and what kind of opportunities it could bring up for Indian companies and whether they are tangible or not. To discuss this, we have with us Sibaji Biswas, who's the CFO of Syngene International, and Vishal Manchanda, who's the pharma analyst at Systematics Group, joining in now. Mr. Sibaji as well as Vishal, thank you very much for taking the time out. Well, Mr. Biswas, if I could just start the conversation with you and ask you about a basic question on whether or not the US Biosecure Act is going to be a tangible opportunity for Indian CDMOs and CROs, or do you think that we just have way too much competition and we're probably lagging behind in terms of R&D as well as capabilities at this point?
Thanks, Ekta, for the question. I think it's a very tangible opportunity for sure. Today the innovator companies, be it big pharma or biotech, they have a lot of outsourced activity done out of China. And under the Biosecure Act, as you understand, over the next 8 years, they have to gradually withdraw and find alternative supply locations. So the act of diversifying or de-risking the supply chain has already started. It's a big opportunity because the volume that is currently happening in China is quite huge, many, many times bigger than what happens in India. Now, India has the talent, the infrastructure which can be scaled up, the capital that's coming in, and also, the expertise to scale up very quickly and capture it. It's also good that there is a 6 to 8 year period because the scale up will happen over that period. So there's no deluge of opportunities that's expected in the next few months, but over the next 3 to 5 years, which I say mid to long term, there is a structural advantage that Indian CROs and CDMOs have. And I think the industry is well placed to capture that opportunity.
Okay. Well, just to follow up with regards to that, Mr. Biswas, where do you think the slip between the cup and the lip lies for Indian companies? Because there are some skeptics who say that the opportunity might not be as tangible for Indian companies, probably because there is competition which is emerging from US as well as Europe at this point in time, as well as other Southeast Asian countries as well. Say, for example, the Taiwans of the world or the South Koreas of the world. So in that context, do you think that our share of incremental revenue or projects would be lesser?
I don't think so. And let me explain you why I feel the way I feel. Of course, there will be some work that will go back to the Western world, but the cost advantage that, India has and China, in all probability, has offered over a period of time cannot be wished away, right? Plus, India today offers scientific expertise at the level, which is at the global level. So I call this an Indian model, right? Get the global level expertise, that quality of science being delivered at India price. That's too attractive a proposition for the Western world to kind of not turn a blind eye to. So the big opportunity definitely is going to come to India. Now, obviously, some work will go back to US, some work will go back to Europe, and some work will go back to some of the East Asian countries. But the volume and the scale that we are talking about is very big. And there are not many places in this world which can scale up to the extent that is required to, in the next 6 to 8 years, move work out of China and actually make it available to the extent it is required. So I am very positive about the trend in the next 3 to 5 years' time for the Indian CRO CDMO industry.
Okay, all right, fair enough. Vishal, what would your view be? Because there is that grandfathering option, which is available where companies don't really need to work on any kind of opportunity till 2032, or the transition is up till 2032. So does that push the can down the road according to you?
I think such an extension was very much required. It's almost impossible to kind of transition your CDMO partner from China to an alternative destination, maybe in the next 6 months or 1 year, and that too at a scale at which China is operating. Like if you look at Wuxi alone, my sense is they would have about $6 billion of revenues annually, which is way larger than any Indian CDMO operating. So looking at the scale of the volume that's happening in China and their dependence on US, I think the large part of this revenue that the CDMOs generate in China are coming from the US. So we needed that window, but I think we'll start seeing an impact on the growth rates. At least the early stage projects should start coming into India imminently. And I think what will go to the West is the high value projects, and what will come to India imminently would be the high volume projects. So at least for the high volume projects, wherein you need large tonnages of API, India, the cost advantage is way too high for India. So like the West cannot at all, maybe the West cannot manufacture those products profitably at the price the West, the innovator companies would want their CDMO partners to manufacture for them. So I think the large volume projects should imminently start coming to India.
Okay, so you expect high volume and not really high value projects coming in. And that ties in with the question about our R&D capabilities, whereas we might have the manufacturing capabilities. But Vishal, which are the companies that you think which will be at the forefront to capitalize on this opportunity?
So I think the primary names that strike to me is Divi's, Suven, Aarti Pharma Labs, Syngene, obviously, which has got one of the best spread in the value chain. They are into discovery, they are into manufacturing, they are into biologics, they are into small molecules. So I think all of these names that come to my mind imminently on who could be the large beneficiaries here.
Okay. Well, Newland Labs made some interesting comments. They said that they're getting inquiries, Vishal, but they're not seeing, but one needs to be cognizant of the fact that they are API companies. So how does that tie in terms of, Newland? Do you think that they might actually not get that incremental order inflow because they're an API company? Make us understand why that's important in the larger scheme of things.
So my sense is, being an API company, there would be some reluctance from an IP standpoint. So companies, the innovator partners become very choosy when they want to outsource the final API to an Indian partner, because they want protection of their IP around that, and that should not get compromised. So innovators are very selective when it comes to outsourcing the API, but they might be more liberal about outsourcing the intermediate of a product. So we'll have to see how the situation evolves, how innovators adopt to this. So, but they need to choose an Indian partner, because the West does not have that kind of capacities. Also, they don't have that kind of a pool of population to support such kind of large transition that's expected to come. So I think India has to be an option, and how the innovator would respond to the situation in terms of they'll have to kind of.
Okay, all right. Well, Mr. Biswas, I'm just going to ask you questions with regards to Syngene in specific now. Y'all have mentioned on your conference calls in the past 2 quarters that, it is a big opportunity for y'all. In fact, y'all are participating in pilot projects at this point in time. There's a 50% year-on-year increase in requests for proposals that you've seen, which is the highest that you've seen in probably 4 years. Just tell us, what is the on-ground situation with Syngene at this point, the impact of the US Biosecure Act? What are you all seeing on your books right now?
Actually, we are very excited, very optimistic about what we are seeing on the ground. The number of inquiries, the exploratory discussions that are happening, the client visits, really high compared to what we have seen in the past. As you have said, RFPs have gone up in the last 2 quarters, but one should be very clear that, not everybody will just jump into the bandwagon. People will try, test, and then decide on their partners. So we are in that period where we are actually doing pilot projects and exploratory projects. And we believe with the kind of expertise that we have with Syngene, Syngene is an integrated, business which actually starts from early stage drug discovery and goes up to manufacturing. And we have actually global level capabilities across the value chain. We are very well placed to deliver on these pilot projects. So we are very optimistic about the mid to long term. It will take time. There is nothing which will happen in the next 1 or 2 quarters, but over the mid to long term, structurally, I believe we are in a position of an advantage. And Syngene being the business leader in this space, particularly in the research area, I think we are very, very well placed.
Okay, all right, Mr. Biswas as well as Vishal, we're going to leave it on that note. I'm sure we're going to revisit this discussion many more times as time goes by. Thank you very much for joining in and speaking with us about the US Biosecure Act. Well, we need to, in fact, cut across to Ritu, who is with the management of RBL Bank on the sidelines of the Global FinTech Fest. Let's cut in.
FinTech Fest, right before it, the big topic of discussion has been the unified lending interface. Just briefly help us understand how it would benefit banks like you and how does it change the lending ecosystem?
How I understand it from my perspective, I'm just trying to share with you. ULI is going to be a game changer as far as a banker is concerned for 2 reasons. Today, I get a kaleidoscopic view of my borrowers or the prospective borrowers. This platform may enable us to get a standardized view and much broader and deeper view of the borrowers' existing past transactions. That will provide us an insight. Second, it is going to bring in the digital data. Hitherto, it is in isolations and pockets elsewhere. So when you try to bring all that digital data onto the platform, it enables us to make a very informed decision and much more quickly than what we are doing it. So it is going to help us 2 things. One, assessing the right sizing or right borrowing ability of the borrower. And second, his other transactions with the rest of the financial institutions, which is going to help us out to understand better about his ability and capacity to undertake that particular business. So this will help the banks, in my view. Personal view is that it is going to bring them to decide quickly and decide precisely the size of the loan which we wanted to give.
So broadly, it will, deepen your, or rather strengthen your credit underwriting. But, if you could give us a sense of how much additional credit could this unlock, to the so far unbanked or underbanked sections, the MSMEs, the small rural borrowers.
See, MSME, if I recall somewhere in one of the assessment, it has been found, there are 25 lakh crores of the credit is due to that particular segment, which they are partly being met through unorganized, partly met from borrowings from relatives. And in my understanding, when we get into the field, is that most of these MSMEs undertake a transactional based borrowings. If we are able to facilitate them to do their business based borrowings, so possibly the ability to do more will be there. The standard of business will also go up. So the opportunity is immense. In my view, if you were to put it very sharply, it is going to be a geometrical progression rather than arithmetical progression.
Well, a quick word on the business momentum as well. You had strong NIMs in the quarter, but the fact of the matter is this race for deposit accretion, the higher cost of borrowing perhaps, how will all that play into, how this trajectory will evolve in the future? Do you see, NIM sustaining at the current levels for RBL Bank?
See, as far as our bank is concerned, we were on record. We told that we will be flattish as far as the NIM is concerned for a couple of quarters because of that, the credit card transitional related slippages which we saw it in our book, which may stabilize and will normalize after 1 or 2 quarters. Thereafter, it will start inching up for the simple reason that the cost of deposit, no doubt, it is just inching up in, let us say, in single digit, and our yield on advances also inching up in double digit. So the mix of advances, what we are doing it, will be able to sustain this increase in the cost, which will flattish as far as the NIM is concerned, and over a period of next couple of quarters, it will start inching up in few bits thereafter.
So on this deposit especially, for RBL Bank, again, it was down sequentially by about 2%. With the finance minister now also asking banks to come up with more innovative ways for deposit accretion, what sort of strategies do you have in place to, ensure that there is higher deposit growth? What are your targets for the year?
See, if you look at that, deposit is for the purpose of deployment. When you have a deployment thing, you'll be in a position to get an appropriate deposit mobilization. I wanted to look at RBL from a different prism. Like you look at it, look at my accretion in less than 3 crores and less than 2 crores, which was the earlier one. we have been consistently growing on quarter every year, around 20, 22% and 24%, which we have a strong momentum. Our entire DNA has changed from that of the bulk deposit to the granular deposit. So the granular, what I mean is all our distribution centers, including my RFL subsidiaries, they are able to mobilize their customers for a low value, maybe 50 lakhs, 20 lakhs, 10 lakhs, less than 2 crores. That number is increasing multifold. So if we are confident that we will be able to sustain it, because there was a time that on an average we were booking around 600 to 700 crores per month, which went up to 800 crores per month as well. And we are confident that we will be able to maintain that momentum for the two reasons. One is our customer service, definitely a little notch up from some of the competitors who have been working with. And our rate of interest is also not way away from the competitors.
Okay, all right. So that is RBL Bank. But on that note, we need to take a short break. Up next, we'll be discussing technicals. Pritesh Mehta will be joining in from Yes Securities. Stay tuned. Follow the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe.
Good session for the bulls. Fresh all-time highs holding at 25,100. Where do we go from here? To help us out with that, Pritesh Mehta joins us on the show. Hi, Pritesh. Good day and good to see you win. What's your view? What's the levels you're tracking on the upside? Where does support lie? And fill us in with your picks.
So good afternoon, guys. So one thing that I've learned of the last 3 weeks that our market has been resilient. You know, there had been a plethora of bad news, but the decline in the market was short-lived and it was first to bounce back. It is outperforming the Asian markets, it's outperforming the MSCI emerging markets. Apart from that, we have seen various sectors taking leadership. Today is the day of IT. Yes, it is about insurance, and the day before it was, earlier it was about banks and financials. But that's a sign that markets structure is improving, the breadth is improving. When I talk about breadth, I'm talking about Nifty and broader markets. There was a scenario where Nifty 250 small cap index is outperforming Nifty. So when such kind of intelligence are playing out, I think we are in a sweet spot. And in this kind of scenario, we should not be talking about upside targets. We need to ride that trend.
Okay, all right. What about stocks?
So yes, one particular space matters. It has been underperformer. But when you look at the structure, Nifty Metal Index, it has bounced off multiple support zone, and Tata Steel has caught our attention. The stock has made a bullish, anchor column, and we are witnessing follow-through moves coming in. So we can see a target of 175, 180 on the upside. The stop loss would be around 147. The second stock which we like is SBI Life. We have great customers insurance index, and this stock has been outperforming that index. So from here on, we can see a rally towards 2,100, and the stop would be around 1,780.
Okay, all right, Pritesh, thanks a lot for that. Well, for the time being, we'll slip in a short break. On the other side, we'll get an exclusive conversation with Christopher Waller. Stay with us.
A success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Consumer stock valuations are high, undoubtedly, but they are relatively lower compared to their historical average, and their ROEs are likely to be better. So we are exactly doing what I've said, moving from momentum to quality, moving from low floating stock counters to high floating stock counters, and moving from expensive valuation to reasonable valuation. So there will be enough reasons available for correction, but we believe based on our fundamentals, liquidity and sentiment, corrections are unlikely to be deeper like we saw during COVID time. They are more likely to be what we saw during October 21 to June 22 period, a minor correction, combination of time and price correction.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or Rs 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5.
Welcome back. Well, let's see whether the Bank Nifty breaks into the green, just about lower by around 54 odd points at this point in time. But in terms of losers for the Nifty stocks, we have Hero Moto, which is down around 1.4% at this point. We have Asian Paints, which is sulking a bit along with Britannia. So a couple of these FMCG and consumer-related stocks such as autos is seeing some amount of pressure at this point in time. Otherwise, it's turning out to be a good session for a couple of the stocks on the upside. NBCC, for example, is seeing a lot of volume and price action today, so that stock is up around 16 odd percent. Just want to point out that overall for the Nifty as well, it's given up a little bit of its highs from a little bit of its gains from the day's high, but still holding at record highs, or holding above the previous record high at least. So 25,096 odd is currently where the Nifty is at. The momentum continues. Mid-cap index has shaved off a little bit, so it's just about flattened out, so down up around 70 odd points as we speak for the mid-cap index. Trend continues to go from strength to strength, so Trent is up around 3.8% today as well. That stock is now currently at around over 7,130 odd rupees, up around 133% this year. Well, on the sidelines of the ongoing Global FinTech Fest, our colleague Ritu Singh exclusively caught up with Christopher Waller, who is a member of the US Fed Reserve Board of Governors, and discussed the banking crisis in the US FinTech, UPI linkage, and more. Listen in.
I just wanted to understand the kind of interactions that you've been having with the payment players here. What are the sort of technologies you've been most excited about, and, what did you take away from your trip here so far?
Yeah, so the main reason I came here was to learn more about UPI and the payment system and the payments landscape in India, which I've heard a lot about since I took over as overseeing the payment system for the U.S. So it's been great to kind of understand how it started, what the technology stack is, how it's been developed, how they've got everybody involved, and just basically how to improve the digital payment system. And it's been an amazing success. I've also learned sort of the things that would be very hard for us to try to do in the United States, just different constraints, both politically, privacy, and things like that. But nevertheless, it helps me go back and think about how we could move things forward in the U.S.
Well, you spoke a lot about interlinkages between the fast payment systems here in India. Of course, we've had the UPI, and we've had several bilateral agreements with various countries for those kind of linkages. How soon before we hear something with the U.S.?
Well, like I said, we can do interlinking, but our system isn't developed yet. So you're going to connect, it's a bridge to nowhere because nothing's going to move until we get our system completely built up. So that's what I try to communicate, that it's going to take us another couple of years to fully expand our system so that if you want to send a payment from India to anywhere in the U.S., it'll get there, or vice versa. But we're not there yet. So this is just a matter of building out our network, and when it's big enough and it's broad enough, then interlinking would be a serious value proposition.
Well, you heard the Economic Secretary, Ministry of External Affairs earlier talking about how India has been a rule abider so far, but perhaps it can be a rule maker. When you talk about the fintech innovations, perhaps in that theme, with the kind of technology India has built with fast payments, are you looking at some sort of technology transfer, some sort of partnership to build your fast payment ecosystem back in the U.S.?
Yeah, I mean, the technology part of interlinking is actually the easiest part. The hard part is the legal, the governance, rulemaking, and that requires people to sit down in a room and agree on the way things are going to get done. So that's not a technology problem. The technology part is actually fairly easy to do. So anyway, that's where things would have to then move, is how do we agree to do the governance, processing, clearing and settlement of international payments is not a trivial problem, and how that would be done and what exchange rates you would do that at. So that's stuff that would have to be settled on, and that actually, we know from experience with our own ACH that takes a while to get that done.
Yeah. Governor, if I may get a word in on the health of the U.S. Financial banking system, since the crisis, of course, last year, now, do you see any risks building up? What is your overall sort of assessment of the financial ecosystem?
We had a banking crisis in March of 23. The Federal Reserve stepped in, set up our lending facilities to make sure that the liquidity and everything, and that has calmed down, and we were able to close that facility in March of this year. So that's our confidence that everything in the banking system is fine.
Discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
जब वो किसानों के हितकारी बिल जो वापस लिए गए, यहाँ पे जो फार्मर्स प्रोटेस्ट हुए, वहाँ पे लाशें लटकी थी, वहाँ पे रेप हो रहे थे। किसानों के हितकारी बिल जो वापस लिए गए थे, तो पूरा देश जो है वो चौंक गया था। वो किसान आज भी वहाँ बैठे, वो बड़ी लंबी प्लानिंग थी, जैसे बांग्लादेश में हुई।
Investing.
Welcome back, and the focus is on sugar this time around, and to talk on that we're now joined by Mr. Praful Vitlani. He is chairman at All India Sugar Trade Association. Mr. Vitlani, hi, thank you so much for joining us. And first of all, on the international markets, because that is where the major price move seems to be happening, from a low of almost 17.5 to 19.7 in matter of days, and less than a week has been nothing short of a huge short covering. We've seen Brazil at the center of this with the kind of wildfires and expectation that 5 million tons of cane perhaps has gotten destroyed there. What's your sense on the international markets availability and prices?
Yeah, this repeat of story of 2017-18 in Brazil, and physically, really, we see this year there cannot be more loss than of 1 million metric ton of sugar from Brazil. What the concerns are for the next season, that due to dryness, there could be less sucrose available in sugarcane in Brazil next year. And it's very difficult to say now that how much loss will be in the next season. But I can predict that NIBOT March and May month pricing can go towards the north or northwards, and sucrose will be found less in next year. The sugar mix, which was expected around 52%, can come down to 50%. And the eyes will be on India, that whether government of India will allow any export or not, and if allow, when. Suppose it allows after March, then there will be no raw sugar, only white sugar export will be there. So particularly NIBOT is going to be very active in the world, and this panic is due to both the things, that Brazil will have less production in next year, whereas India is not there for supply, because the government of India is more looking towards the having maximum ethanol production after the domestic consumption requirement of sugar.
Sure. So I'll come to India, but before that, the kind of moves that we have seen in the international markets, Mr. Vitlani, haven't had much of an impact in the Indian prices, Indian sugar stocks for that matter. Would you say that at this point in time, we are pretty isolated with what's happening, isolated from what's happening in the international markets?
We are in a house arrest. We have all regulations. We cannot sell more than what is allowed. We cannot sell less what is allowed by the industry. And regulated things, India price cannot go up, though Brazil can go up. And we are fully, almost fully regulated that how much we can, traders, also have some, give the how much stock they have every month. So very much regularized to the traders as well as the industry, that industry can sell not more than this, and day by day regulations are going ahead. So supply will be, and we are having, according to us, is around 7.5 million metric ton closing stock for 2023-24. So it is more than 1.5 million metric ton than what it is regularly required. So I don't think that India price can go up.
So going forward, especially for the Indian markets itself, are you looking at any restrictions being eased at all?
Yes, I do. But that is only for the ethanol. What I'm looking after is that ethanol blending from sugarcane juice will be allowed from 1st of November itself. Maybe it could be in 3 installments with starting of 2 million metric ton initially. And as the season progress and what is the production likely to be get clear, because anything we predict currently that is subject to error of 10 to 15%. But in January, it get clear with error of only 4-5%. So maybe they start initial one stage of 2 million metric ton, then maybe next 1.5, next 1.5, can be go till 5 million metric ton. But it will be, first of all, for ethanol after domestic. Ethanol pricing, yes, we are looking very much positive that by in month of October, there could be some 6 to 8% price increment of procurement of ethanol from sugar cane juice by OMC. That is also looks like on the board. So whatever positiveness are likely to come, that's in ethanol.
All right. Also, my final question really on, we are at the cusp of the festival season now and the demand has already begun. What's your sense for the month of September in sense of quota that the government could come with? And are you looking at a very significant increase in sugar consumption from India?
Yeah, the September quota is also government will give slightly higher. This is what experience of my 4 decades says. Because when the food index goes up, the government control is only on sugar. So sugar get penalized because of other commodity price goes up, inflation. But sugar, I don't think that any low quota can come for the September, but not higher also, because government is already giving a signal that last month they have given, extension for the month of last month. So they looking after, they are comfortable at today's price. They are not interested to price to go down as such, but looks like to be a stability.
Point taken. Mr. Vitlani, as always, thank you so much for joining us. Thank you for talking about the international markets, Indian festival demand, and of course, ethanol policy restrictions, which perhaps are in the coming. But with that, that's all the time on this show. Business Lunch will take all the action ahead.
Stocks push up with Nifty at all-time highs. IT as well as telecom and healthcare notch gains while FMCG, metals and financials drag.
L&T Technology Services says conversion and pipelines have vastly improved even as it sets a $2 billion medium-term revenue goal. A recovery in BFSI tech spending in the US also prompts a bullish view on LTI Mindtree.
National Stock Exchange is set to seek SEBI's no objection certificate for its proposed IPO after its board cleared the move. The country's largest exchange has an over 90% share in equity and derivative segments.
Bitcoin plunges below $60,000 on likely leverage-driven liquidation. Ethereum too takes a beating. Meanwhile, Nasdaq has sought approval from the SEC to launch Bitcoin index options.
Christopher Waller, member of the U.S. Federal Reserve Board of Governors, bats for same regulations for all players operating in a segment, including the fintechs. On integration with UPI, he says a universal payment system in U.S. is still a while away. Hello and welcome. You've tuned into Business Lunch. I'm Nisha and with me as always is Hormaz. So Hormaz, it's a record smashing day for our markets and Nifty 50 still holding at record levels at this particular moment. In fact, let's take a look at that. Except for Bank Nifty, which is now refusing to participate, it's showing minor losses at this particular point. The rest of the indices are in the green. But for the mid-cap universe also, it's just a consolation, which is pretty much flat with a green bias, and advance decline ratio also marginally in favor of the advances. But what we are celebrating, Hormaz, clearly is the Nifty 50's rise, and it's comfortably above the 25,100 level now.
Yeah, it didn't look so at the start of the trading session, at least for the first couple of hours, but then there's been a very swift recovery, as you can see from the lows of the day. Now comfortably above that mark of 25,100, breaking past the previous record highs of 25,78 is what the Nifty had to cross. And this is despite the Nifty Bank's underperformance, and after a lot of expectation that the Nifty Bank would be the one that would lead the Nifty towards its highs. It has not been the case. The Nifty Bank continues to remain in the red. It's the monthly expiry for the index today, continues to hover around those 51,200, 51,300 levels. It's been extremely range bound in today's session, not very significant movements, but what has led the index higher today is IT, and it's been an extremely stellar move from the Nifty IT index and a lot of these IT stocks that have contributed to the gains today. At the highest point of the day is the Nifty IT index, and there you can see the contributions as well. Infosys, LTI Mindtree, Wipro and Tech Mahindra also among the gains. Wipro though is the top gainer on the Nifty in today's trading session, almost 4% higher on Wipro. Infosys also trading with healthy gains of 2.5%, as is Tech Mahindra and LTI Mindtree also contributing to the gains. It is the large cap IT and the mid cap IT has fared even better. Persistent Systems, Coforge, all of these names have seen very, very significant gains in today's trading session. So it is an IT-led rally in today's session for the Nifty to head towards a new record high now, comfortably above the mark of 25,100 as we speak. But let us also listen in to some important market voices now as to what they make of the rally that we have seen so far.
So there will be enough reasons available for correction, but we believe based on our fundamentals, liquidity and sentiment, corrections are unlikely to be deeper like we saw during COVID time. They are more likely to be what we saw during October 21 to June 22 period, a minor correction, combination of time and price correction. Consumer stock valuations are high, undoubtedly, but they are relatively lower compared to their historical average, and their ROEs are likely to be better. So we are exactly doing what I've said, moving from momentum to quality, moving from low floating stock counters to high floating stock counters, and moving from expensive valuation to reasonable valuation.
Bull market peaks are made of excesses.
You need excesses in credit, you need excesses in corporate activity, you need an excess in earnings, valuations, and sentiment. So there are parts of the markets that look a little frothy, no doubt about it. There are some SMIDs that look, small cap, mid cap stocks that look a little extended. But we are nowhere close to the peak on issuances. We have not seen any credit recovery of note. We're yet to see a major peak in earnings. So there are many parts of the market that are not there as yet. I suspect they will all get there in time, and we will, of course, hit a peak. But my best guess is we are not there as yet. But the things to note are, I think, with respect to the credit cycle. It's a very benign and modest credit cycle. And credit to GDP in the private sector is still below previous peaks. And it's hard to fathom that we get into a bull market peak without actually getting a major credit cycle. So the thing to watch out is to see how credit pans out. I think we're still far away from a new peak. We will get to a new peak, especially on corporate balance sheets, which remain quite light. So with light balance sheets, with earnings mid-cycle, it doesn't feel like a bull market peak, even though valuations may be a little rich compared to where investors want them to be.
Some important market voices there, and since we were on the subject of the markets, the very important level to now on the upside for the Nifty is now going to be 25,281, and that is because if that happens, it will be 4,000 points from the budget day low that we had made on the 23rd of July. So 4,000 points in just a month for the Nifty, and it's been that kind of a move in the index, the recovery that we have seen post the budget, and there have been significant contributions that have come in from the not so usual suspect names. If you can see the list there, Shriram Finance is the top gainer on the Nifty since the budget day, and SBI Life, BPCL, HDFC Life, and even Bajaj Auto finds a mention in this list. Double-digit gains seen in almost all of these names. Shriram Finance is up almost 20% since the lows of the budget. SBI Life also makes a mention here, as is Bajaj Auto, 13.5% since then. But there have been some underperformers as well, but no prizes for guessing here. The underperformance is led by banks, and Axis Bank is one of the leading underperformers on the Nifty since the budget, almost 8% lower since those levels there. SBI is the other one, almost 5.5% lower over the last 1 month. But Hero MotoCorp finds a mention here, 4% lower during this period, as is Grasim, and Britannia also ranks among the underperformers. But the list of outperformers, of course, is more compared to the list of the underperformers on the Nifty since the lows of the budget.
All right. So that's an important point to note here. Nifty revving up since the budget day and right now unstoppable at record levels. But IT has a big role to play, but there's more news on the IT sector. Mid-cap IT companies like LTI, Mindtree as well as Tata Elxsi are in focus on the back of reports coming in from the brokerage house Kotak. In fact, LTI, Mindtree upgraded by this brokerage firm, and Tata Elxsi is under pressure following Kotak's sell rating on this particular counter. Let's find out from Reema Tendulkar on what the brokerage report had to say, and clearly the market is impacted by their views.
Indeed, let me start with LTI Mindtree because there is a big up move on the stock. This is after Kotak upgrades LTI Mindtree to an ad and they raise the target price to 6,200. They believe that there is going to be growth acceleration. So FY24 growth rate at 4.4% was a trough. It picks up to 6.5% in the current year and accelerates to 11% in FY26. And this will be driven by the recovery in the two challenged verticals, BFSI and healthcare. BFSI is already showing signs of a pickup in spending, particularly amongst the US banks. The second overhang on LTI Mindtree was the leadership exits. After LTI and Mindtree merged, there were a spate of senior level exits. But now Kotak points out that at least some of the leadership departures have cooled off in the last 3 to 4 months. That said, don't expect too much by way of margin expansion, but this is going to be one consistent compounder. So they're expecting a strong EPS growth. They raised the target multiple to 28 times. On Tata Elxsi, now Kotak Institutional Equities has been bearish, and now the stock went up 26% in the span of 2 days, yesterday and the prior day. So Kotak says that, well, Tata Elxsi was expensive to begin with, and now even more so. They've got a sell call. Target price is 5,500. Valuations are at 61 times forward multiple. Valuations bake in a 20% revenue growth for the next 10 years. And that, it just seems to be too rich, according to Kotak Institutional Equities. The auto side of the business is growing well, but the rest of the business, which is 50%, which includes healthcare, media, communication, is facing some challenges. So therefore, Kotak believes, valuations are too rich. It's an excellent story, great growth story, but valuations are far too expensive, which is why they've got a sell call with a target price of 5,500. Back to you.
Indeed, Reema, thanks a lot for that. Not having a very good day at the office is Tata Elxsi, is the only one among those Tata Group high-flying names that is trading with some losses in today's session. Moving on then, focusing on some buzzing stocks, GMM Pfaudler has fired up in today's session as almost 9% equity worth 550 crores changed hands in a block deal today, while MCX is gaining on the back of a positive brokerage report. Vamakshi is here to tell us more on both of these names. Vamakshi, over to you.
Well, absolutely. MCX is surging on the back of positive commentary that came through from the management. They met up with HDFC Institutional when they said that there has been some strategic direction that has been provided. They have a very exciting product pipeline lined ahead. They're launching new products such as monthly series as well as index option. The technical testing for the weekly option product is also currently in progress. They're continuously enhancing the technology stack. They're also focusing on increasing institutional participation and hedging activity on the platform. Additionally, the appointment of the new MD and CEO, who is Mrs. Praveena Rai, will significantly boost these strategic initiatives. Moreover, MCX is well positioned to withstand ongoing regulatory challenges. The first one being the carbon index option volumes. The second one being the reversal of interest earned on clearing funds to clearing members. Now, the company said that they have not quantified the impact from this regulation, but they're expecting the impact to be very minimal. The third one being true to label charges, which will discontinue the practice of levying slab-wise fee structure. Over here, they believe that this will be neutral for exchanges as they will switch to blended fees. HDFC Institutional believes that MCX will witness sustained growth in options volume. They're expecting notional as well as premium volume to register 61% and 43% CAGR from FY24 to 27 respectively. They're maintaining their revenue and EPS estimates, but they're increasing their multiple to 40 times as compared to 35 times earlier because of better visibility. So given those factors, we have HDFC Institutional maintaining a buy rating on this counter but raising its target price to 6,000 per share. GMM Pfaudler is the next one I'm focusing on. There was a huge block deal in the pre-market block deal window, 9.2% equity worth 557 crores change hands, 41.2 lakh shares change hands at 1,352 per share. Now keep in mind that the stock has not done much in the past 1 year or even on a year-to-date basis. In fact, it is trading at a similar level as was seen in the past year. GMM Pfaudler on a year-to-date basis has declined by almost 6.73%, while NSE has risen by 15%. Let's also look at the shareholding structure. We have the promoter holding 25%. There is also Geranium Investment Limited, which holds 8.25%. HDFC Mutual Fund and First Sentier Investments also hold a notable portion in the company. But the buyers and sellers of this deal are not immediately known, so we will have to wait for post-market disclosures. But that said, despite this huge block deal, the stock is up in trade, and that is a potential reason could be that this is a huge, if indeed it is the PE investors that have sold this, it's a huge chunk, and if it has gone into a diversified set of institutional investors, it means that such a huge block may not come up in the future, and resultantly the stock is up in trade today.
All right. Thanks, Vamakshi, for taking us through all the stocks that have been buzzing in trade today. Let's also focus on the primary market action. And as we get developments in the much-awaited IPO of the National Stock Exchange, or NSE, sources tell CNBC TV18 that the exchange has sought a no-objection certificate from SEBI. Now, the NSE board met yesterday and approved the decision to file for an application seeking a no-objection certificate, or the NOC, is given, remember, to take SEBI's go-ahead from the department that is concerned with Market Infrastructure Institution, or MIIs. Now, it is also needed to get SEBI's clearance for NSE to file an IPO's DRHP. This will be a mother of all IPOs. Of course, the NOC is something that is to be awaited. Now it's time for a short breather on Business Lunch. On the other side, we put the focus on the boardroom battle underway at Godfrey Phillips. Stay tuned for that.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
Back with us here on Business Lunch. Now, a boardroom battle is underway at Godfrey Phillips with a dispute between Beena Modi and her son Samir Modi. Now, the company's Nomination and Remuneration Committee has recommended against Samir Modi's reappointment to the board. The AGM is set to be held on the 6th of September, where Beena Modi's reappointment to the board is awaiting shareholder approval. Ashmit is here to tell us more. Ashmit.
Well, a multi-layered promoter dispute at the heart of Godfrey Phillips, at the heart of the promoter family, causing disruption, causing embarrassment, and could also lead to governance and financial issues. The issue travels back to 2019. After the death of Mr. KK Modi, the question arose as to who will head the family. And therein, importantly, Beena Modi had been elevated as the managing director of Godfrey Phillips. This, importantly, had been opposed by her son, Lalit Modi, as well as Samir Modi. Lalit Modi, of course, is the economic fugitive currently believed to be in London. Now, Lalit Modi, importantly, at the time had sought for selling off the entire company and the assets, and for that money to be distributed between the promoter family. This was opposed by Beena Modi and Samir Modi, first at the arbitration in Singapore, and then subsequently a settlement was sought before the Delhi High Court. In the interim, meanwhile, Lalit Modi's son, Ruchir Modi, had filed a complaint before the SFIO regarding corporate governance issues. Not just that, the most recent figure has been that in the month of June, Samir Modi made an official complaint with the FIR, with the police, that he was physically assaulted by the security officer of Beena Modi. Beena Modi, in turn, has filed defamation proceedings against Samir Modi. The latest, of course, trigger, however, will be the upcoming AGM. Now, this, importantly, is the AGM that will decide on, number one, the reappointment of Beena Modi, and number two, the exclusion of Samir Modi from the board of directors. Importantly, advisory firms based out of US are already issuing recommendations to shareholders to vote against Beena Modi's reappointment and against Samir Modi's exclusion from the board as well. So clearly, the dust is far from settled as far as this promoter dispute is concerned at Godfrey Phillips.
Thanks so much, Ashmit, for getting us all those latest details on the family dispute at Godfrey Phillips. And of course, the votes of the shareholders in the upcoming AGM will be critical. Now, earlier today, we spoke to J.N. Gupta of Stakeholders Empowerment Services and also Hetal Dalal of Institutional Advisory Services to better understand the view on the family dispute. Listen in.
We have opposed all three resolution orders. We have said all three family members should be ousted from the board for the simple reason that in boardroom, if you have a divided house, the company will suffer and shareholders will suffer. So I am asking basic question to them, or rather to independent directors, that what for shareholders have put them on the board? Obviously, to ensure that the company is run in fair manner.
Compensation levels are significantly high. They're just open-ended. It's basically up to 5% of profits. For Beena Modi, also compensation is up to 5% of profits. And aggregate executive compensation can go all the way up to 14% of profits. So essentially, for Charu Modi, we estimate a compensation to be anywhere between 50 to 60 crores, which is not only high for the size of business, it compares to some of the Sensex company CEOs.
boardroom battle brewing there at Godfrey Phillips. Now, sources are telling CNBC TV18 that the Bangladesh government owes over $1 billion in payments to Indian power producers, with $800 million due to the Adani Group itself. Abhimanyu is here to tell us more. Abhimanyu, what are you picking up?
Well, the dues are mounting for several power producers, and notably for Adani Power, as it supplies power to Bangladesh through its Goda plant located in Jharkhand in India, which supplies up to 7 to 10% of Bangladesh's power demand. And the average monthly billing of the plant is around 90 to 100 million US dollars. Now, the dues are mounting even as the supply of power is continuing to Bangladesh. Adani Power, sources in Adani Power have indicated that they have been supplying electricity continuously to Bangladesh as per the requirements and the schedule laid down by the Bangladesh Power Development Boards. However, they have indicated that they will find it difficult to continue supplying power in absence of any payments which would be made, since they have to make upfront payments not just to coal suppliers but also to other stakeholders in the value chain, namely the lenders and people and companies supplying other commodities. Now, currently, Bangladesh has long-term PPA ties with 4 other imported coal-based power generators apart from Adani Power, namely Paira, Rampal, Matarbari and Barisal Electric Power. Now, these plants, however, do not operate. If at all, they are not paid for as far as the electricity which is to be generated is concerned, because payments are made as per the coal supplied by the Bangladesh government by way of the US dollar letter of credit or the US dollar upfront payment. So it remains to be seen till what extent Adani Power is going to continue supplying power, and whether the Bangladesh government has already devised a strategy to ensure that the pending payments are cleared at the earliest, to ensure that power continues to remain supplied from the Adani Power plant in India.
All right, Abhimanyu, an important piece of story there. Thanks so much for getting us all those details. With that, we'll slip into a short breather on Business Lunch. But up next, we'll get you all the market action. Stay tuned for that.
CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched
investing.
Welcome back. You're watching Business Lunch, and markets holding on to the gains at 25,100 level, comfortable with Nifty 50. But what's actually losing some ground is Bank Nifty, also because of the heavyweights like State Bank of India as well as Kotak and Axis losing some ground in last few minutes of trade. Now, in important national development for the day, heavy showers have led to massive flooding in several parts of the state of Gujarat. At least 16 people have died in rain-related incidents, while over 15,000 have been evacuated so far. Now, the relief and rescue operations involving the NDRF, SDRF, Army and Air Force are underway in Vadodara and in Saurashtra region has been worst amongst all the districts, and the local administration has also shut the Ajwa as well as the Pratappura reservoir gates to mitigate waterlogging in Vadodara. Meanwhile, the Met Department has issued red alert for some of these districts. All right, so that's the state of affairs in Gujarat. With that, it's time to wrap on this edition of Business Lunch. From Hormaz, myself and the entire team, thanks so much for tuning in.
There are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market off the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform. As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom. We see opportunity in sectors like two-wheelers, tractors. Also, we see opportunity in real estate ancillary kind of industries. With the specter of rates coming down and hopefully liquidity improving, we also see opportunities in banks, large banks which suffered due to liquidity in the past. We also see opportunity in the smaller banks or the non-banks. So we are looking at the segments like the pipes, the cables, the switch gears, the lighting and all those segments, because all those segments we believe the organized sector has a definite edge and they can do better.
Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra. And Ekta still holding on to those, all-time high levels. The Nifty is above 25,100.
Hi, Reema. Well, yes, absolutely. You can't complain about the kind of, levels that we're seeing for the markets. Mid-cap index, however, has given up its gains. So just about flattened out at this point in time. But nonetheless, we have a lot of ground to cover in the next 30-odd minutes. These are the top stories. Stocks push up with the Nifty at a new all-time high. IT, telecom and healthcare notch gains, while FMCG, metals and financials drag. Mid-caps relatively underperform.
L&T Tech Services gains on the back of positive management commentary at the analyst meet. They say they aspire to achieve a revenue run rate of $2 billion and EBIT margins of 17-18% over the medium term. Brokerage house Motilal Oswal and Nuvama. Brokerage house Motilal Oswal is bullish. Nuvama has a hold rating. Meanwhile, Tata Elxsi slips after the massive rally yesterday as Kotak Institutional Equities issues a sell call on the stock with a target price of 5,500.
NBCC rallies after it announces that its board will mull a bonus issue on the 31st of August.
GMM Pfaudler also gains after 9.2% equity of 41 lakh shares worth 557 crore changes hands at a price of 1,352 rupees per share.
And Orient Technologies sees a strong debut on the street. The stock lists at a 39% premium to its issue price of 206 rupees per share.
And now it's over to Hormuz for the mid-cap movers of the day. Hormuz.
You know, the broader markets may have given up their gains, but it's a day where it's all about the benchmark index, where you talk about the stock-specific activity that is happening in the broader markets. We'll start out with the gainers in today's session. NBCC, as you just mentioned, continuing to build on those gains, now 16% higher. On the news of the bonus issue, HUDCO is nearing 300 again, another 6% in today's session. IEX is having a good day now, almost 4.5%, and BSE slightly off the highs of the day, but still holding on to gains of around 3%. If it is large cap IT that is driving the index higher, it is mid cap IT that is not far behind as well. And L&T Tech, Coforge, Emphasis, Persistent, all of them seeing very healthy gains between 2.5% to 4% in today's trading session. The Tata Group stocks were buzzing over the last few days, and they continue to remain in focus today as well. Not so much for Tata Technologies, but Tata Investment continues to move higher off the highs of the day, but still 4% up. But Tata Elxsi not having a good day at the office today, almost 6.5% lower, the top loser on the Nifty 500 in today's session. Stocks that are doing well on the back of strong volumes, and GMM Pfaudler, of course, had to be there considering the block deal that we saw early in the morning, and it's off the highs of the day, but still 6.5% higher. Engineers India is gaining 5% on very strong volumes, as is MapMyIndia and PNB Housing. And barring Tata Elxsi, some other stocks that are not doing so well in today's trading session include KFin Tech. This stock has seen a bit of a sell-off in the last few trading sessions after the moves that it saw at the start of the month. Now 5.5% down today as well. And Nuvama Wealth and Nykaa also down to the day's low, trading with losses of 3 to 3.5%. Back to you.
Thank you very much for that. In the mid-cap space, Orient Technology, the new kid on the block, catches your attention. It's a small company. Its market cap has just crossed that 1,000 crore mark. It's seen a bumper listing. The issue price was 208, and the stock has gained nearly 100 rupees. It's now crossed the 300 rupee mark. It had seen very strong subscription. The company raised about 215 crore, a combination of fresh issue of 120 crore and an offer for sale. And for this 215 crore of what was on offer, the company saw a demand of more than 150 times. This is a company which provides IT infrastructure. So basically, they will help you with your switches, router, any data center solutions that you need, security solutions for CCTV. They also provide IT facility management services, managed services, your typically IT services, and they also provide some sort of cloud services. So if you want to migrate to cloud, the company provides that. But it's a smaller company compared to the rest of the IT services companies. Its top line growth last year was about 600 crore rupees. But that's about Orient Technology, the new kid on the block, having a fabulous day one. But now let's put the spotlight on electrical equipment sector. Now, BNP Paribas believes that Q1 FY25 industry revenue growth was very strong for the entire sector, and it was fueled by a hot summer. So the room air conditioning business did very well. But to discuss the way forward, we have with us Niransh Jain, India analyst at BNP Paribas, joining in. Thank you, Niransh, for joining in. Let's break up this entire sector into different parts. You've got cables and wires, you've got room air conditioning. So, for each of these three sectors that are there, can you tell us what the growth was like in the quarter gone by and what stood out for you?
Yeah, hi. Thank you for having me on the show. So see, overall, like as you said, the first quarter was a bumper quarter for the entire durable space, and this was mainly driven by the white goods. So if as you broadly categorize them into the three subsegments, like the white goods saw a very strong 40% plus kind of a revenue growth, mainly driven by the room air conditioning, where all the key listed players saw a very strong 40-50% kind of a growth, as well as the durables like fans, highlighting. So these are the companies that also saw a very strong summer portfolio demand, and which led to a very strong growth of high double digits for these companies as well. On the other hand, for the cables and wires, the growth moderated this quarter, primarily led by some channel destocking in the wire segment because of a rise in the commodity prices during the quarter end, as well as there had been some decline in exports. So, like to summarize, this quarter was mainly led by a very strong performance across all the white goods as well as the ECD players.
Okay, all right. Niransh, wanted to understand that what are you assessing when it comes to demand going forward in terms of the festive season? And hence, how would that weigh down in terms of what we can expect on numbers?
Right. So see, if I just take a step back, so the overall B2C space has sort of suffered over the last 2 to 3 years, and this is primarily because of some softness in demand, because of the rising inflation, as well as there had been the higher inventory cost and some regulatory impact for these companies. So this company is coming out from that lullness period, and on the back of that, as well as a harsher summer, these companies delivered a very strong growth. Now, going ahead, we have to watch out whether the revival in the B2C demand sustains, and for that, the key trigger would be how the festive season pans out. So as of now, the stocks has seen a very sharp run up in the last 5 to 6 months, primarily on the back of a very strong performance this summer season. But we would have to watch out how the festive demand turns out to be to get more confidence and on the growth visibility for these companies beyond the harsh summer.
How are the valuations of the three categories, white goods, the electrical space, the fans, etc., and the cables and wires, and how would it compare with what it was, say, a year or 18 months ago?
Right. So see, valuations, like as I said, has seen a very sharp re-rating over the last 5 to 6 months. This is primarily because on the back of a very strong performance, and now most of the stocks within these space are trading close to one standard deviation above their long-term average. So the valuations are clearly on a higher side, and that's why we have to watch out for the further catalyst that might come up from a sustainability of these consumer demand. However, one thing I would like to highlight is that there is a strong real estate linked demand that is expected, which is also benefiting these stocks. So if that demand continues, I think these stocks might further re-rate. But as of now, we have to watch out for the further catalyst from these levels.
Okay, all right. Why is Havells your top pick?
Right. So see, within the space, as I said, like we continue to prefer Havells because of the further catalyst that we see emerging for this company. Firstly, as I said, the real estate linked demand, so that clearly benefited the company in terms of their wires portfolio and switchgears, as well as the company has announced capacity expansion in the cables and wires. So the company had seen some capacity constraints over the last 1 to 2 years that has impacted their cables portfolio. Going ahead, we expect that as these capacities ramped up and the production starts, this should benefit the portfolios for Havells. And even if the B2C products don't see the sustainability of the demand.
Okay, Niransh, we'll leave the conversation here for now. Thank you very much for joining in. So that's the word coming in on the consumer durable space. We will slip into a very short break. We'll come back and we'll invite the management of Keystone Realtors to discuss the company's outlook. The company's recently launched a large project in Thane with a gross development value of 1,700 crore rupees. So Boman Rustam Irani joins in on the other side.
Welcome back. Well, the advance decline ratio has evened out, and that's a bit of a negative or a little bit of a dampener because it was on the advances side the entire session. So now there's a crisscross which has taken place, and as you can see, the red has crossed over the green line, indicating that there are more declining stocks over advancing stocks at this point in time, or just about even keel at this point. So that's what's taking place in terms of the broader markets. The mid-cap index, like we mentioned, has come off from the day's high. So it's just about holding with a gain of around 66 odd points. But now let's focus on Keystone Realtors. The company recently launched a luxury residential project in Thane near Mumbai. It anticipates generating gross development value of around 1,750 crores. To discuss this, we have with us Bowman Rustam Irani, who's the chairman and the managing director of Keystone Realtors with us. Mr. Irani, welcome to the show. Well, if you could just start by giving us a sense about this luxury residential project that you've launched in Thane. It's in partnership with Keppel. Can you just give us a sense? It has 440 odd units. What's the initial interest that you've seen in this particular project?
Lovely. Thank you very much for having me on your show. We'd like to just state that the Mumbai real estate market at this moment in time is doing extremely well. And as far as Thane goes, Thane has become a sister city or an extension of Mumbai itself. And we are seeing that the luxurious side of development is also moving towards there. And there are local residents in that market who are looking for better development. Keppel is our partner. Keppel is the epitome of luxury as far as Singapore developments are concerned. And we tied up with them for our residential development in Thane, for which we have launched Verdant Vistas as of right now. Not only are we doing larger apartments, but we are also changing the paradigm of luxurious developments in Thane. We have gone to the source for every material, whether it is the marble that will get used out there or the kind of fittings that will come in. Everything has been kind of curated for the development. There are a whole host of amenities that we've been creating for a community, high-end community life. Verdant Vistas, as the name itself speaks, has got some glorious views of Thane Creek and absolute abundant greenery thereof. So overall, this development will be, let's say, one of the most luxurious developments that Thane will see in quite some time now.
Bowman, hi, afternoon. You've said the gross development value of this project will be about 1,750 crore. How have you arrived at that, and what is the anticipated pricing per square feet?
So the pricing overall in Thane itself is about 18 to 20,000 rupees a square foot. This being a super luxury project, it is priced at about 10% to 15% higher than that. And of course, as you do understand, the luxury comes out of not only the space, but it also comes out of the amenities provided therein. So that is why the cost is also higher, and people are willing to move up in life or are looking to move up in life, which is exactly why we planned this project with the kind of exclusive amenities that we have. I can just tell you a few, there are four towers only in about 4.5 acres of land. The entire landscaping is done by Cohen. We've not only taken landscaping on the ground floor, but also across various levels out there. There's a clubhouse in the sky. We have great unobstructed views, which will be perpetual views, given that it's the Thane Creek that we are facing. Basically, everything is going to be high-end, including the density of the development is going to be extremely low. And 1,750 as the GDV has been taken on the basis of the sale price and the number of units that are there in that development.
Okay, well, it definitely sounds very tempting, I must say. But for your upcoming projects, while you have the Thane project, any other micro markets that you might be looking at to probably start building in, say, for example, like Thane and other places?
So we at Rustamji have launched a development which is an extremely large development in Kasara. We're doing 470 odd plots out there, and the sales out there have been extremely good. We've maintained that land is something that people love, and land is the best investment always, but land also makes it extremely difficult for people to maintain. So when you have a good development with some good security and great amenities in there, people are very, very excited to make an investment out there. And we call it that it's today's second home, but tomorrow's first home. Other than that, in Mumbai itself, We are very bullish on our development in Matunga Mahim area, and we are looking at other developments in the same location. At the same point of time, Bandra continues to rule the roost, whether it's East or Bandra West. East being the mid-mass kind of housing, 3 crores to, the aspiration housing, the 3 to 7 crore price range, and the luxury or the premium housing, which is going to be in Bandra West, where we've got 4 developments in various stages of, or 4 projects in various stages of development ongoing.
Just getting back to this Thane project, when will sales commence?
We've already begun sales, thank you very much, and we've seen a very strong demand. 15% of the stock has gotten lapped up in just the launch week itself. And as per our strategy, we will sell about 40% of the stock on or before we reach the plinth. Thereafter, we'll keep a sustained development going on. This is also a group strategy to always have the development in terms of the basket of developments available for customers to be able to make a choice.
Okay. You also raised money via QIP recently. What's been the utilization till now?
Again, that was a strategy we have. You know, it's always good to be well capitalized in a market that is burgeoning or growing at this pace. We decided to raise a QIP. We raised 800 crores in the last financial quarter, and this money has been put to use for the newer acquisitions that have taken place. As per our policy, our debt equity ratio, which we will allow at max, is 1:1. As of right now, we are, our gross debt is 0.4 or 0.24, and our net debt is 0. The idea is that all redevelopments in Mumbai are now getting extremely demanding, and we believe that redevelopments are the mainstay, and we've been extremely successful at it. And for that, it's always good to be sitting on a sizable amount of dry powder to be able to launch projects in time and get them going and keep them low on debt so that we are able to turn them around faster. So that was the reason of the QIP, and it's been an extremely successful move for us.
Indeed, you told us, I think, during the Q1 numbers that it was 2.5 times of the kind of demand that was put up on offer. So very strong from long-only funds also. So you've always said that your guidance has been the 2 launches per quarter. So in the current quarter, it's going to be the Kasara project and this project, right? The Thane project? Or do you think this time you could do 3?
So we've already done 3 in the first quarter. We've already done 2 in the second quarter. Might do 1 more. And whenever we give a guidance, we try and exceed that. And we've started becoming extremely consistent at that. So I'm very happy to state that at Rustomji, we are living up to or crossing the targets that have been provided.
Okay, so there's going to be 1 more launch in the coming quarter. Give us a sneak peek into that. And do you think you will be able to beat then your pre-sales guidance of 3,000 crore for the full year, given the numerous launches that you've had and how successful they've been?
So again, thanks for that question. As of last year, we did almost a 40% growth in the sales, pre-sales that we did. This year, we've already given a guidance of 3,000, which is about 33% growth. But the way things go, and again, fingers crossed, we should be able to cross that guidance and again thrill our investors with the kind of launches and the pre-sales that we have. Again, Rustomji has been extremely data-driven, and we always study the micro market that we are serving. There is a very large project that we are looking at launching in the next quarter, hopefully, which will be in the mid-mass in Dombivli. And in this quarter, we might do 1 more smaller project in the Bandra market itself.
Okay. Well, before we let you go, the strength that we've seen in the real estate market just continues to grow. I'm just reading a couple of statistics indicating that Mumbai has seen a 20.4% increase in sales as compared to the Indian residential real estate market, which has grown 29% in FY24. Specifically, do you expect this kind of scorching rate to continue in terms of growth? And what do you think prices would probably settle at or grow at?
So, that's a very interesting question. If you read all the data, there's a lot of wealth being generated or created in the Indian market. I've said this plenty of times. We are probably in the best place at the best time. And real estate has been something that our individuals or the Indian diaspora always looks at investing in. 60% of the wealth of the Indian families has been created through real estate. And real estate has become extremely safe development or rather avenue for investment after the advent of RERA, and people's interest in the Mumbai market particularly has been picked, and Mumbai and MMR stand to be about 42% of the total recognized residential real estate market of the country, and we being one of the strong developers and redevelopers out here, being one of the largest in terms of organized redevelopment, having housed more than 2,000 families by the end of this year, we are very well on our way to continually grow our strength in this market and show a positive growth. And on the customer side, we are not seeing any ebbing of demand. As a matter of fact, discerning consumers have started making it a point to kind of, two projects cheek by jowl with each other will also find a remarkable price difference. But as far as I'm concerned, I always look at stability, and I do not believe in a very quick increase in prices, and I'm very happy when the prices are a lot more controlled.
Okay, all right. Well, on that note, we're going to wrap it up as well. But thanks very much for joining in and speaking with us, Bowman. And, best of luck for your Thane project as well. Well, for the markets, it's just about higher by around 89 odd points for the Nifty. And currently, the Bank Nifty down around 40 odd points. That's probably the only sore point for today. Well, it's all the time that we have on Mid-Cap Radar. Your stocks are... Oh, sorry. We'll take a short break, but we'll be back with more. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net.
Welcome back. Trend continues to climb higher and higher. This is a stock which is up 130% this year, and Bernstein sees a target price of 8,100. And Trend continues to climb 5.5% up. Outside of that, sugar names, so Sri Renuka, Bajaj Hindustan, Berhampur Chini are up. Remember, global sugar prices are at a 6-week high. They've climbed 11.5% in the last 1 week, and most of these stocks are now pushing to are at the day's high and pushing up. By the way, some news coming through on Zomato, which is a platform, an enterprise platform, basically for large companies to solve their food expense management. Interesting developments, lots of innovation taking place over there. Well, with that, it's curtains down from the entire team that put together Midcap Radar. Thank you for watching. Your stocks when we return. From IT services to SaaS. From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18 embarking on a quarter.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are sitting at record highs for the Nifty, but the mid-cap index has given up its gains from the top, so it's completely flattened out, and the Bank Nifty just about consolidates with a little bit of a negative bias. We have with us Rajat Bose joining in on the technical, Sharad Avasti on the fundamentals to answer all of your queries. Rajat as well as Sharad, welcome to the show. Well, I'll start with you, Rajat. I just wanted your sense in terms of how you're approaching today's trading session, the fact that, it's just about consolidating but at record highs.
Good afternoon, Ekta. Good afternoon to all your viewers and as well as Sharad. Thank you for having me on the show. What I would say is that, yes, a little earlier, the high made was 25,115.50. This is the level that I indicated in my market outlook that I sent to my clients as well as some of your colleagues. That this will be the critical level, that is 115. If it is taken out decisively, then 25,300 and thereafter 25,500 or 25,495 to be precise. These would be the targets. As of now, what we are seeing is that steady move up. Although I expected today that there would be some profit taking, but since that profit taking is not happening, chances are that we would see higher levels. But for that, 25,115 needs to be decisively taken care of. Regarding the Bank Nifty, It wobbles. I mean, it is still on a good wicket in the sense that it is above 51,100, but it needs to take out 51,400 to about 51,500. After that, the next target would be somewhere around 51,900. A precise target for Bank Nifty, I'm not giving because above 51,000, you don't need to give precise targets. Roughly 51,900 should be the target if it manages to get past 51,400. That's the thing. And on the downside, if it falls below 50,900, then 50,300 might well be seen going forward. Bank Nifty decisively, it is not showing any decisive move as such.
Okay, all right. Bank Nifty not showing any kind of decisive move, but for if it drops below 50,900, then it probably tests 50,300. That's the word coming in on the technicals. We do have a couple of queries now, so let's get to that. We have PC Achaya, who writes to us from Pune, holds 25 shares of Havells, which is bought at around 1,222 odd rupees. So he's currently sitting on a good profit there. He wants to know the future prospects of his holding. Well, interestingly, we just had a chat on Havells just a couple of minutes ago, Sharad. You know, BNP Paribas says it's their preferred pick as they expect a pickup in the real estate-led demand to probably aid in terms of numbers for them. What's your sense in terms of Havells? Do you think that there's further upside, or should one take profits?
I think at current prices, it's better to take some profits off the table. Though I do think that the electronic business or the consumer durable business is in a sweet spot for the very long term. And considering the urbanization trend that we have, I think a lot of new people will get added to that list, will be new buyers into the list. And Havells has been expanding their product portfolio. So I think, yeah, long term, it could be a good bet, 3-4 years. But if you are looking at 18 to 24 months, I think most of the positives are possibly discounted in the numbers. I would rather wait for some disappointment to come in where I could get a chance to maybe buy it lower. But at these prices, it's already trading at 50, 55 times forward. I don't think it offers much scope of a move from here onwards. So at current prices, I would recommend an exit, and maybe you get it, 10 to 15% lower. That's where you should start accumulating the stock.
Okay, all right. So that's on Havells. But on the technicals, how would you approach the stock, Rajat?
I would say since early June, this is a range-bound counter. On the downside, something around, say, 1,800 or 1,750 kind of levels. And on the upside, it is 19. It is about 1,960 to about 1,985, 1,985. That is the all-time high, or at least the yearly high. And this is showing majorly a range-bound activity. It is a trader's delight, but not an investor's stock at the moment. Once it crosses 2,000 decisively, the kind of things that this institution is talking about, that might pan out. But for now, I would agree with Sharad that here one should actually book some profits and re-enter once again between, say, 1,800 or 1,750. That would be a better idea. And once it falls below 1,836, where the 200-day exponential moving average, the 50-day exponential moving average is located, it is going to go down sharply. And then you would get those levels to re-enter, that is 1,800 to about 1,760.
Okay, all right. So that's on Havells. But now we have another query. We have Deepak, who writes to us from Bihar with an investment question. He's asking if we can buy BPCL at current levels for the longer term. So that stock has already given good returns. Sharad, it's up around 55% this year. Do you think that this is a good long-term bet, a portfolio stock that one should buy at these levels?
No, I think a major part of the rally is over. These stocks largely were trading at 3-4 times, so they presented a very big opportunity of improving from those levels. Right now, if you look at the numbers, the next 2 years, these companies are expected to report flat to marginally positive earnings. and they should ideally report something in the range of 35 to 40 rupees. And I think for companies that will not grow at a very rapid clip over the next 2-3 years, for them to get more than these valuations, right now the fascination is there because of the capex, etc., that they are doing on a regular basis. And I think oil prices would remain benign, that would help them. But in spite of that, I think numbers would more or less be stable to range bound for most of these companies for the next 2-3 years. And considering that fact, I think them trading at around 9 to 10 are peak multiples. Optimistically, another 10% maybe. But I don't think at these prices it makes sense to buy into these stocks for the long term.
Okay, and what about you on the technicals, Rajat? How would you approach BPCL? Stock has given modest returns of around 6-7% in the past 3 months, but year to date it's done well.
See, around, say, October last year, around 23rd of October, it made a low of 165, and from there, it went up to something very close to a level of 350, then came down to 280, and it has been moving in a range-bound situation. This pattern that is developing in BPCL is somewhat, if you have seen SRF or Asian Paints, they went down. They did very well. 3,500 for, say, Asian Paints and 2,800 for SRF. And they went on to be range-bound counters for the next 3-4 years in case of Asian Paints, and in case of SRF, it has been like that for the last couple of years. Similar situation is going to pan out for BPCL. At current levels, I would suggest a sell and re-enter if you want to buy 300, 280, you will get that price. And that is how it should be played. You can't see that another rise up from here. It's very, very difficult for that to happen because the chart setup is suggesting some people are constantly selling at higher levels.
Okay, some people are constantly selling at higher levels. Well, we do have KGC Prakash, who writes to us from Mumbai now. He holds 70 shares of Galaxy Surfactants, which he's bought at around 2,800 odd rupees. So he's sitting on a profit there. He's asking whether he should hold or sell this particular stock. Well, in terms of the fundamentals, there's a hope that, there could be a recovery in the chemical sector. But what would your approach be towards this counter, Sharath?
We have a coverage on the stock, and we are recommending a hold for targets of around 3,150, 3,200 based on FY26 numbers. The positive side is that, as you rightly mentioned, that most probably the destocking phase is more or less over internationally, so that would help them. A bit of raw material price movement could hinder the margins in the extreme short term because last month also some price movements have been adverse to the company. But beyond that, we think that the company is regularly doing capex as a dominant positioning in most of the products they make. And gradually, I think over the next 2 years, we are expecting around 10 to 12% kind of CAGR in the top line and a 15% to 16% kind of top CAGR in the bottom line. And trading at around 27x, I think the fair value should be around 3,150, 3,200. So I think one can hold.
Okay, all right. And what about the technicals, Rajat? How would you be placed on the stock?
It's actually 3,200 level is par for the course. Anytime that level can be seen because it is again a range-bound counter. Now this time the range is slightly bigger in the sense that 2,500 to about 3,200 should be the range for this counter. And around 3,200, I would suggest one can at least book part profits. Even if the chemical sector does well, it may take a little more time to give a breakout above the all-time highs around 3,400. So one can trade accordingly. This is basically a range-bound counter, and you should be doing at higher levels sell, and at lower levels close to the support, you can buy again.
Okay, all right. Now we have Riju Srivastav, who writes to us from Pune, holds 25 shares of Zomato, which is bought at around 55 odd rupees, wants to know the future prospects of her holding. Well, Zomato is rapidly expanding, and then obviously we have the upside coming in from Blinkit. So it's really become a stock, which could be probably a portfolio stock at some point, according to some. But Sharad, what's your sense on Zomato? Do you think that one should probably hold on to their buy price in Zomato, and what is the upside that you see from here on?
I've not been very bullish on Zomato for quite some time. And even now, I think, though the businesses they are doing, even Blinkit or the main Zomato business, both are very good businesses. But if you look at the numbers, I think now at these prices, most of the positives are priced in. Even if, the forward numbers are re-rated by 100% over the next 2-3 years, even then you'd be looking at what an earning of somewhere around 7-8 rupees. So I don't think there's much scope for appreciation at these prices. Even in EV to sales CAD terms, I think most of the positives are already priced in the price. Though, as long as the company does keep reporting outperformance in terms of numbers, that's a new fact that any company that keeps reporting quarterly numbers better than expected, the re-rating continues irrespective of what valuations you are trading at. But I think Zomato at current prices, I would be very skeptic about how much more returns it can generate. But in the past, it has done very well. But at these prices, I think it's better avoided. I would not be very happy buying something like a Zomato at these prices.
Okay. And Rajat, what about you?
First, caveat from my side, I personally hold Zomato in my portfolio. But here, I must say that I quite agree with Sharad. That is, from here, see, a stock that was 18 months back was at 46, and today it is almost 6 times of that. And 278, 280 is a major resistance for Zomato. Unless it is taken out decisively, the next target of around 300, 320 or 25, that is unlikely to come. And the rise has been parabolic. And if you are not a very long-term investor, then you would do better to book profits. And even if you are a long-term investor, you should sell partly here because it will take some time. This kind of a one-way traffic, one-way ticket to the moon just doesn't happen for a very long period in the stock market.
Okay, all right. Well, on that note, we have a lot more queries lined up, but we need to take a break with the news that the markets, in fact, there's a lot of interest which is coming towards the frontliners today. So that seems to be where the interest is playing out because we have the Nifty, which is at the high point of the day now. So up around 104 odd points currently for the Nifty, but the mid-cap index is just about going to break into the red as we speak, so just about higher by around 25 odd points. Bank Nifty also seeing some buying at lower levels, so it's probably going to break into the green, while the mid-cap index probably will break into the red or just about holding in the green with the skin of its teeth. We'll take a break, answer more queries on the other side. Stay tuned.
Excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
consumer stock valuations are high, undoubtedly, but they are relatively lower compared to their historical average, and their ROEs are likely to be better. So we are exactly doing what I've said, moving from momentum to quality, moving from low floating stock counters to high floating stock counters, and moving from expensive valuation to reasonable valuation. So there will be enough reasons available for correction. But we believe, based on our fundamentals, liquidity and sentiment, corrections are unlikely to be deeper like we saw during COVID time. They are more likely to be what we saw during October 21 to June 22 period, a minor correction, combination of time and price correction.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or Rs 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate.
Welcome back. Well, we still have a couple of queries to go through, but before that, just want to point out a couple of stocks which are gaining. LTI Mindtree is in focus on account of positive brokerage note. That stock is up around 6.8%. But Divi's Labs is showing some amount of traction, so that stock is up around 3.7%. It's raced ahead. In fact, that stock has given good returns this year. It's up around 30% this year for Divi's Labs, doing well at this moment in time. We have Wipro, IndusInd Bank, Bharti Airtel, all of these stocks which are managing to see buying on the upside, so up anywhere between 2.5% to 5%. We do have Rajat Bose and Sharad Avasti to still answer all of your queries. Before we move ahead, just wanted your thoughts on the entire IT space, which is showing a lot of upside today. Rajat, would you be a buyer on a couple of these?
One thing is that engineering R&D stocks are doing pretty well, like LTTS, which I personally hold in my portfolio. It's now 200 point up. It is still showing a lot of traction. It can still move up. Apart from that, LTI Mindtree and Divi's Labs are two stocks that have been thrown out of the Nifty index. I've seen one thing, that whenever stocks are thrown out of an index, which is actually the lead index, they tend to move up. And that is what is happening in these two. But LTI Mindtree, as it is, would have been very good. Apart from that, persistent, only KPIT, I'm not so positive. But another stock in the engineering R&D software, Tata Technologies, you should look at, because that is rising from the bottom. So there is a lot of money to be made there, provided you are willing to be there in the stock for some time.
Okay, all right. Well, we do have Sohail now, who writes to us from Meerut, holds 46 shares of Jyoti CNC at 1,063. Wants to know whether to stay invested or to book his profits at these levels. So he's asking on Hindalco at this, or he holds 46 shares of Jyoti CNC. So maybe that stock should come up for you. Yes. So just about sitting on a profit at this point in time. Would you have a view, Sharad?
Yeah, I think it's fairly to fully valued at current prices, though the CNC space as such should grow at a very rapid rate. Their presence into, electric vehicles, as well as possibly in the future semiconductor manufacturing capacities coming up in the country, could help them. They have a capex from around 4,500 to 6,000, and that should also help them. The capacity utilization ramp up should also happen. Probably they're trading it. They are having a capacity utilization somewhere around 55-60% right now. The order book is good, so I think forward growth should be very good. But even if you consider optimal growth, I think maybe the earnings, triples from here and goes up to say somewhere around 30-35. Even then, I think trading at 40-45 times, I would be better off buying some of the frontline names rather than something like a Jyoti CNC, which is ancillary to, aerospace, defense, and possibly EVs and semiconductors. So I think at these valuations, I think most of the positives are already priced in. So I don't think it makes sense to continue to hold at current prices.
Okay. And on the technicals, Rajat?
See, it has just crossed some of the moving averages like 20-day, 9-day, even 50-day has also been crossed. But then it has moved up for the last 5 sessions, and this is now showing some kind of a break happening on its course. So I would suggest that here or slightly higher, some should book profits, because this is the pullback rally to the earlier high, which is around 1400. If it manages to go there, great. Also book profits. If otherwise, do this thing that at least what the professionals do, you sell here, and as it moves up towards 1400, sell again, because it will now become a range-bound counter and spend times in between, say, 1100 and 1400 for quite some time. So you choose some other stock, just as Sharath was suggesting, that there are better opportunities elsewhere.
Okay, all right. Well, we do have, now we have KS Rao, who writes to us from Andhra Pradesh, holds 150 shares of Hindalco, which is bought at 150. He wants to know the future prospects of his investment. He's sitting on a good profit on this one. Rajat, what would your call be?
Well, regarding Hindalco, it is actually trying to get past the resistance around 700 levels. If it manages to do that, next target would be 720 to about 725. But around those levels, again, some resistance will come, and there will be some supply. But if one is a long-term investor, a base metal stock, one can continue to hold.
Okay, all right, Rajat as well as Sharad. Well, on that note, we need to wrap up on the show. Thanks very much for joining in, taking us through all of those queries. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.
OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers, including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai, have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers, including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
जब वो किसानों के हितकारी बिल जो वापस लिए गए, यहाँ पे जो फार्मर्स प्रोटेस्ट हुए, वहाँ पे लाशें लटकी थी, वहाँ पे रेप हो रहे थे। किसानों के हितकारी बिल जो वापस लिए गए तो पूरा देश जो है वो चौंक गया था। वो किसान आज भी वहाँ बैठे, वो बड़ी लंबी प्लानिंग थी, जैसे बांग्लादेश में हुई है।
Both the Taiwan and the Hang Seng Index are trading absolutely flat.
The economy is still doing very well.
NVIDIA is really at the heart of the AI theme, which has been powering the US markets.
As last couple of days, we've been flirting with those all-time highs, but today could practically be the day.
So Paramount is about a 9.5% margin business.
25,023 now in the red.
People are not hesitating to spend a few hundred rupees more to get a better quality of service, better ambience, clean car.
And by the way, the Nifty has crossed its earlier record high of 25,078.
But for shareholders have put them on the board, obviously, to ensure that the company is run in fair manner.
Mid-cap index, however, has given up its gains, so just about flattened out.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good afternoon and welcome to Closing Bell. The smiles are wide, not just here in the studios, but of course on the street as well, because finally, for what it's worth, the milestone has been achieved once again. All-time highs, third time lucky, and I'd say apart from all the other luck, it was, I think, the pink that Nigel was sporting. We were discussing this in the morning on the show as well, right?
Surabhi, I told you.
That's spunk.
I told you all said it's just a number. I said whether it's a number or the color, today is the day. And unfortunately, the first 20 minutes we were down 50 points. I didn't know where to look. But in the next 90 minutes, the word came through and the fresh all-time highs.
Pink of health. Hopefully, that's how the market is going to be. Rima, what do you make of things? Well, right now, we're still about 100 points up. The key question is going to be, can we retain most of this gain and, go off with a flurry? Or whether some profit-taking sets in? Let's see, right now, the screens were looking very good, very solid. And the momentum seems to be intact.
Well, and it's good to see that the benchmark indices are holding on to those gains. So we're still at the day's high, and the Nifty is now above 25,100. It's a near century on the Nifty with the Sensex up 260 points, and IT is doing the heavy lifting. The Nifty IT index is a gain of about 2.25%. Pull up that contribution plate, and you would see how much of an help these large cap IT names are providing. Even though the contribution or the weightage on the Nifty is not so much, with this 2.2% up move, it's helping a fair bit. You've got Infosys contributing about 26 points, LTI Mindtree up about 40 points, Wipro up another 10 odd points. Banks, though, are lagging behind. The Nifty banking index is down 130 points.
All right. Well, the banks, that's could be the main story. So as everyone is saying, we have hit fresh all-time highs and everyone is celebrating. Actually, the mid-cap index advanced decline ratio has now turned in favor of the declining stock. So we should pull the crisscross lines up for you on the screen. And the banks, it's a contract expiry today. That's both the futures as well as the options data will be expiring today. So that's going to be the important index to track. A couple of stocks that I'm looking at, GSPL took a bit of a breather today. It's seen a big run. In this week itself, it's up close to 15%. It was lower. Now it's cut some of those losses. So that one should come up for you on the screen. Havells as well has tried to move back into the green. So keep an eye out on that one. And a couple of other notable movers in trade today. You have Arvind Fashion. That's now down close to around 1.5%. You can't, complain about the screen. But there are pockets where we are seeing some kind of selling on the markets as well. The sugar stocks, they have actually come back into a flavor. You have Balrampur Chini. Last couple of sessions, we're seeing good amount of open interest build up. And today as well, that stock is up close to 3% at the high point of today.
Manisha was telling us in trading hour at about 11 o'clock that, so because of that, I think global sugar prices are up 11.5% in the last 1 week. So that's pushed up these stocks higher.
Yeah, that's what, I was just speaking to an analyst and they said that it's more of a positive sentiment. For the time being, the market is latching onto it, but we'll have to see fundamentally how much of it flows through, particularly for the refined sugar prices, which is going to be important from here on. But,
let's not forget that in terms of policy, what's most critical is whether the export sort of limitations are done away with. And we'll be getting into the sugar season right now, and whether ethanol, that pricing sort of can come through the clarity and more amount of course, sugar being diverted for ethanol production, whether some of those policy measures come through. So that could, of course, that expectation and that hope also seems to be leading to a lift in prices today. By the way, don't lose sight of some other stocks. I mean, there's this Trent, a stock that's just gone up and away, is up about 5-6% even today. There are other names. Gravita, we spoke to the company in the morning, 5% higher over there. There is RPSG Ventures, which is on the move. So these are some of the names which are up and about. You'll hear more on NBCC as well. They are looking at a bonus issue. The meeting is on the 31st. That stock's been flying around since morning, and now it's in double digits. So those are the kind of gains coming in. On mid-caps, just a case in point, Nigel, perhaps this time, this could be slightly expected, because we know that, a lot of sort of experts and money managers in the market are talking about now this being the time to buy large caps and maybe prune down the exposure to mid and small caps in the portfolio. So usually I know when there's mid-cap distribution, we see it as a bit of a red flag and a sign of caution. But I don't know, I mean, one would want to believe that maybe there's so-called healthy rotation towards the large caps?
Surbi, at around 20,000 in December, that was the call, that now we'll see the move to the large caps. At 21,000 as well, that was the call. Now we're at around 25,000, and still that's the call. Valuation agreed. You get a lot of comfort out there. The leading private sector banks are trading at the same valuation, say, three or 4 years ago as well. But still that mid-cap party is continuing because the money flow is too much and the number of stocks to invest in are too little.
Yeah.
So let's see whether or not, finally or not, now we see from here on, the large caps take center stage. But otherwise, it's been a big party for the mid-cap and the small cap space.
Mihir Vora also made an interesting point. So we asked him that, we've not seen a headline correction now for so long. He's like, forget the headline. Individual stocks and sectors have all gone through their period of time-wise or price-wise correction. Almost every sector has gone through that. And perhaps that's going to be the nature of, the markets from here on, that at the headline index, we stay where we are. But individual pockets, IT went through a long patch, and it's only in the last 3 months, for instance, IT stocks have outperformed, defense, railway stocks, all of them have corrected. So, maybe it's going to be about sectors and pockets which take a back seat and see a bit of a pullback before buying resumes. But how should you position yourself in the last hour of trade? Mitesh Thakkar is now with a few closing strategies. Mitesh, how do you feel about today's trading session and what would your calls be?
So I think it is, again, the banking index, which is kind of dragging the markets down. But rest of the market remains positively biased for me. So it's market when I'm avoiding some banking names, and in fact we even had a sell on Canara Bank earlier in the day, and right now Bank of Baroda is on the sell list. Keep a stop at about 253, look for targets of 238, and Wipro is on the buy list, which I would recommend buying with a stop at about 528 for targets of 550. So broadly trading with more of long bias on pharma, IT, and other names while avoiding the banking side.
Let's get to the IT stocks then. And the big winner today is LTIMindtree. This is after Kotak Institutional Equities upgraded LTIMindtree to an add with a target price of 6,200. And they expect growth rates for LTIMindtree to accelerate. So last year was about 4.4%. That was the trough year. Things stabilize this year with a 6.5% growth rate and accelerate to double digit in FY26. And the key driver for that will be BFSI and high-tech. They contribute a lot to LTIMindtree's top line. They were challenged. They dragged the company's growth rates lower. And now already in banking, in US big banks, spending has picked up in the quarter gone by. And the second overhang was on the senior level exits, which have plagued the company. But in the last 3-4 months, those exits have also, cooled off a bit. We haven't heard too much. So that is a positive. But on the other hand, Tata Elxsi for Kotak Institutional Equities is a complete sell. They always found the stock expensive, and for the last 2 days, the stock price of Tata Elxsi went up by 26%. Now, Kotak says that Tata Elxsi is an excellent story. It's a great growth story, but the valuations are just too rich. The stock trades at 61 times forward multiple, which means the stock is now pricing in that the company sees a 20% growth for the next 10 years. And that, according to the Kotak Institutional Equities, is on the higher side. Part of their portfolio, the auto business led by JLR, is doing very well, but that's 50% of their revenues. The balance 50%, which is healthcare, media, communication, is facing some challenges. So that could, be a little bit of a headwind. So it's an excellent story, no taking away good growth, but valuations are on the richer side. We have with us Prakash Diwan now to talk about these, many IT stocks which are in the news. Prakash, come in on LTIMindtree. It's been a bit of a sleepy stock. It's underperformed, but it's come back with a bang today with this Kotak upgrade. And throw in your comments on Tata Elxsi. Do you think it's too expensive? It's a complete avoid?
Good afternoon, Rima. So I think on LTI Mindtree, it's more of a catch-up. And if this happens to become a slightly more broad-based trend, you'll probably see this reset in a lot of the largest IT players. We spoke about Wipro the other day when I was on one of the shows. And this whole positivity from the US interest rate cut is going to start kind of, gradually building up till the cut actually happens. And then we'll see. But Tata Elxsi is not something which, at this price, of course, there's lots more risk involved in terms of execution. If anything kind of goes soft, you'll probably see a disappointment. But from that same stable, if you were to look at a Tata Tech, which is also kind of shaping up, and it reminds me of what Tata Elxsi used to be about 7-8 years back, in terms of building up niches into stronger footholds and growing the contract sizes and volume of business. So I think there's much more happening in Tata Tech. So if I actually had Tata Elxsi, I don't have it in my portfolio, I would have probably switched to Tata Tech and probably done some more outperformance potentially in the next couple of years. Tata Elxsi probably on dips you could look at, but at this point I do agree it's fully priced. But so is LTI as well. It's after today's move, you'll probably have to wait for things to kind of actually start looking up. This is more in anticipation and a catch-up, as I said earlier. But yeah, Tata Tech definitely gives you that value for money kind of a play.
Okay, that's Tata Elxsi. Some of these Tata stocks have absolutely been breathtaking moves in the last couple of days as well. Prakash, stay on. We want to talk to you about Trent. I mean, speaking of stocks that make breathtaking moves, this one probably takes the cake, right? Massive, massive move in the last 1 year or so. We have Sudarshan joining, and there is a note from Bernstein, not particularly on Trent, but I think it's a note that talks about overall prospects and, opportunities for retailers. They do mention Trent in that note as well. Sudarshan, the market has taken note of it, and the stock's up 5%. So what is Bernstein saying?
That's correct. So Bernstein has initiated coverage on 7 stocks from retail or say restaurant sector. And of total 7, they have outperformed call on 4 stocks and underperformed call on 2 stocks. So outperform is on Avenue Supermart, Trent, Jubilant Food and Devyani International. And underperformed call is on AB Fashion and Westlife. And target price for majorly 2 stocks, Avenue Supermart is 6,300 and Trent is at rupees 8,100 per share. And the reasons Bernstein has given is, it says investors and companies have been waiting for 2 decades for Indian middle class to emerge and spend, and this wait is a supply at right value problem, not the demand one. Now with organized players, retailers are scaling up, demand beyond top 10% of pyramid and beyond top 40 cities can be unlocked, and it sees huge value creation opportunity which is accessible without wait. Now, specifically talking about Trent, amongst all the stocks, this is one which has moved higher, and it is currently up more than 6%. Just in 2024, stock has moved higher by more than 140%, and just in this month, it's up almost 25%. And this move can be attributed to the results that company has been. It has been giving strong set of earnings for the last few quarters. For example, just if you talk about Q1 numbers, revenue was up 56%, EBITDA has increased 67%. Margin had come in 100 bips higher and profit had increased by almost 135%. And one segment that has been doing good for the company, that is fashion concept, it had registered double-digit like-for-like growth. And another trigger apart from the numbers and the note is the Nifty inclusion. Company will be included in Nifty effective September 30th.
Yeah, absolutely. What a journey it's been. Thanks very much for getting us the latest from that report. Prakash, so I guess, every once couple of years, if you find a trend, then I think everybody's wealth creation objectives are going to be met, right? What a fascinating move. The stock used to be just about 1,200, 1,300, I think, at the start of January of last year, 23. And now we're talking, targets of 8,000 on this one. So if not trend, but I mean, overall in this universe of retailing, people got excited when, the demerger of ABFRL was announced as well. So whether that, and then there's, of course, Arvind Fashions. I don't know if any of the other retailers can replicate what Trent did. What are your thoughts on this? And is there another trend somewhere in the making that you see?
So it's quite tough for people to, do these things over and over again. But if you recall, it's going to be time for a little bit of a relook at some of the smaller retail players. If you recall around the budget when we had a lot of stops for the Bihar area, and by and large there was expectation that consumer demand would take off. We'd spoken about V-Mart. I mean, and this is like this V2 retail, and look at how some of these companies have started kind of reinventing themselves, learning from the biggies. But in that list that Sudarshan actually ran us through, if you really look, D-Mart, I just want to focus on D-Mart and for a specific reason. 3 years back, I remember when people were talking about D-Mart earnings and discounting those of 2030, 2031, 2032, it seemed very laughable. But the way D-Mart has kind of plodded along in terms of all adversities, has withstood competition, price, inflationary issues, all of these, and still kind of made itself rock solid. I'm sure they will reinvent themselves on certain counts where they are languishing. So it's not that demand is something which you could very easily write off. My sense is there's much more innovation that will happen in terms of their ownership of these real estate pieces as well. They could come up with a REIT which makes it much more efficient. So I particularly feel that's a stock to watch. Of course, it's a choice. You want to buy it today, you want to wait for some cool off in the market. But those are things that will happen. On ABFRL, since you mentioned, Subi, I just want to tell you there's a big issue in terms of execution that you see. There has always been promise, but somehow it doesn't kind of see traction. So when you actually go and experience some of their stores and all, it's still kind of, they have lovely brands. Everything is sound, but somewhere there is something missing, and that's why they've not been able to kind of be in that top notch. But you could definitely look at D-Mart within that retail, while the argument is Zomato is growing bigger than D-Mart in some sense, but D-Mart will definitely have its place under the sun and could probably reinvent itself on some counts.
Prakash, since we're discussing consumer businesses, let's also bring in Zomato because of the way things have been shaping up. Actually, I want to pull up a tweet that Mr. Dipinder Goyal put out. And there's so much happening within the company. We were just discussing them finally snapping up Paytm's ticketing business. And now here's something new. Zomato is now looking to target enterprise customers. Basically, the tweet goes on to say that Zomato will be looking at this Zomato for Enterprise platform, where basically, organizations can tie up with Zomato and offer food delivery to their employees via the app itself. So basically, the employee doesn't have to pay upfront and then ask for a reimbursement. It just gets done seamlessly via the app. So Dipinder Goyal says that 100 companies have taken on this exercise right now, and they're hoping that more sign up and experience this. Prakash, very early days, nascent idea, but a very interesting idea. Any thoughts on this and overall valuations and just the stock?
So of course, let me tell you what I read, what I interpreted from this ZFE, this enterprise thing that they're launching. It's something like a combination of Sodexo and food delivery, which Zomato is good at. So they're trying to combine that, make it seamless, make it absolutely frictionless in terms of having to pay for it and all of that. So it definitely will have takers. The beauty about this is they don't need to go to very large organizations to kind of attract it as clients. They could do it with even a mid-sized, small-sized company which sees a lot of value in this. So there's definitely going to be a market share improvement that they will have over the other counterparty, which is Swiggy in this case. But Swiggy has, of course, not been able to expand to that an extent where this footprint keeps growing for Zomato. So valuations at current levels, you'll probably see for the timing, everything's priced in. Blinkit has been priced in, the new ticketing business has been priced in. Of course, we'll see how the district response is, but my sense is you'll have to give it some time correction. But it is a name that you need to look at for the next 4 or 5 years in terms of as the market explodes. And this is just the beginning of adaptation. You'll probably see much more happening in this count.
Shilpa likened it to an Ola Electric. How you have an Ola Electric app, a feature in your app itself for enterprises. I think ZFE is going to be something similar for Zomato. Within the app itself, housed, for enterprises.
Okay, all right. Prakash, before we let you go, I wanted your view on exchanges. NSE has made some bit of a dash and they have made a request for, to go ahead with regard to the listing. We'll have to hear what regulators have to say, how they'll have to alter various things to go ahead and list. Yeah. But your view on the stock unlisted market, I believe this morning it was at around 5,000, 5,500 rupees, depending on the quantity, and it has to be a minimum quantity of around 200 shares. Your view on NSE as well as from the listed pack, BSE was doing pretty okay, MCX as well was higher in trade.
No, absolutely, Nigel. I think the NSE stock is going to be probably one big issue, and then a very tectonic kind of a shift in the market. You'll probably have an exchange getting itself listed, and it's only traded on the BSE. So BSE will also benefit in terms of the volumes. Of course, that won't move the needle much for them. But at the current valuations, the market is probably giving it to you at a discount to what it would fairly get listed at. My sense is the listing would happen at about 35-40 multiples easily of FY25 earnings expectation. And if you go by the IIFL report, that could mean anywhere around 7,000 to 8,000 rupees per share. So there's enough of a headroom there. But of course, because of the visibility or uncertainty around the listing, the holding period, probably have that haircut. But if somebody is looking at it from a longer term, and let's say if the IPO had already happened and you didn't want to sell it for 3 years, it didn't matter whether it got listed or not, right? So the same stock was available on 2,600 about a year and a half back. So you have seen that appreciation in the grey market. But I would believe on the unlisted side, it is definitely good, but for long-term investors and who can park that kind of money aside for at least 3 years. It's not for the retail. You don't get small lots as well. So it's largely an HNI-driven market at this point.
Okay, all right. Noted that view, Prakash. In fact, during COVID, I think it was down to 800 rupees or thereabouts. So those that bought it at that point of time, wow, they're dancing away to the bank. Good balance sheet, technology-driven, entry barriers, and COVID-proof or anything proof. Everything came to a standstill, but trading continued. And that's why these exchanges did quite well. Thanks a lot, Prakash, for joining in and giving us your view on a whole host of the stocks. Well, for the time being, though, we'll slip into a short break. You come back and we'll get chatting with our market guest. We'll have our Alpha Manager of the Day, Rupen Rajguru of Julius Baer, who's waiting for us on the other side.
Investing.
Welcome back. The Nifty is now fallen below 25,100. A little bit of profit booking has set in. Tech Mahindra has slipped in the green now, but from the day's high, it's off by nearly 1.5%. NTPC too has seen a bit of a correction. The Nifty Bank continues to sulk and not participate in that little bit of an up move. Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, is now joining in on the show. Rupen, thank you very much for joining in. How do you feel about the market and what is it that you're doing?
Hi, afternoon, Rima. So we are at an all-time high levels of market.
everybody is happy, so are we. And the Indian market and US market probably has been two markets which have been on a roll. And while everything looks to be pretty good, we are very good from a economic cycle perspective, but clearly on the valuation cycle perspective, we are at a higher end of valuation. So times like these, we have seen historically in the worst of mistakes, people do tend to make in best of times. So in this market, our objective is to ensure that we don't commit mistakes, because in the urge to get that extra additional alpha, I think a lot of people do tend to land up doing a lot of mistakes in times like these. So our objective is, even if we make lesser returns from here, it's good, but we should not be making mistakes. So a little bit of defensive portfolio tilt is what we are advising.
Okay, hi Rupen, good afternoon. Let's talk about what you like then. And I like your contra strategies. And this time on the list, I believe, is insurance. That actually, if you look at it in the last 3-year time horizon, it's been a relative underperformer. So your view on insurance and what you're like from there, point number one. Point number two is chemicals. We spoke to the management of Vinati Organics and they are guiding for better times ahead. Even various other companies, I was going through the con call notes and everyone's saying we have put on capex, things are turning around. Second half of this year will be better and FY26 will be even better. What's your view on both these two sectors?
Yeah, hi, afternoon, Nigel. So, just taking ahead from the earlier point, since we are in a bull market, so essentially at the current market juncture, our view is, the theme would be consolidation and rotation. So that is purely from a market perspective. So we would like the market to consolidate at current level of 25 or 1,000 levels for some time. But since we are in a bull market, there will be constant rotation. And we have seen it, right? Like a classic example is IT. In last 2 months, we have seen IT index giving almost 20% returns. So with that perspective, what we are looking through, which are the sectors which are probably relatively unloved by the market. And if one or two catalysts come into play, it can really give high returns. So insurance and chemicals definitely fits into the bill. So within insurance, if you see while in last 2-3 months, the stocks have done well, but as you rightly said, in last 3 years, lot of be it the life insurance company or be it some of the health insurance company, both have been a big relative underperformers. And there were a lot of issues, regulatory headwinds were there, taxation impact, and all other things. And the entire insurance sectors have been through the cycle. So as we stand ahead, the macro story of insurance has not gone away, right? Because 3 years back when the entire life insurance companies were in a bull run, what was the story? The story was of penetration, story was of how much potential is there in India. So that remains definitely. So now majority of the regulatory headwinds are behind us. A lot of companies have expanded their distribution network. They have looked into various channels. So we like life insurance as a space. So within that, we like companies which have a very good banca insurance partnership and which has a wide range of product suites. So some of the top 2 companies, they are good fit into that bill. We also like the the health insurance space, because that space also we believe the price hikes have been done, and over the next 2 to 3 years, we will definitely see the earnings coming through, because the overall combined ratio will be closer to 100, and that will lead to a good growth in the overall ROEs for that. So that's the space on the insurance side. On the chemical side, again, it's a classic cyclical move. Between 2017 and 22, it had a phenomenal bull run. The chemical index compounded more than 40% and outperforming the Nifty. And thereafter, for last 2.5 years, a lot of them have done nothing, and some of them have corrected also from their all-time highs. So all the in bull market, in cyclical, all the mistakes, capacity expansions and all have happened. And plus, what we are seeing in the cycle, a lot of destocking was happening, which is probably now going to end. The prices of the end products are stabilizing. The input cost, which had gone up, is also now coming off. So probably end of the year, we will see the earnings cycle coming through. So probably we are 6 months ahead, but that's how you play in the market, and hence that is another sector which we believe can be a good play in the current market environment where everything looks to be pretty expensive.
What about QSRs? You're taking a contra bet on QSR, but so far, at least in the earnings, it's not that we've seen any green shoots about a recovery in demand.
Yeah, so Rima, it always, some of these things do tend to have mini cycles, which, at times it's very difficult for us to comprehend why it's happening, right? And in fact, if I were to extend, some of the plays which are to some extent linked to the rural recovery as well. So while QSR is not strictly rural recovery play, but a play on the consumption side. So be it the QSRs, be it the some of the footwear companies, or be it the movie exhibition companies, all have been having a pretty lull patch for last 6 to 8 months. And what we are seeing incrementally now, the demand will come back, and I think the overall two things. One is the rural recovery, and also the overall wealth effect will be there. So we don't see a challenge. There was always, over longer period of cycle, if you take historically, QSRs also in a high inflationary environment do tend to, their SSG do tend to get impacted. And now with inflation also getting under control, we believe again, market looks into the relative rate of change, right? So when a lot of them had a 4 or 5 bad quarters, so now the base is a good base, and incrementally on a relative rate of change, a lot of these things will look to be pretty decent, and hence market will also take notice of that and accordingly reward. So we believe that the rate of change is what one should look into, and in all these segments, the rate of change from here on will be pretty good.
Okay. Rupen, great to have you on. So, another pocket of the market where obviously there is some valuation comfort, but the issue is how much patience do you need to have is obviously the entire financials landscape. And even here, some of the, for instance, capital market related plays, they've started doing a lot better. Insurance stocks have got a nice leg up in the last few weeks. But the big banks, they still remain very range bound. What is your approach to financials? What are you picking here? What are you avoiding?
Yeah. Hi, afternoon, Surbi. So there are two ways to look at it. One is financials as a pack historically was a significant overweight in all the FPI portfolio. Almost they were like 200 to 400 basis point higher weightage they were having. So when there was this FPI selling which came through, so a lot of the technical selling happened in large, and their exposure was predominantly large private sector banks, and they got impacted. And a lot of the managers, what did they do? They didn't want to increase their exposure towards financials because it was the highest weightage. So they did some bit of reshuffling, and hence maintaining the BFSI weight, a lot of the weights from private sector went into insurance, some capital market plays, some of the other plays, and hence, the other segment did well. And coming now to financials, and there I would break it up into two parts, which is the large private sector bank and the public sector enterprise, public sector banks. Probably from a fund management industry perspective, it is consensus a trade, and which has not worked so far there, which is large private sector bank. We are also from the camp wherein we believe that in current market juncture, the relative margin of safety in large private sector bank is pretty high, because they all are, I would say, call them derated growth. So while growth is coming through, but the stocks have not done well, meaning they have got derated. So from 4 times book to 3 times book to 2 times book. So now we believe that we are finding kind of a bottom to the valuation of these plays. And in the credit cycle, while the credit growth is a little bit lower, but if the overall credit cycle more from the non-performing assets perspective comes through, these guys are relatively better placed than public sector enterprise, and hence that valuation differential, which had kind of converged, again will start diverging when the real, when the credit cost goes higher. We will clearly see the private sector bank coming back to reckoning, and we believe this is the year in which we will start looking into that. So we are positive on the large private sector banks within the financials.
Okay, all right. Rupen, appreciate you joining in. Give us a view on the markets. Wishing you a good rest of the day. By the way, before we slip into a short break, keep an eye out on the Nifty Bank. That's moved to the low point of the day. We're 25 points away from the day's low on the Nifty Bank. That could do a bit of a jig because it's the expiry that plays out. So keep an eye out there. It went very close to around 51,500 and it bounced off that mark. Slip into a short break, come back. We'll find out what Nimish is picking up in D Street Chatter. We'll also get you some top technical trading picks. Well, keep an eye out on some of these renewable energy themes. You know, you have Inox Wind that's moved to the high point of the day. So I think we should get Inox Wind up for you on the screen. Suzlon as well. Well, that as well has moved up. So good uptick is what we're seeing on that one. Vare Renewables as well. That one, remember, it's half from the top. You know, and now in the last couple of days, it started moving up a little bit. So Vare Renewables is another one that's moved higher. So a few stocks moving, but otherwise the headline index actually has corrected a little bit. But let's focus on the push to transition to clean energy vehicles. They have received a bit of a boost. Now, sources say that two-wheeler makers have confirmed to Union Minister Nitin Gadkari that can begin mass production of flex fuel vehicles. These would be two-wheelers which can run on petrol and higher blends of ethanol. But at the same time, the industry has sought policy enablers to allow large-scale adoption of such flex fuel two-wheelers. Parikshit, he's picking all those exclusive details. He's joining in to fill us in with that. Parikshit, take it away.
CNBC TV18 has exclusively learned from sources that top automobile manufacturers like Bajaj Auto, TVS Motor Company, Hero Motorcorp and Honda Motorcycles and Scooter India, they have confirmed to Union Minister for Road Transport Nitin Gadkari that they are ready to make flex fuel vehicles in the country. Now, why is it important? Because the Indian government has been pushing ethanol as a fuel for automobiles to reduce India's import bill of crude oil and at the same time reduce pollution as well, because ethanol is environmentally friendly. Now, what these automobile manufacturers have offered that they will make two-wheelers which can run on higher blends of ethanol, anything in the range of 85% ethanol or 100% ethanol as well. This is ethanol blended with petrol. So all these two-wheeler manufacturers have said that they are ready to produce two-wheelers and they are ready to bring out at least one model each. Some of these manufacturers are likely to display their production-ready flex fuel two-wheelers at the upcoming Auto Expo, and they will launch it commercially post that as well. At the same time, they have requested policy enablers, one in the form of reduced GST. They have said that the GST on such flex fuel vehicles must be brought down from 28% to 18% because they are environmentally friendly, and we need to ensure larger adoption of such vehicles. At the same time, they have asked for a lower cost of fuel, ethanol blended fuel for such two-wheelers, because flex fuel vehicles are known to have lower efficiency than full petrol or ICE two-wheelers, and therefore a lower cost of fuel would be required. Thirdly, they have requested a long-term roadmap for ethanol blended fuel to be available all across the country. So these are the three policy enablers that the industry had sought, but at the same time they have told the minister that they are ready to produce ethanol powered two-wheelers in the country.
Okay, thank you. That's an important story that Parikshit brings us. But Nimesh is now standing by for our segment D Street Chatter. Nimesh, what have you picked up?
Hi, Rimana. It's a large cap day, so to speak, and largely led by large cap IT names as well as select pharma names as well. So IT is rallying on the back of hopes of rate cut in the US, and that could be the near-term tailwind for the IT sector to do well. And that's one sector which is relatively under-owned as well within the institution. So that's one space which is well bid by larger FIs today. But you know, it's a broader market which is turning a bit negative now. The advance decline ratio is 1:1, and there is a bit of profit booking as well in the broader market stock. So from here on, the feedback is at all-time high levels. The next leg of rally can be largely led by the large cap names. So there could be a big shift from a bit of profit booking in the broader market stocks and money moving towards the large cap names. IT was a clear example today. We have the Reliance AGM tomorrow. That can set the tone for Reliance as well. And of course, in the MSCI rebalancing, a big flow will come into HDFC Bank as well. So there are some large cap levers which can take the Nifty higher. So that's overall feedback. But today's rally is largely led by IT and select pharma names.
Always interested also, Nimesh, to know about what you've picked up on individual stocks that brokerages are talking about.
Well, you know, so in terms of individual names, the first stock on my list is GSPL. In the last few days, if you look at the last 3-4 days chart, it's been a big move on that name, on large volumes as well. And again, the feedback from the street is that maybe the street is anticipating a corporate development very soon. Potentially, there could be an announcement where they can look to collapse the holding company structure. Just to give an example for this, Rima, GSPL owns close to 54% in Gujarat Gas. Now, that stake itself is valued around 200 to 210 rupees per share on a 50 to 60% holding company discount, according to the various brokerage notes. So that seems to be the big trigger on why there is a bit of excitement in GSPL in the last many days. So that's the first name. The second name is Allied Blenders. A recent listing has seen some bit of interest back in that particular name. Essentially, in the last couple of days, I understand a leading long-only FI fund is an active buyer, and that's why you've seen large volumes as well as a bit of outperformance in the stock as well. The third stock is LKP Finance. Again, a small stock, current market price around 215. But if you look at the 1 month chart, even that stock has seen a big rally in that name as well. And the city is anticipating a corporate development in LKP Finance as well. I've heard potentially there could be an open offer in this particular company by a foreign player. So something on those lines to watch out in LKP Finance. The fourth name is MedPlus Healthcare. We saw a large block 2 days back in MedPlus Healthcare where Warburg Pincus sold out its entire 11.3% stake. It was a clean-out trade. Now I understand there could be another large potential sale, likely a clean-out from another large potential investor in MedPlus. So that's something to track in MedPlus Healthcare. And the last is Prestige Estate. While the stock has been in a narrow range in the last 1 month, but again, the sense is that maybe the company is likely to raise funds by QIP, which can get open later this week. So that's the trigger on Prestige Estates.
Thank you very much for that. You know, earlier today, we also chatted with another real estate company called Rustomjee, Keystone Realtor. And I was surprised to know the extent to which their realization, per square feet realization, has gone up. In Q1, it stands at more than 25,000 rupees per square feet. And in the same time last year, it was at 17,500. So a 40% jump in their realization. It's partly to do with price hikes, partly to do with the mix, the focus on luxury, but a 40% jump seen in the realization in Q1 on a year-on-year basis. That's for Keystone Realtor. For Prestige, as Nimesh picked up, there appears to be some fundraising on the anvil that we should keep our eye out on. Mitesh is now with us for a few BTST calls. Mitesh?
Yeah. So I think, I would go with a buy or a BTST on, rather a buy because it's a cash market stock on Oil India with a stop at about 714 for targets of 750, and a BTST, rather STBT on Concord with a stop at about 980 for targets of 956.
Thank you very much for that. Oil India has seen a bit of a spike right now. MCX is also on our radar on the back of positive brokerage commentary. Vamakshi joins in for more. Vamakshi.
Well, absolutely. MCX is surging higher in the trading session today. In fact, HDFC Institutional Equities has given a buy rating on this counter and increased its target price to 6,000 per share. They recently caught up with the management, and they say that the company has an exciting product pipeline ahead. They're launching new products such as monthly series as well as index options. In fact, technical testing for the weekly option product is currently under process. The company is continuously enhancing its tech stack and also focusing on increasing institutional participation as well as hedging activity on the platform. They also say that appointment of the new MD and CEO, Mrs. Praveena Rai, will significantly boost these strategic initiatives. Additionally, they mentioned that the company is very well positioned to withstand ongoing regulatory challenges like the curb on index option volumes, the reversal of interest earned on clearing funds to clearing members. Over here, they believe that the impact is not quantified, but they expect the impact to be very minimal. And thirdly, true to label charges, they believe will be neutral for exchanges as they will switch to blended fees. Overall, they've got a quite positive outlook on the stock. They're expecting notional and premium volume to register a 61% and 43% CAGR from FY24 to 27. They've maintained their revenue and EPS estimates, but they've gone ahead and increased the multiple to 40 times given better visibility. So given all of those factors, MCX surging higher in the trading session today.
Okay, all right, Vamakshi, got it. Thank you very much for putting that in context. Well, let's go forward and welcome in our next guest on the show. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us. Mayuresh, good to have you on. Actually, let me start with the exchanges, right? Because they're making all kinds of headlines. People are getting excited about a potential NSE listing. In fact, I was looking at BSE. It's still up in trade. IEX is up in trade. And Vamakshi is just telling us about MCX. Do you like any of the listed exchanges?
Afternoon, Subhi. I think anybody holding on to BSC or MCX should continue holding on. And obviously, I think the trigger points that Vamakshi just mentioned, that is expected to provide tailwinds for all these exchange platforms. So new contracts expected to get launched. There is expectations in terms of revival of volumes taking place, specifically in the futures segments, as far as MCX is concerned. The new product pipeline definitely is going to be something to be watched out for. The only concern that probably lies through is the pass-through of interest on the clearing funds. So I think once you get some sort of clarity on that front, there will be some portion of the interest cost that might be incremental if this probably happens, but might get saved if it's in favor of the company as well. Apart from that, I think the expectations of all these exchange companies doing well, and yes, the potential listing of NSE adds as an added trigger. So anybody holding on to BSE, MCX should continue.
Okay. All right. Just stay on with us, Mayuresh. We'll have more questions in a bit. We do have to take a quick break, but as we take that break, let's leave you with some opinion that we picked up from Ridham Desai, Chief Equity Strategist India at Morgan Stanley. Ridham shared his outlook on the Indian market with the CNBC. He also spoke about the possibility of perhaps a correction in the near future. Take a look.
Bull market peaks are made of excesses. You need excesses in credit, you need excesses in corporate activity, you need an excess in earnings, valuations, and sentiment. So there are parts of the markets that look a little frothy, no doubt about it. There are some SMIDs that look, small cap, mid cap stocks that look a little extended. But we are nowhere close to the peak on issuances. We have not seen any credit recovery of note. We're yet to see a major peak in earnings. So there are many parts of the market that are not there as yet. I suspect they will all get there in time, and we will, of course, hit a peak. But my best guess is we are not there as yet. But the things to note are, I think, with respect to the credit cycle, it's a very benign and modest credit cycle. And credit to GDP in the private sector is still below previous peaks. And it's hard to fathom that we get into a bull market peak without actually getting a major credit cycle. So the thing to watch out is to see how credit pans out. I think we're still far away from a new peak. We will get to a new peak, especially on corporate balance sheets, which remain quite light. So with light balance sheets, with earnings mid-cycle, it doesn't feel like a bull market peak, even though valuations may be a little rich compared to where investors want them to be. I think we should be prepared for a correction. That's how bull markets are. They will correct when they are least expected to correct. We've had a very smooth run with a little bit of a wobble here and there. Retail flows tend to be quite ferocious, and I expect that to continue for quite some time. But what will change, I think, as you head into the end of the year is that the corporate issuances will start picking up. So this market will see a significant rise in issuances, and it'll offset some of the demand that is coming through from retail. The key imponderable is whether foreign investors come and buy. I think they will, but because there will be greater supply, I think the market will be a little bit more balanced than it has been over the past few months.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering
Welcome back. Well, take a look at Gillette. We're due for the numbers out there. The stock has been seeing a good amount of delivery-based buying. Gillette has now spiked up in the last few minutes, so just keep an eye out on that one. Volumes as well are perking up as we speak. Mayuresh Joshi is with us. Hi, Mayuresh. Good afternoon. Good to see you in GSPL. Do you track that one? Nimesh was just telling us on D Street Chatter that there could be possibly some value unlocking It has stakes in various companies, has a core business as well. At around 400 rupees, do you have a view?
Afternoon, Nigel. No, I think that has always been a trigger for the stock, the holdings that it probably has, and the holdings are quite substantial compared to the current market cap. So any kind of divestment around the holdings, the core holdings that it probably has, is going to have a significant amount of impact as far as balance sheet dynamics are concerned. But as far as the core business is concerned, you should see a gradual recovery coming through in terms of earnings. And therefore, our own expectation is second half should probably lay a base case for earnings to start recovering and some substantial element coming in the next financial year as well. Again, I think from a balance sheet dynamics, pretty healthy at this juncture. And therefore, again, anybody holding the stock should continue.
Okay, got that. Let's see what else is hitting the headlines as we're coming to the final minutes of trade. Discussed, of course, Trent, that stock's still up and about. Some of the home financiers, the smaller ones like Repco Home Finance, finding some takers today. Stocks also up and about. Just a word on some of the NBFCs. We were speaking with Shriram Finance in the morning as well, Mayuresh, and they sounded extremely bullish on growth. Even the gold financiers continue to sound very, very optimistic. Would you look at either a Shriram or a Chola or any of the larger NBFCs at this point in time?
So you said it, Survi. I think both the names that you mentioned, Shriram and Chola, are probably the leadership stocks that we are looking at within the NBFC space. And again, I think they have a very spread out advances mix. So when you're talking about two-wheeler finance, commercial finance, rural financing, tractor financing, SME financing, they are probably present in most segments out here. Now, a large part of the expectations with better monsoons, expectations of even the RBI starting a rate cut cycle in India will boost the prospects for rural India. And as that happens, the kind of growth that can come through in terms of advances can be quite substantial. The second element is obviously the capital adequacy that both these stocks have, both in terms of their core ratios and tier 1 ratios in particular, are extremely strong to fuel the kind of advances growth that we probably need. Because of a better credit rating and the mix of borrowings that it probably has at this juncture, the expectation largely that is getting laid out is that NIMs and spreads, which are very, very stable at this juncture, should also show some amount of expansion over the next couple of years. And last but not least, in terms of the unsecured advances as a part of their overall balance sheet, are not significant enough compared to the other smaller peers. So yeah, I think the valuation matrix might peg them in the top quartile, but I think the earnings growth should also be equally strong for both these companies. So yeah, we maintain our optimistic view on Shriram and Chola, both these companies.
Okay, all right. Mayuresh, I wanted to ask you on Vodafone Idea. There are a burst of some good news that keep coming in out there. The hope is that, those dues that are there, they'll be cut down a little bit. In the near term, they've got some breathing money as well, because for the next year or so, it'll suffice. And then hopefully the tariffs start moving up. And, that's what could support the core business as well. What's the view? Post that issue that they did, the stock ran away to 18 rupees, but it's cooled off since then. Your take?
No, so I think the developments that are happening, Nigel, are all in the positive direction for Vodafone Idea. Obviously, I think the waiver news that we are also hearing about in terms of not expected to maintain is currently not confirmed. But again, I think if something comes on that front, it is a welcome positive. With increased tariffs, obviously the leverage portion, which is significantly higher on Vodafone's balance sheet, should start coming off. And therefore, the stress related to interest payments should come off as well. But a large part of the earnings recovery will happen gradually, and it will happen over a period of time. So you'll get these periodic bouts in terms of price moves that Vodafone Idea will have. But a substantial re-rating will take some time, as balance sheet repair itself is going to take some time. So I think we still maintain our optimistic view on Airtel, we maintain our optimistic view on Industars, and we obviously maintain our optimistic view on Jio through Reliance. I think they will continue doing well in terms of all the tariff rise that has probably taken place. And also other parts of the deleveraging exercise, as an example, that Bharti might do as far as their African operations are concerned. Jio expectations in terms of demerger of their telecom arm as well. So I think a little bit more skewed towards Airtel and Jio at this juncture.
Mayuresh, finally, Reliance AGM tomorrow. That's one of the big watch points, right? What would you expect? I mean, anything on the horizon? And also, 3,000, is the stock still a good buy? And what kind of price targets would you have?
No, so we remain extremely positive. I think the EPS, RS ratings, the institutional holding, as we see most parameters on cancel and get fulfilled by Reliance. Obviously, I think the core business in terms of their upstream operations are expected to be steady state. The expectations of a petchem recovery will start coming through over the next few quarters as China and the globe starts recovering. Retail operations, telecom, as well as Reliance Retail should have a steady show. And therefore, I think the kind of capex that they're doing in the new energy businesses in a very calibrated fashion, without putting too much of stress onto the balance sheet as far as leverage is concerned, is a welcome move. I think some announcements on that front in terms of developments and any key developments in terms of when will this come on stream is going to be extremely welcome. So we remain very, very positive in terms of Reliance. We continue holding this stock in our global portfolios. Our take is that this stock will continue posting a double-digit earnings growth over the next few years. And therefore, ROE should show significant improvement. So not ruling out 18 to 20% upside over the next couple of years.
Okay, that's, by the way, news coming in on Vodafone Idea, where Vodafone Idea's curative petition in the AGR matter is, scheduled to be heard on the 30th of August. That's a Friday. This is a big trigger for the stock. The overall AGR dues are about 70,000 crore rupees. The companies Bharti Airtel and Vodafone Idea have argued that there are certain mathematical calculations. The Supreme Court had struck that down. And this was the final resort, a curative petition filed by Vodafone Idea that, take a look at that, calculation of AGR dues. If they get a favorable verdict, then the overall dues of 70,000 crore rupees can come down by nearly half. We're talking about a near 35,000 crore rupee relief, and that will bring down the annual payments that Vodafone Idea has to make on their AGR dues, after the moratorium comes to an end. So this is seen as one of the big triggers. But historically, curative petitions have not always been successful. They're often not heard. If they're heard, they're not always successful. But considering that the government is a large shareholder, the largest shareholder in Vodafone Idea, and analysts say that if the government is keen on rescuing Vodafone Idea, then this is the best shot. Because if this AGR dues are not, they don't come down, then it's going to be difficult for Vodafone Idea to meet those payments. Citi had said that in a bull case scenario, if these AGR dues indeed come down, then the target price for them is 28 rupees. So not all the brokerages have factored in. It's a bull case if this happens. It's not the base case scenario that they successfully get a...
But we're talking halving, potentially
halving. And the companies come out and said that in the conference call, that if it's successful, we're talking about 70,000 crore of AGR dues coming down to about 35,000.
Okay, let's see how that plays out. But I guess because of the reasons that you mentioned, this is a curative petition and we don't know its fate in the court. We'll just have to wait and watch and see how it goes. 30th of August is, of course, the date of hearing. Well, with that, the bell has also gone. So let's quickly wind down what has been, an okay day for the market, because we did hit the fresh all-time high for what it's worth. And then some profit-taking set in, but we're still closing with a gain of about 27 points on the Nifty, and it was IT all the way. Talk about the top winners: LTI Mindtree, Wipro, Infosys, Tech Mahindra, TCS, all of the IT big boys lined up on top. And then pharma was the other sector that stood out with some buying on Divi's, on Sun Pharma, and names like Cipla as well. Bharti Airtel also having a pretty decent session with a gain of about 2%. What didn't quite work was the banking part of the market. Bank Nifty's underperformed big time, 0.5% lower on the Bank Nifty, Axis, Kotak, most of your names on the downside. Aside of that, Maruti, Suzuki, Asian Paints, Adani, these are some of the weak links on the Nifty. These are the three biggest losers of the day. But perhaps not too bad, Nigel. Still managing that fresh all-time high and a 25-point move, at least on the large cap.
Well, we got there, but we couldn't hold on to that mark. For the time being, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. On the other side, we'll focus on markets forward.
Shaping the new world order. Setting the highest standards through exemplary leadership. It It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform. As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom. We see opportunity in sectors like two-wheelers, tractors. Also, we see opportunity in real estate ancillary kind of industries. With the specter of rates coming down and hopefully liquidity improving, we also see opportunities in banks, large banks which suffered due to liquidity in the past. We also see opportunity in the smaller banks or the non-banks. So we are looking at the segments like the pipes, the cables, the switch gears, the lighting and all those segments. Because all those segments, we believe the organized sector has a definite edge and they can do better.
Profit booking at record levels. The Nifty crosses 25,100 for the first time, post a record close to end higher for the 10th straight day. For the first time in 4 years, the broader markets though underperform the blue chips in today's session.
IT stocks outperformed. The index gains 2%. L&T Technology Services says conversations and the pipeline have vastly improved, even as it sets a $2 billion medium-term revenue goal. A recovery in BFSI tech spending in the US also prompts a bullish view on LTIMindtree.
NBCC rallies 10% after it says that the board will mull a bonus issue on August 31st. JMM Pfaudler gains 5% after 9.2% equity changes hands worth around 557 crore rupees. And trend surges as Bernstein bets big on the stock.
Hello and welcome to this special presentation. Indeed, it was a bull charge, a slightly smaller one, but one that did take the market to a fresh all-time high. Consolidation for the last 2 days, and it was day 3. third time lucky for the Bulls. I'm Surbhi Upadhyay. With me as usual on the show is Nigel D'Souza. Hi, Nigel.
Well, hello and welcome to our special edition. Bull charge ahead. There's plenty to talk about in the next 20-25 minutes or so. But what a day it's been on Dalal Street. Over the next 20 minutes or so, we'll decode all the market action, the key developments. We'll get you all the top market opinion, corporate voices, and track the cues for the day as well. But Surbhi, let me first do a quick rewind of how the day went. We said it this morning that there's possibly, a chance that the Nifty goes ahead and hits those fresh all-time highs. That's what I said earlier this morning. And in the first 1 hour, we were down 50 points. But in the following hour, that's within 2 hours of opening, well, the markets went ahead and made those fresh all-time highs. There were stocks that did quite well as well in today's trading session. But it was more a stock-specific day by the end of it. So we hit all-time highs, slipped from the top. The tech index did very, very well. And a few stocks that did well in today's trading session were the larger cap names. You had Wipro, Infosys, they did well. Ahead of NVIDIA's numbers, tech was buzzing in trade. The Nifty Bank, though, it underperformed. Remember, it has the element of expiry as well that did play out. But the advanced decline ratio should be, that tells you the picture, right? You'll be wondering, these guys are talking about fresh all-time highs, but my portfolio is not feeling too good. That's the reason. More number of stocks declining than advancing by the time we wound up.
Well, absolutely. Well, the wise men have been calling for a move from small cap, mid caps to large caps for a long time. We don't know if, indeed that's starting, because yesterday was a day where the large caps did have a much better session than the mid caps. There you go. That's the mid cap index ending at the lows. And of course, IT, the buzz we will discuss in more detail. The IT index was absolutely sizzling. IT and pharma, actually, two pockets, but IT was the one that held on to a bulk of those gains. Remember, there's a lot of excitement around NVIDIA's numbers, which come out later in US market action. And if the NASDAQ uptrade continues, and usually that has a bit of a rub-off effect, though it's chalk and cheese, very different businesses, Indian IT companies and those listed in the US. But in general, the positive tech sentiment tends to rub off on Indian stocks as well. And perhaps there was some of that already playing out. We'll discuss this as we go along. But first up, the lineup today. Here's what we have in store for you. We'll start off with the top movers and shakers. We'll have Hormaz filling us in on all the action. The sector of the day, as we have been telling you ad nauseum, is really IT. So what lies ahead for the tech pack? Why was there so much of buzz? We will discuss all of that. Individual stock action, we'll be focusing on NBCC. The stock was hitting record levels today. We'll tell you why in just a bit. GMM Pfaudler rallied big time on the back of a very, very large block trade. More details coming up. And then Bernstein had a very positive view on a couple of retailing stocks, including Trent. And Trent really rallied 5% up today. So more on these stocks, coming up in just a bit. And then, of course, we get to our segment D Street Chatter, talk about all the buzz in dealing rooms as the Nifty hit a fresh all-time high today. And then, of course, some of the key conversations as well. But let's kick it off first with Hormaz, who's here with the movers and shakers. Hormaz, all-time high once again.
Indeed, all-time high, but we can't say the same for the broader markets though. But there were enough and more movers within the broader market space that were in the green despite the very skewed advanced decline ratio. But we'll start off with, of course, the sector of the day, that was IT. And pick an IT name, and it was up in today's session. LTIMindtree up 6.5%, the top gainer on the Nifty today. Wipro, LTTS, Coforge, Persistent, all of them having a good day, and most of them ending at or near the highest point of the day. So that was some good going there. But brokerage commentary, there were a lot of stocks that moved on the back of brokerage commentary today, and Tata Elxsi was one of them that did not, was possibly the only IT stock that didn't do well in today's session. After the 17% rally that we saw yesterday, some bit of profit booking ending at the lows of the day, 8.5% lower for Tata Elxsi. Trent, as if the stock has not moved up much enough, it's still another 5% today, but who are we to complain? Another positive brokerage note coming from Bernstein. MCX as well as Zydus and Amy Organics with the upgrade that it received from HDFC Securities earlier this morning, 6% higher there as well. Some other stocks that did well in today's session on the back of news flow, and NBCC was one of them, was up 16% at one point of time, ended 10% higher on the back of its bonus issue. Ahluwalia Contracts, JBM, DCX, Jyoti Structures, all of them won orders during the course of the day, ending with gains of anywhere between 2.5% to 5%. Stocks that did very well on the back of very strong volumes, and GMM Pfaudler had to be there on the back of that block deal that took place. HUDCO among the PSUs did well, as did Engineers India, and IEX had a good day on very strong volumes, 4% higher there as well. And some selling pressure barring Tata Elxsi was also seen in stocks like K KFin Tech, the stock was up 13% yesterday. So some bit of cooling off today. Kaplan Point, after that one big move last week, has been coming off consistently, as is Nykaa, Just Dial, and Nuvama also did not have a very good day at the office. Back to you guys.
Okay, all right. Thanks a lot for that, Hormoz. Let's get in our guest for today's show. To help us out with the technicals, we have Rohit Srivastava, who's joining in, as well as Amit Jeswani, who's going to help us out with the fundamentals. Hi, gentlemen. Thanks a lot for joining in. Rohit, you go first. Some have been calling for a correction, some cooling off. That's not to be. At the start of August, people thought 24,000 has come. We told you so. Guess what? We're going to end August at 25,000. Where do we go from here?
My sense is we still have quite some room on the upside. I think whatever happened before the elections was a long consolidation phase, and we've sort of broken out of that, and that has set us up for a prolonged move to the upside. That's something that people are slowly but surely recognizing. And in terms of levels, so we should be heading, I think, towards 25,500 to 25,700 in the coming days. Those are the next set of levels where we will look for some resistance. But I don't think the move really ends there. I mean, it might just be the next hurdle where you may see some consolidation again. But I do think this is a multi-week, multi-month move. I mean, the only time period for some worry would be somewhere between late September into October, because that has to do a lot with the US election season, where you've typically seen volatility in the previous two election rounds. So those are the things that we will look at. But apart from that, I think overall the larger trend remains bullish, and that's the good news. It will remain a buy on dip market, except that you may see rotation. So you have to get used to the idea that there will be a lot of sector rotation, there will be stock rotation. You need to be in the right places. Even the talk you were doing earlier between mid cap and large cap, we'll have to move between those. Even in terms of the Nifty bank, say for example, bank Nifty is, I think, the big laggard out here. And it's not even done a 60% retracement of the previous fall, which is little surprising given that the Nifty is already back at the all-time high. It's very rare to see such a big gap between the two. But I'm sure the bank Nifty is going to play catch-up. And that will then also add further to the gains in Nifty, given that banking stocks have a certain weightage in there. So that's the overall thought process. I think every sector is slowly but surely starting to participate. And that is why the index itself is not really showing any signs of giving up.
Okay, so you're saying higher levels ahead, 25,700 is perhaps in sight. Got it. Rohit, we're going to come back to you in just a minute. And Amit, welcome to the show as well. Just hang on, because we want to start off with discussing what was really the sector of the day, and that's the IT space. I mean, stocks were on fire across the board, all of large cap IT. Now, some of it you could perhaps attribute to positive brokerage commentary, for instance, LTI Mindtree, and then there was L&T Tech, which was gaining after the investor call went down pretty well with the street. So let's straight away first go across to Rima to get in all the fundamental triggers and details, and then we'll put the question to our guests. Rima.
So one of the key takeaways at yesterday's analyst meet for L&T Technology Services was the company reiterating their medium-term aspiration of achieving $2 billion of revenues and margins of 17 to 18%. They're also focusing particularly on three verticals: mobility, sustainability, and tech. And their aspiration is that each of these three verticals will achieve a revenue of $1 billion. They've been given a separate P&L responsibility too. As for the near term, the management did indicate that the conversations, the pipeline on demand is improved, but still, decision-making is taking time. Motilal Oswal says the company's revamped go-to-market strategy opens up new avenues of growth for the company, particularly in the automotive side, where some of its peers have done better. They have a buy call on the stock. Nuvama, though, thinks that the valuations are a bit expensive, and therefore the risk-reward is not favorable. But at the analyst meet, the company reiterates its growth ambitions of $2 billion of revenues and margins of 17-18%.
Rima, stay with us. LTI Mindtree, it was up in today's trading session post the positive brokerage note, while Tata Elxsi was lower post the sell call coming in from Kotak. Take us through both those two.
So LTIMindtree was the big mover today, and this is after Kotak Institutional Equities upgraded the stock to an ad, raised the target price to 6,200, and this is predicated on growth picking up for the company. FY24 growth rates of 4.4% were a trough, picks up to 6.5% in the current year, and accelerates to 11% next year. And this will be driven by a recovery in BFSI and high-tech. These were the two challenged verticals, and now you're already seeing green shoots in spending by the large US banking clients. Also, the other headwind about senior leadership exits, well, that seems to have cooled off a bit in the last 3 to 4 months. But on Tata Elxsi, Kotak Institutional Equities is very bearish. They say that, the stock of Tata Elxsi moved up by 26% in the past 2 days. The stock was expensive to begin with, even before the rally. They have a sell call, target price 5,500, valuations are stretched. And while the automotive vertical for the company is going to do well, that's 50% of the revenue. The balance 50%, which is healthcare, media, communication, is a bit challenged.
Thanks a lot, Rima, for joining in and updating us on those tech names. Amit, let's come across to you. I don't know how you're placed on tech, but what do you like? Large cap, mid cap? You'll normally go for some fancied sectors, where you see value. What's the call this time with regard to tech?
Hi, Nigel. Thank you so much for having me on your show. Nigel, unfortunately, we don't have any exposure to tech services, so we've missed out on this trade.
All right. No worries, but you'll definitely got in a couple of other names. So share some insights on that. How have you rejig the portfolio? It's going to be a stock-specific market from here on. The index has done very, very well. But how you all placed? First, between large and mid caps, if you're allocating fresh money, how are you doing it? And what is that, one theme that you can share with us that you'll have got into, say, in the recent past?
So Nigel, the theme that we've got into has been music. We've got one company which is growing at 30-40% in this space. Music is a great business. It's a free cash flow business. If you see even your tech services, even at the worst time when there was recessions, the YOY growth of all these companies was negative. If you see Persistent bottomed out at 32 times, if you see Infosys, it bottomed out at 26 times, TCS bottomed at 28 times. In that range, all these, see, when you have a free cash flow business, it is very tough to keep pulling it down. And we've bought one free cash flow business in the music industry, because we will not buy this 5-10.
So Amit, so that it's doing a free cash flow of around 100 crores operating cash flow, not
yeah.
So that's Saregama.
No, the other one.
Okay, all right. Yeah, continue. You're making the point.
There are two listed players. There are three large companies. One is T-Series, one is Saregama, one is Tips. These are the three large players in the Indian market. T-Series is unlisted, so of course we can't buy that.
Correct.
But the other two players we don't have. So of course I'm a portfolio manager, and whatever I say, me, my family, my clients have vested interest in virtually everything I speak, and we are very fast traders. We're all the time buying, selling. But coming to this thing, that is the new position that we have created, 30% growth. And it's a great business. You wake up in the morning, you probably listen to bhajans. In the night, if you're happy and drinking, you'll listen to Honey Singh. If you're sad and you listen to breakup songs, if you're happy, you listen to romantic songs. Listen, whatever you listen to, I'm going to make money, hopefully, from here on. We played Saregama initially from like the first phase of Saregama, but we sold out Saregama in 2021. We made a fortune, to be honest, in Saregama when Saregama was scaling, but now we don't have Saregama. We have the other competition, which is scaling at 30-40%.
And Mr. Taurani has been sounding fairly optimistic as well. He raised some money and looks like that's the theme that you're playing out there. But since you mentioned music and some drinks from the alcohol beverage space, what do you like?
So alcohol, we've not been able to get something which we think is scaling well. We had Tilak Nagar in our portfolio. We've sold out. Very small positions we've taken. We've never had the conviction to build extremely large positions because the industry leader, United Spirits, doesn't grow that fast. Radico Khaitan is the only good player, but is not scaling very fast. Sula, we love as a business, but they are not scaling. But we need scale. So example in FMCG, we categorize this as FMCG. We have, assuming Varun Beverages, which is growing at 28%. Now, for me to shift from a 28% grower to someone who's growing slower, there has to be a very large valuation gap, or there has to be something for me to shift, because HUL and all these guys are growing at 3-4%. That is not where we want to go. So we want to be with the highest growth player in every industry until the time that guy is growing, and the price is also telling me the same things. We will stay there. And yeah, we just keep doing this across. Whenever there are large changes, there are large pivots which are happening. When Sting came in, we got into Varun Beverages, and that stock has done wonders for us. Like Indigo, which I think is pivotal. We already have Indigo in our portfolio. I think it's still, and markets are just waiting for a block here.
You know, Amit, you mentioned beverages and you mentioned Sting and we were talking music. So for a second, I thought it was Sting, the musician who's a personal favorite, but yeah, Sting the drink. I get it. By the way, stay on and listen to this because you're talking about growth stocks, and I know you have the next one, at least you did. Trent is a stock in focus. Do you still hold the entire holding, or have you booked any profit in Trent, Amit?
No, we have sold at intervals, but it is still our second largest position.
Second largest position. So listen into this. We've got Sudarshan joining in because today Bernstein came out with a note on retailers, and among other stocks, they mentioned Trent, in specific as well. That stock was taking flight, but there were other companies mentioned in that note as well. So Darshan, fill us in on the details.
So talking specifically about Trent, Bernstein has initiated coverage on the stock with an outperform rating, and target is rupees 8,100 per share, which implies upside of 11% from current levels, and this 11% upside is after the stock was 6% higher in today's trade. And the reasons, as per Bernstein, it says investors and companies have been waiting for Indian middle class to emerge and spend, and this wait is a supply at right value problem, not a demand one. And demand beyond top 10% of pyramid and beyond top 40 cities can be unlocked, and Bernstein sees huge value creation opportunity. Talking about the stock performance, it was up 6% today, 140% in 2024, and in August it was up 25%. And this up move also can be attributed to the strong set of earnings that company has been reporting for the last few quarters. And another trigger apart from the performance of the stock is the Nifty inclusion. The stock will be included in Nifty effective September 30th. Another stock that was in focus today was Ami Organics. Stock was up 6% and is 7% away from the record high that stock had hit in the month of June. And the reason was HDFC Securities has come out with a note. It has upgraded the stock to buy and given the target of rupees 1,600 per share. And this target price implies upside of 10% from current levels. And as per HDFC Securities, the reason it has upgraded because of first ramp up in Fermion contract, expansion of its specialty chemicals portfolio, balance sheet turning net cash in Q1 FY25, and increase in better margin CDMO contribution to 25% from 12% in FY24, and last is ramp up in capacity utilization of specialty chemicals plant. And because of all these factors, HDFC Securities expects margin to improve by more than 500 bips by FY26 and profit to grow at a 38% CAGR and EBITDA by 29% CAGR over FY24-26.
Thanks a lot for that, Sudarshan. Bazooka moves on both those two. Rohit, what's your view? Trent has been a big mover. Sometimes when the stock comes into Nifty, you see the juice already come off because there was pre-positioning out there. But on the charts, how's it looking on Trent? And if you like anything from the specialty space, which is looking good on the charts, because there's a fundamental debate whether they're bracing for more or not.
So it's interesting. See, when we look at a stock like Trent, it's been like trending for most of the last couple of years. Now, at this point of time, if I purely look at the chart, would somebody buy it at this level? Typically, I wouldn't, because we like to buy the dips. The only good part is that it's in a trending mode. So that means that whenever it does give you a good pullback, like it did probably in early August, those are times when you actually look at getting in. And we are not really at that point in this move. So for people who are holding, they're probably just riding it. But to make a fresh entry, you really have to wait for those pullbacks.
Chemicals? Yeah, chemicals also. Anything you liked out there?
No, chemicals I have actually is a sector I've sort of avoided because, we do a combination of looking at the momentum along with looking at the, valuation setups. And when we do that combination, we actually found that a lot of these companies, while the price action has been there, they've actually not shown the kind of growth for quite a while. So that's a sector we've sort of avoided completely.
Got that. Rohit, at the start, you made the point that this market has the momentum and the ammunition to perhaps go higher. And you mentioned even 25,700 perhaps is on the cards. I mean, any timelines you want to put to this? And you're saying you are expecting banks to eventually play catch up. But what else? What else will lead this leg of the up move? And what would you look at buying afresh now?
Yeah, so that's interesting. So I think this last goes on for at least another 2-3 weeks. I did say usually we get some trouble from the US election season somewhere in late September, early October. So that time is where we would be looking for the next correction. So possibly we'll achieve most of our targets by second or third week of September. In terms of sectors, I think the interest rate cycle is an important one to pay attention to. So immediately puts our attention towards interest rate sensitives. So which is where the first thing I focus on. Of course, I've spoken of banks, but what I'm finding is a lot of the financial services or NBFCs, for example, that are really having not outperformed for a long time and are really breaking out of ranges. Just to give an example, and it's not a recommendation for anybody because we are not really advisors, but if I just look at Shriram Finance as an example, so it's breaking out of a couple of years of range. And has been growing, and therefore when we look at the valuation setup, we actually see it getting more and more undervalued, even as prices have gone up because of the underlying growth not getting priced in. So those are the this is an example of the type of things we are really searching for, where the argument is against valuations. Now, speaking of interest rate sensitives, so I go on to the metal sector because the direct impact of that is on the commodity cycle, and commodity prices should start picking up from here. We already seen aluminium prices pick up a lot.
Yes.
Copper hasn't done that much, but I think it will. And so immediately we get our attention to, metal stocks from, copper to aluminium to steel.
Yeah.
And that's, I think, another interesting place to be in.
Well, thanks a lot, Amit, as well as Rohit, for joining in, filling us in with your take on the markets. It's that big bull market, right? I mean, defying gravity. But we appreciate you joining in, giving us a review on a lot of stocks. Slip into a short break, come back. We'll continue our focus on what went on during the day. We'll get you some market opinion as well. Welcome back. Well, as always, let's go to Nimesh. He's going to give us a sense on D-Street chatter. Nimesh, take it away.
Well, the Nifty ended in the green largely on back of support from technology stocks and select pharma names, but it was a mid-cap which relatively underperformed, and the advance decline was close to 1:1. A lot of individual names are buzzing. The first stock in my list today is GSPL. Big move in the last couple of days, large volumes as well, and the city is anticipating a corporate development very soon. A potential collapse of the holding structure could be on the cards for GSPL. The second stock is Allied Blenders, a recent listing, but off late it's seen a bit of up move as well. Again, there are very strong buy flows, and I understand a leading long only FI is an active buyer in Allied Blenders of late. The third stock is LKB Finance, a small stock, but again buzzing in the last couple of weeks, and the city is anticipating a corporate development in LKB Finance as well. The fourth stock is MedPlus Healthcare. We saw a large block a couple of days back where Warburg sold out its entire 11.5% stake. Now I understand another large holder is going to sell the entire stake and could be a potential clean out again in MedPlus for healthcare. And the last name is Prestige Estates. Well, the stock has been buzzing off late. I understand the company is likely to raise funds by QIP very soon, and the QIP is likely to get launched later this week.
Okay, all right. Thank you very much, Nimesh, for all the buzz and the chatter from the dealing rooms. And with that, we're out of time. But just before we go, two important events to watch out for that will define market direction tomorrow. One, of course, NVIDIA earnings that will come out later this evening after US market hours, actually. And we'll watch out for the commentary. And the other is the Reliance AGM. So those are some of the big cues to track tomorrow. But before we go, Nigel, also, I think, as after the markets closed out, there was a bit of an advisory of sorts coming out from the regulator today on the SME IPO.
Well, that's right. And Sudarshan is joining in to fill us in with a quick update on that front. Sudarshan.
So some very strong words coming from SEBI in terms of advisory for SME companies and for the investors who have been investing in these companies. But before I talk about that advisory, look at the performance of BSE SME Index. It's up 150% in 2024 and it's up more than 200% in last 1 year. Now talking about what does SEBI say? It says some of the SME companies and or their promoters have been resorting to certain means that project an unrealistic picture of their operations, and such companies or promoters have been seen to make public announcements that create a positive picture of their operations, and these announcements are typically followed up with various corporate actions such as bonus issues, stock splits and preferential allotments. And because of all these things, SEBI has come out with an advisory for the investors. It says investors are advised not to invest based on tips. It has urged investors to be careful and watchful of these SME companies and their announcements, because it believes some SME companies projecting unrealistic picture of their operations, and modus operandi of some companies follows the pattern, and SEBI has mentioned all this in the release that today it has announced.
Okay, so one needs to be watchful and careful. That's the message from the regulator. Sudarshan, thanks very much for the details. With that, it's a wrap on this edition of Bull's Charge Ahead. Thanks for watching. More news and updates coming up in just a bit.
Yes, there is a new man who is going to head the largest bank in the country. State Bank of India has a new chairman, Challa Srinivasulu Sethi. Mr. Sethi, thank you very much for your time, but give me a minute to tell our viewers that Mr. Sethi is a veteran. 36 years he has been in State Bank itself, and he's one of those, perhaps the only one, who has an agricultural graduation degree before he joined, and of course has spent a lot of time in corporate credit. Last few years, he has been actually in charge of the digital operations as well. So clearly, the man who has been tailored for the job. Mr. Sethi, thank you very much again for your time.
Thank you, Lata, and thanks for the intro.
Okay, well, first up, it's such a big job. What are your first thoughts when such a large responsibility lands on you?
It's definitely a big job. I think it's more of a humbling experience that, somebody's trusting you to carry such a large institution. It is not only one institution, it's a conglomerate, as you know, that, they're everywhere.
Yes.
I'm very thankful to all the stakeholders, particularly the Government of India, to repose faith in me. And I see that it's more of a greater responsibility. Responsibility both to the institution as well as to the country. We are the proxy to the economy.
Absolutely.
And obviously, I think it's a great humbling experience.
Yes, I think nearly a 40 lakh crore deposit base would make you as large as the Indian budget. So it's no laughing matter. But let me start over there. Deposits is the place where banks are now, kind of racing against one another. Do you think this is going to push up costs even more? Are we at the peak of the deposit rate, or is the war still on?
I think the war is a very strong word to be used, I suppose.
The competition for deposits.
The competition is definitely there. The pent-up demand for credit. Obviously, we have had an excellent run on the deposits, not in the other sense.
I got it.
We had good growth of deposits during the COVID period, right? I think most of the times we compare that growth with the current growth rate, number one. Number two, on the contrary, credit growth was lower in those periods, and now, of course, the credit growth is picked up. So the disparity is there, and this is not the first time that we are having this disparity. Earlier also it was there. What I visualize, or I'm able to see that everybody is thinking that there would be some, monetary movement of interest rates.
Yes.
If you see, much of the concentration of the deposit is happening in the 1 to 3 years buckets, which means the banks are also looking at just tweaking the rates within these buckets.
Yes.
In order to prevent, long-term locking up of the interest rates.
That's right.
So I don't see that the huge rate war is going to happen. The competition will be in a different manner in terms of surveys, in terms of the leveraging the branch network and reaching out to the customers, and also maybe within this 1 to 3 year bucket, what is that you going to do?
No, all this is even before the new LCR rules have come. Once the liquidity cover for what they call unstable deposits increases to 15%, then do you think deposit FD rates will go even higher?
No, I think LCR is too early to talk about. Okay. I think we have been taking this stand that is only a discussion paper. Okay. Let us see. I think this discussion paper has several elements. It's in terms of the HQLA modifications, it's in terms of the run-up factors on various deposit categories. So we are engaged with the regulator.
But it is a draft regulation.
It's open for discussion.
Yes.
And I'm sure the regulator would definitely take opinion from all the stakeholders.
Okay.
I think let us not front run on that. I think we still have some time on that.
All right, let me come to the loan side and then ask you about margins. On the asset side, the problem is with unsecured loans. The Reserve Bank has already raised risk weights to cool it down. And we can see it, even your credit cost went up by about 10 basis points, if I'm not mistaken. I think even more, it went up by about 15 basis points. Do you think that there is more to come in terms of credit cost because personal loans, unsecured loans can get, can go delinquent?
No, I think the concerns of the regulator on unsecured lending is highly justified. As we keep saying that, there are unsecured loans and there are unsecured loans of SBI. And the uptick in the slippages, what we have witnessed in the last quarter, is seasonal in nature.
Okay.
And one thing is, because the asset quality of retail unsecured personal loan in SBI is gold standard, people do not want to tolerate even 5 basis point, 10 basis point slippages increase. I think
express loan category showed
obviously that is the only unsecured portfolio we have. All of the rest of the portfolio, except barring a few pension loans, much of that personal segment is home loan is the very largest, large portfolio what we have. So I'm not really concerned about this.
You don't think credit cost can go like above 50 basis or something?
No, it may go up a little, but I don't think it's a matter of concern, either on the asset quality or on the slippages or on the credit costs.
Okay. No, but personal loans are also the ones that you get more money. It's a high yield.
No, obviously. I think we will continue to focus on that. And our unsecured personal loan is essentially to the salaried class. Okay. Even if there are slippages, there could be temporary slippages, some salary get delayed or something. But otherwise, I think there's no great concern.
I'll tell you the concern of the investor. Your cost of money could go up because, as you say, in the 1 to 3 year bucket, the deposit competition is very hot and doesn't show signs of flagging just yet.
No, but
and the cost of personal loans, you cannot lend too much because it is already showing signs of overheating. So will your margins be under threat? Your 3.2 is deliverable, you think?
3.35 is something.
The last number.
Broadly, it will remain there.
Okay.
See, if you see our credit growth has been secular across the segments.
Yes.
It's not that it's come from retail personal loan or total loans.
No.
It has come from agriculture, it comes from MSME, it has come from corporate. I think if we are, our product portfolio is so diversified, even if one product is not doing all that well, or we want to go slow for any reason, I think we are able to make up. Okay. And we have had double-digit growth across the segments. And I'm sure, I think that will continue. Okay. So the compensation which will happen in terms of losing somewhere is always there with us.
Okay. Okay, let me zoom out. Not the micro questions. I will ask those questions when you come with your results. As you look forward to your term, what do you see as the big challenge?
I think the biggest challenge is that how do we align such a large organization like SBI to the interest of the larger national interest. I think, in a way, I think it may sound a little cliche, but we have
you grow in the nation
23%. If we consider that this is India's decade, it is also going to be SBI's decade.
Okay. So, will you be concentrating on corporate? What will be your areas of focus, your top 1 or 2 or 3 areas of maximum attention?
I think the advantage of being a chairman of SBI is that I have too many things to choose from.
Okay.
I think we have the ability to fine-tune our approach as we go forward. You have seen, Lata, over the years, when corporate was not doing well, we have significantly did very well in retail.
Okay.
And if we think that we have reached something, a plateau in the retail, we have the ability to increase the corporate book.
But is there demand in corporate?
There is corporate demand. I think we have, in terms of the pending pipeline, is a very large pipeline is available, and I'm sure we will continue to grow in the same level of corporate.
Okay. What about digital? That was your last responsibility. What are you already experimenting with artificial intelligence? Can you tell us what you are looking forward to in the digital
Thanks
space?
for asking that question. I think a couple of things what we are doing in SBI on the artificial intelligence side is that, we've been doing for quite some time. We probably one of the larger banks which have introduced AI-based lending models, even before digital lending models were being talked about.
Okay.
And we do a significant number of loans under the AI/ML-based lending models. But our approach to the AI is the enterprise level AI. I think today, and also probably we are one of the first major banks to come out with ethical AI and responsible AI.
Okay.
We said that what Governor talked about, model biases and all, are something what we already have in place in terms of the AI, and we definitely will be using both Gen AI as well as AI, both for fraud risk management, digital lending, acquisition of customers across the enterprise.
Already underway, or you are?
We already are doing it. Like our proactive risk management processes are completely moving towards AI/ML. Our KYC AML, anti-money laundering, is also based on AI/ML.
Okay. Permit me the luxury of one news-based question. What are your plans about Yes Bank? Are you looking for a buyer? Is there any deadline, any milestone we have to look at?
No, I think media knows better than us anyway. I think if anything is there, we will definitely at the appropriate time will disclose to the market, disclose to the media.
Okay.
I don't think anything is worth disclosing at this moment.
Okay. And finally, the markets are, you are a good luck charm for the markets. All-time highs yet again today on the Nifty. So would you be tapping the markets simply because they are willing to give?
We have the enabler by the board. We need to look at the right and appropriate time. I think this question was being asked when our share price was 180 rupees also.
Yes.
So not that we are, nobody can time the market. We're not trying to time the market, but I think we'll
But this is a sweet time, you'll have to say.
It's definitely a good time to go.
Okay.
But
so
we don't have any timeline at this stage.
Okay. Mr. Sethi, it was a pleasure speaking with you, and from all your viewers and investors, All the very best for your entire term.
Thank you, Lata. Thank you very much.
Well, that's the word from the big man from SBI. We will, of course, hear more from him in the months and years to come. Back to you in the studio.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year. with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India
Welcome back. Here's the big breaking news coming in. The Competition Commission of India has approved the $8.5 billion merger between Reliance Industries and Disney's India business. For more on this, we're now joined by Prakash Diwan, a known market expert. Mr. Diwan, thank you so much for joining us. First things first, there were concerns in terms of what the cricketing rights could mean as far as this merger is concerned, but they appear to have crossed the hurdle. What does this translate into?
So, I think it kind of paves the way for all the plans that Reliance Industries had outlined some time back on its media business to finally kind of start getting into action. So I think it's very clear that by the end of this year, once this is done, next year onwards, you'll start seeing all the benefits of this merger start accruing. Particularly, there'll be a lot of rationalization in terms of costs and overlaps and all. So, both the businesses, both the companies don't need to be investing energies and resources into similar kind of, verticals, but instead there will be synergies that will start benefiting Reliance in a very big way.
Let me ask a follow-up question. One concession that was being reported and speculated on that the merged entity is likely to have offered the Competition Commission is on the issue of having reasonable advertisement rates, especially in reference to cricket broadcast. How do you weigh in on that? Is that a bit of an overhang? Do you think you'll consider that as something that perhaps needs to be watched out for, perhaps more details sought?
Of course, more details will definitely make things clearer, but nonetheless, very clearly the span of these cricketing rights and the advertising rights to these events is going to be now much more bigger at a lower cost of acquisition. In the sense, the company Reliance won't have to pay that much to be able to garner those rights, and that means that they will be able to offset the lower advertising rates if they were to be implemented because of the lower cost of acquisition. So in a way, it's going to be win-win, but it's going to be good for the consumers. But I don't think the company will lose out on much of margins out there, or spreads out there.
Let's also talk about what the dynamics of this merged entity would be like. What does this mean in terms of market presence? We're talking about Reliance, which has deep roots here as far as the Indian broadcast space is concerned. Disney, of course, brings with it the dynamics of the international market. What do we make of this merged entity in terms of its market presence?
So, apart from the monetary benefits of, as I said earlier, the synergies, by investing this 11,000, 12,000 odd crores, Reliance also kind of gets a foothold into the best practices that Disney has been following all across the world. Of course, this is with the India business that we're talking about, the JV that's being formed. But I think it also starts getting a lot of benefits in terms of a pipeline of, properties that Disney has, which could eventually be leveraged upon. So my sense is that this is going to catapult Reliance or the Reliance entities which are involved here into something which is of global, class and global standards. So best-in-class kind of product, best-in-class kind of properties and, offerings will start getting into the pipeline. So that's the big advantage that Reliance has through this, apart from all the monetary parts, as I said.
About the one question about the broader dynamics of the industry, this merged entity will have a presence both in the OTT market as well as in the conventional broadcast space, creating a unified brand with synergy. How do we interpret this new journey? Would you consider this perhaps the next leg of growth as far as conventional broadcast media is concerned?
Oh, absolutely, absolutely. I mean, there are very few illustrations of this kind of a advantage or synergies between OTT and the conventional broadcast area. And this brings both these together. So it kind of takes away the risk or vulnerability of a business which is dependent on either of the two. That's one. Secondly, you need to see it in context with, the FTTH rollout from Jio has been not very aggressive. But if they have content which comes through this JV in place, the FTTH will get bundled or will have bundled services along with it. So that becomes a very big advantage. I mean, if you were, as a consumer, if you were to see what you're getting when you avail of an FTTH connection from Jio and all of this comes along, there's going to be a very, very different kind of a synergy, which is difficult to replicate by anybody else. So from that footprint perspective, the dynamics will change dramatically. And that's why the CCI green light was very important, Ashwat, because it almost seemed like they would take away a big share of the market and a footprint which is significant. But I think this merger paves the way for that now.
Well, just for the benefit of our viewers, let's also point out that with this CCI approval coming in, it's a big step forward, as Mr. Diwan was pointing out. Also, bear in mind that the NCLT Mumbai has already granted its approval, so a big leg up as far as this $8.5 billion merger is concerned. Also coming in on this conversation is with us Mr. Raghunath S. He's a professor at IIM Bangalore. Mr. Raghunath, thank you so much for joining us. Same question that I put to Mr. Diwan to you as well. A combined entity with presence in both the OTT space and the conventional broadcast space. What does that mean for the broader market dynamics?
It is very good for the broader market dynamics for the simple reason that it ups the ante for all the players. And moreover, the unleashing of content and the decoupling of vertical integration, which has been the case ever since digitalization has crept into the media and entertainment space, has been given the kind of fillip that it should require. So I think going forward, it is great news, not just for consumers, but also for the kind of assets and technologies that will be deployed and the overall increase in consumption as well as quality.
Just a word as far as the Indian broader consumption story is concerned. We're looking at an increasing number of people going digital. There has been the fastest rollout of 5G. A lot of people going to their smart devices to access the latest in content. India, of course, has a huge appetite in terms of data consumption. Is this a space that this merged entity is ready and geared to benefit from that broader trend that we're seeing here in the Indian market?
Absolutely. Repurposing of content to devices and to technologies is the next big challenge for all the players. And when these two behemoths come together, obviously the efficiency and the effectiveness with which they will address some of these areas as technology changes and as access becomes ubiquitous, this is going to become a game changer going forward.
Let me also just ask you, this is a space that is dominated by big tech players. We're talking about the likes of Amazon Prime. We're talking about the likes of Netflix bringing in their wherewithal and presence and their dynamics across global geographies and bringing them here to India, into translating into opportunities. How tough of a competition will this combined entity be able to serve some of these more conventional rooted players, the likes of Amazon, Netflix?
I think today because digitalization has made everybody realize the fact that this is a market of one. What I mean is, it is a one-on-one stratified marketplace. Today, consumption has been so very personalized that it is the algorithm which continues to push for focus from consumers who have a certain preference. So what is going to happen in a very stratified market? The collection of content and the deployment of technology are going to make players either better or worse in this hyper-personalization game which is emerging. So I think this is a great play. This is a humongous library of content. There is technology muscle which is coming through because both these players are capable of delivering to the last mile in a manner in which the consumption becomes stratified as it will be, and people will get exactly what they want.
That's an interesting point, Mr. Raghunath, that you've raised with respect to customization and shaping content in a unique way for individual users. I'll come to that point in just a bit. But Mr. Diwan, let me take that question across to you. Just moments back, we were discussing about the synergies that this merged entity will have across the conventional broadcast space as well as the OTT players. The same question to you. There are very deeply rooted players, big tech players, Sony, Amazon, Netflix, who will be competing with this combined entity. Does this combined entity of Reliance and Disney perhaps have an edge, given that their presence in the broadcast space as well?
No, absolutely, Ashwin. So what this JV brings about, which is a differentiator as compared to the other players, is they don't just have technology of a very high-end contemporary usage, but it's also the distribution and the reach. Which a lot of the larger players that you mentioned probably are still to build. So what happens if you have the Disney content library, as Professor Raghunath also mentioned, which can help customization to a very different level. The reach that Reliance brings in the Indian market is phenomenal. So that's a combination that's going to be a big edge. Others might have to take much longer and invest much more into reaching that kind of a scale. So from that perspective, it's definitely a big advantage.
Let's also, in fact, bring in Mr. Gurmeet Chadda. He's the managing partner and CIO of Complete Circle, joining us now. Mr. Chadda, thank you so much for taking time out, for speaking to us. Big news, breaking news, the merger being granted the CCI nod, the NCLT nod is already in the pocket. Let's talk about the dynamics going forward. We were talking about how this merged entity, given the strengths that Reliance enjoys across a whole gamut of industries, will be able to add in terms of synergies to this combined entity. The question I want to ask you is, we're speaking of customized offerings for users. We already have the Jio as the single largest telecom service provider. Combined